Good morning and welcome. This is NDTV Profit. My name is Alex Matthew and you're watching All You Need to Know. Like the name suggests, over the course of the next half an hour or so, we'll tell you everything that you need to know so that you can start your day on the right note. Let's start with the headlines. Tata Sons is looking to sell 2.34 crore shares or 0.65% of Tata Consultancy Services, and that's one of two steps that it is taking to avoid the RBI's mandatory listing requirement. Exclusive details on NDTV Profit. The government unveils draft rules to exempt select combinations from CCI approval, also releases the draft de minimis rules to alleviate scrutiny on small companies under the Competition Act. Indian markets are range-bound at the start of the week. Benchmarks stage a recovery as metals emerge as top gainers. Tata Steel is up over 5%. US stocks rise on an AI-fueled rally as NVIDIA showcases new processor that's faster at handling models that run artificial intelligence. And the Bank of Japan is set to hike interest rates in a historic move that'll end its negative interest rate regime. Asian stocks begin mixed. Now let's get you a quick check of what's happening across the globe. US equity markets once again got a shot in the arm by the poster child of artificial intelligence technology as things stand right now, and that's NVIDIA. The company's chief executive officer, Jensen Huang, showcased new chips that are aimed at extending its dominance in AI computing. Now, all benchmarks closed in the green overnight, and the tech-heavy Nasdaq gained about 1% or thereabouts. Tesla was in focus as well. Futures, though, are edging lower ahead of the key rate decision later this week. In fact, Goldman Sachs and economists at Goldman Sachs have dialed back their expectations of rate cuts by the Fed to 3/4 point cuts instead of 4, and that is according to a Bloomberg report, and that is more or less bringing it on par with what the Fed themselves are indicating. Of course, that could change midweek. And finally, taking a look at the Asian markets, they've started mostly lower. In fact, you have the Hang Seng that's losing over 1% at this juncture, and Nikkei is down about 0.7%. Of course, Japan is one to watch this morning. There is anticipation that the Bank of Japan will hike interest rates in a historic move that will end the country's negative interest rate regime. Of course, if it doesn't happen this week, it might well happen next month. And that outcome will be announced around 8 a.m. this morning. And so that's one to watch out for. Let's talk about some of these developing stories in the Asia region. We're joined by Anurag Singh, who's managing partner at Ansid Capital. Anurag, thanks so much for taking the time this morning. Like we were saying, possible historic move by the Bank of Japan. 17 years is what it's taken for them to change the interest rate regime. They might well do that. And the other developing story is one in China. I'm not sure if you've read the headline, but seemingly Evergrande has been inflating its revenues, so that might just be a bit of a knockback for investments coming back to China. How are you reading all of these?
Yeah. Alex, good morning. Look, Bank of Japan decision is reasonably clear. And I think if we need to look at one parameter which forces Bank of Japan to think, that is wage inflation. If you look at last 40 years, right from kind of late 90s, early 90s, Bank of Japan's wage inflation has dropped from 4% to just about 2%. It has stayed at 2% for about last 40 years. Now it is back to 4%, right? So at least that number is telling us that the time to negative, time for a negative interest rate policy is kind of pretty much over. So I think the sooner they do, the better it is. That's the broad anticipation, Alex, on the Bank of Japan side. On China, Alex, look, we know, I think those stories are pretty well discussed out in the media. But if it is having a population decline, people spend in real estate mostly when they are in their 30s and 40s, and that population is declining. Obviously, if they have more houses built, then there are buyers there. The market is anyways going to slow down. In terms of numbers, my cardinal rule is that you can't trust any numbers coming out of China, and you can't take them on face value. So I wouldn't be surprised if that turns out to be true, because it's a very closed economy. They manage their numbers. pretty much from government to private sector, almost anything. So much so that and that's a bone of contention with SEC and the Chinese companies, which is that the companies are legally allowed to publish two different numbers. They published one set of numbers to Wall Street and very different set of numbers within China. Take that.
That's a fair point. But in that context, we're looking at the benchmark here in India, still trading above 22,000. We're just months away from elections and that election outcome. As somebody that's looking from outside in, how do you look at the Indian markets in the context of what you're seeing in Asia?
So, Alex, and I was a bit in the skeptical camp when the Nifty was somewhere around 15, 16,000, 17,000 last year. And I was reasonably bearish then. But then I think I underestimated the strength of the SIP flows and the, just kind of, they just, it just fails to, the flows just fail to defy, they defy gravity. They just, fail to be bogged down by any obstacle. And I think that's a big move which is happening in India. I would say fundamental level, Alex, I don't think we can give a reasonable justification to fundamentally justify any stock, any sector in India right now, right? Pretty much outside of banking space, large cap banks, I would say I cannot personally reason out that any justification is valid with respect to the financial parameters and the valuation methods that we have. But it is purely working on demand and supply. It's something like a Bombay real estate, that's the price. It may not be the bang for your buck, but that's the price, and you got to pay that. And I think it's pretty interesting to see how FIIs are broadly being driven out of the Indian market, and their holding is regularly kind of depleting from 22% to just about 17% now, and even falling now. And I think it's also evident that why some of the, take for instance, Whirlpool, I mean, the promoters are selling just because the valuation is too high. I don't think in the long term it's a good thing, Alex. I mean, it's fine, but I don't think it's doing any good to even the SIP investors themselves. That's a quick take, Alex.
That's an interesting point. All right, Anurag, I'll talk to you, soon when we see what the outcome of the elections are, and possibly before that as well. And let's see where the markets are headed. All right, let's get you a few of the more recent cues, or the nearer cues from the F&O space. And we've been range bound, in fact, both yesterday and in the recent past, and there has been consolidation, but we hold above 22,000 as we just pointed out. Agam is here to tell you about the key levels to look at. Agam, how do you take yesterday's move?
The consolidation continues, Alex, and there's been no change in trend as such, even in terms of the way addition or subtraction in open interest goes when it comes to the index futures. I'm going to start off with the Nifty, and as I've been mentioning, I've been talking about this over the last 10 to 12 hour sessions ever since the beginning of the March expiry, that there really hasn't been any participation as far as the index futures go, and that mark continues to be hovering around in between 250 to 260,000 in terms of Nifty futures, even as the spot remains flat. And it's the same for the Bank Nifty. In fact, the Bank Nifty over the past few days is where we started to see unwinding coming through. So at least as far as traders go, they're a bit hesitant, and perhaps they're also taking bets off the table at the moment. Well, moving on to the options market, we're keeping an eye on the Nifty. Yesterday, what we saw was further writing since we saw consolidation around the 22,000 mark. So further writing around the 22,000 calls as well as puts, as you can see here. And in terms of your overall open interest distribution, we are keeping an eye on a range that would also give you an idea about 22,500 on the higher end as far as the calls are concerned, and 22,000 put where you have max OI on the lower end. But since we are at 22,000, should we once again dip below that, you never know, we could in fact go perhaps an inch towards 21,800. That's where your near-term support lies, at least based on technical parameters. But moving on to the Fin Nifty, of course, once again, keeping an eye on 20,800, 20,900. That's where we're going to expect to see more of writing of calls as well as puts going into today's weekly expiry. As far as stocks are concerned, we're keeping an eye on Balrampur Chini and Zydus Life, which saw longs. shorts for Coforge, Apollo Tyres and Dr. Lal Patlab. And those stocks which saw unwinding included ITC and NNBC, which saw short covering, and long unwinding for Hindustan Copper, HDFC Bank and BPCL. Of course, not to mention, it'll be the Fin Nifty expiry, weekly options expiry, so a lot of banking for stocks will also be in focus.
Thanks so much for getting us those details, Agam. Let's turn to an NDTV Profit exclusive. Tata Sons is looking to raise as much as 9,300 crore through a sale of 0.65% stake in TCS. Vishwanath Nair is joining in to tell you more about that. Vishy, in the context of the overall stake in TCS, this is a really small amount of stake to sell. Why is this significant?
Right, Alex. So Tata Sons owns about 72.38% in TCS. So this is a significantly small amount of that stake in TCS. But primarily, this is being done to raise money to repay some of the debt that Tata Sons has on its portfolio. Remember, in 2017, it went from being a publicly held company to a private company. So some of that public debt is still lying on the books. This money will be used to clear that. This is in preparation to avoid a mandatory listing that the Reserve Bank of India has called for by September 2025, since Tata Sons was classified as a core investment company. And that became an issue for Tata Sons because obviously they do not want to go ahead and list. Alongside this fundraise that they're likely to do soon, they will also need to do some kind of corporate restructuring, transfer all the financial services companies within the Tata Group under a separate entity, which can then go ahead and list according to the RBI's norms. But Tata Sons therefore escapes that listing, and that's what we're picking up from our sources, and that's an NDTV Profit exclusive, Alex.
All right, thanks so much for getting us those details. And of course, we're going to be talking about this more over the course of the next hour or so before the start of trade, so do stay tuned for that. Another stake sale to bring to your notice. We've got two promoter entities of Aditya Birla Sun Life AMC that have offered to sell as much as in fact, 11%, close to 11.5% stake through an offer for sale. But let's get you more details on that, on the floor price, as well as why these entities are selling. Harsh is joining in to tell you just that. Harsh, what are you picking up? Morning.
Good morning, Alex. 7% is the stake sale, so that's one. Second is, out of this stake, we currently understand that Aditya Birla Capital holds 50% in Aditya Birla Sun Life. Sun Life AMC holds roughly 36% currently. You're seeing Aditya Birla Capital sell roughly 3% stake and Sun Life sell around 3.95% stake. This is, of course, the base OFS. Outside of this, there's an oversubscription option that the promoters have also left themselves open to. The oversubscription option will put another 4.5% stake onto the market. Now, just for context, 86.5% stake currently held by the promoters. The minimum public shareholding norms require that outside shareholders, outside of the promoter, hold public, which is the public shareholders, hold 25% stake. So this is being done to actually trim down promoter stake and align with those norms. Now, therefore, this will reduce the stake only to 79 odd %. That's why they've left another 4.5% on the table, which the promoters will take as an option if enough interest is shown. The floor price for this is roughly 450 rupees.
All right, thanks so much, Harsh, for getting us those details. Now, when you watch this program and several other programs on this platform, you look at me, but you don't see the people behind the scenes. It is, in fact, the birthday of the person who is responsible for running this show. So I'm going to take a very quick moment to wish Meghna a very happy birthday. It is now time for a very quick break. But before that, here's what Union Minister Piyush Goyal said on the role of startups towards India's $5 trillion economy goal. Listen in.
First of all, the $5 trillion is at our doorstep. Okay. We will be the world's third largest economy in Prime Minister Modi's third term, maybe in the next 3.5 years, when we will cross the $5 trillion GDP mark. Going forward, we expect to double the economy every year over the next 25-30 years and be at least a $30 trillion plus economy by 2047. That's the power that New India, that's the power that Young India is demonstrating here. We have over 1,500 odd startups who are displaying here. We have almost 5,000 future entrepreneurs, young men and women from colleges across the country who are coming to specially visit the Startup Mahakumbh. We have nearly 2,000 plus participants in the various seminars, conferences, which cover different sectors. And we have some delicious filter coffee if you would like.
Amul has completed 50 years in India. PM Modi will attend the Silver Jubilee celebrations of the Gujarat Cooperative Milk Marketing Federation, the owner of Amul. At one point of time or the other, we've all grown up with Amul butter or milk for sure. The famous Amul girl created in 1967 is family. We all recognize her. But as the brand grows 50 years old today, do you remember the full form of Amul? It is Anand Milk Union Limited. From producing 250 liters of milk per day since the time Amul was formed back in the mid-90s to today, where Amul has over 36 lakh dairy farmers and produces nearly 300 lakh liters of milk per day, the brand has had a long journey. The story goes way back in time. In the 1940s, dairy farmers were worried. The middlemen exploited their ways of profitable income, and a poor milk production system made their living difficult. Tribhuvan Das Patel and Verghese Kurian identified these issues and helped in the formation of the first milk union called Kaira District Cooperative Milk Producers Union in 1946. The cooperative model gave farmers direct ownership of the dairy industry. The union helped them process, market and sell milk and milk products without the interruption of intermediaries. And it was in 1955 that this union chose a brand name for itself called Amul.
Welcome back. You're watching All You Need to Know. It's time to focus on the key stocks to watch in trade today. And Varsha is joining in with the first list, which includes Paradeep Phosphates as well as IRCTC. Varsha, morning. What do you have for us?
Good morning, Alex. So let's start with Paradeep Phosphates, wherein company has shut down its ammonia and urea plants at Goa. Now this shutdown is due to breakdown of synthetic gas compressor. If you see, Paradeep has almost 2 manufacturing facilities, out of which the total capacity stands at 3 metric ton per annum, and Goa has 1.2 metric tons per annum capacity. Then we have IOL Chemicals, wherein company completes Brazilian Health Regulatory Agency GNP audit, wherein audit of all 10 manufacturing units at Barnala, Punjab, and ends without any observation. Now this marks an entry into Brazilian market. Lastly, we have Aegis Logistics, wherein company subsidiary Aegis Vogue Park Terminals approved acquisition of specialized storage terminals at Mangalore, wherein a proposed capacity addition will be almost 85,168 KL, and this acquired capacity to be operative immediately, and the additional capacity will be under construction, is expected to come on stream in phased manner by end of FY25, and this project to entail an investment of rupees 75 crore for acquired capacity and investment of 50 crore for additional capacity under construction. And lastly, we have IRCTC, wherein they've approved the total project cost of 187 crore plus towards procurement of ICT infrastructure, which includes hardware, software and networking and security systems. Now this is for setting up disaster recovery site at NGT system at data center at Secunderabad for a period of 5 years, and this include capex of almost 92 crore. So these are all stocks which should be watched out for today.
Got it. Thanks so much, Varsha, for getting us those details. Let's continue to look at stocks to watch. And L&T Finance and HG Infra are also on the list. Anushi's got more. Anushi, what are you picking up? Morning.
Hey, morning, Alex. So first on the list is L&T Finance Holdings. This is in focus after the board approved a fundraising through debentures over here. So it is to be noted that the fundraising will happen through non-convertible debentures, but the issue should not exceed the 1.01 lakh crore threshold. Next on the list is HG Infra Engineering. This is on the back of an order wherein the company has received about 4 letter of award for solar projects, which aggregates to about 1,026 crore. Now, do note that the company's order book at the end of December was 9,600 crore. So, with these, the aggregate plant capacity also stands at about 241.52 megawatts. Next is Poonawalla FinCorp, some key management rejig over here, wherein the company has appointed HDFC Bank veteran Arvind Kapil as its new MD and CEO. So this definitely remains in focus. And lastly on the list, we have Lemon Tree Hotels, which has signed a new hotel property in Tripura, and this is expected to open in FY of 27. So these are some of the key stocks that should remain in focus today.
Got it. All right. Thanks, Anushi, for getting us those details. Now, in a move that is likely to ease the burden of companies that are seeking to merge or acquire other companies, with respect to approval from the Competition Commission of India, the government has proposed exempting intra-group transactions and certain other such transactions from the watchdog's regulatory ambit. We've got Varun joining in to give you more details on this. Varun, morning. What are you picking up?
Yeah, hi Alex, good morning. So yeah, rightly said, the Ministry of Corporate Affairs has put out a draft criterion for exempting certain class of combinations such as acquisitions, mergers or amalgamations from the approval of the competition regulator. Now these draft rules enlist certain combinations that will be exempt due to the fact that these might not cause any competitive imbalance in the market and therefore a regulatory approval might not be necessary. Now, an acquisition of shares or voting rights as solely an investment by an acquirer, which does not entitle the acquirer for more than 25% or more of the total shares or voting rights in the company, will be exempted. Further, the acquisition will be treated solely as an investment, or otherwise an acquisition to be treated solely as an investment will only happen when the acquirer does not end up having a right to a representation on the board of directors or does not gain a right to access of commercially sensitive information pertaining to the company. Next, shares acquired in the ordinary course of business by an acquirer will also be exempt from regulatory approval under these draft rules. Now, ordinary course of business can mean different things for different people. For any normal investor or a stockbroker, any acquisition will be in the ordinary course of business if it does not entitle the acquirer to hold 25% or more voting rights in the company. For a registered mutual fund, this threshold will lie at about 10%. Now, next, an acquisition of additional shares of a company by an acquirer, wherein it already held, say for example, some percentages of shares in an enterprise. If that enterprise ends up...
Right. So thanks so much for telling us some of what has been discussed. And of course, there is more to that Varun was talking about. And you'll find that on the website, ndtvprofit.com. It should be a boost for some of these companies. But let's stay with the government's push for ease of doing business and two more important updates to talk about. Charu's joining in to tell us more about them. Charu, what can you tell us?
Good morning, Alex. So, as you said, there have been 3 draft rules that came from the government yesterday. One was spoken to about Varun, and the other 2 are CCI Green Channel rules and de minimis rules. Green Channel rules are basically rules which allow you to fill out a form, get the approval for certain business deals such as combinations without having to go through the formal process of getting an approval from the CCI, which saves time on part of both the company as well as the CCI, as both the scrutiny and compliance will get reduced. Now, this aims at basically facilitating the aims of business, furthermore reducing the load of the CCI as well. Apart from this, there is de minimis rules. These are basically increasing the threshold of the value of assets and turnover of companies for certain business transactions such as mergers, acquisitions, takeover, amalgamations. It says that if the value of assets is up to 450 crores or less than that, or if the value of turnover is 1250 crores or less than that, these companies will be considered de minimis and will not have to go through the compliance of the CCI for their business transactions. This is going to be applicable for 2 years only, and if only a specific part of the business is going to be, having a business deal like this with another specific part of another company, only the value of the assets and turnover of that specific part will be considered. Again, this also takes off a lot of load from CCI and reduces the amount of compliance companies will have to go through. That's all for now.
Right. Thanks, Charu, for getting us those details. Of course, a lot more to talk about, stock-related, of course, and in fact, we're just minutes away from hearing the outcome of the Bank of Japan's decision. It could be a landmark move. More on that in just a bit. Do stay tuned. This is NDTV Profit.
Hello. Good morning, ma'am. I'm speaking from XYZ company. Are you looking for a job or a job change? Have you been receiving unwanted calls from spam numbers? Are you tired of being offered new jobs, insurance schemes, or free health checkups? Well, today we will look at an interesting survey report by local circles on pesky calls that received 60,000 responses. Most unwanted calls are related to financial services, 54%, and real estate, 22%. In fact, the report has taken names. 40% mobile subscribers have identified Bajaj Finance as a top offender, HDFC Group as the second biggest pesky caller. The report reveals that 60% of people received 3 or more spam calls on an average day every day, and 92% of people registered on the Do Not Disturb list still get pesky calls. So is being listed on DND working? Clearly not. But the report also recorded a minute relief, as per which 6% people don't get any such phone calls. This relief comes after the TRAI directive to banks, insurance companies, and other commercial entities. TRAI is the Telecom Regulatory Authority of India. In fact, the Department of Consumer Affairs has constituted a committee comprising members of different regulatory authorities, telemarketing companies, and cellular industry to draft the guidelines to address the issue of pesky calls. So yes, pesky calls are still a worry, but there is a little relief too. Can you ignore them though? Toll-free numbers are identifiable, so institutions have found a new way. According to the report, calls from different mobile phone numbers that seem to belong to companies or brands have risen from 29% in February 2023 to 36% now. And look at the change in trend. Real estate selling has risen from 18% last year to 22% now. However, job offerings have decreased from 10% to 4%, and in the case of those selling financial services, the calls have slipped from 60% to 54%. So the bigger question is, will the nuisance of pesky calls end anytime soon? There should be a system where pesky callers are blacklisted at the Aadhaar level, so they have the risk of not getting a new SIM. Also, brands on whose behalf the contracted callers are calling also need to be held accountable by the Department of Consumer Affairs, so brands institute the right consumer outreach practices both with employees as well as third-party contractors. For more such updates, stay tuned to NDTV Profit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some...
Hello and welcome to India Market Open. It's Tuesday morning and it looks like it's going to be a negative start for the street, but we'll take you through everything you need to know as you get off a trade. Good morning, guys.
Couldn't think of a more busy 2-day or a 24-hour period. BOJ, FOMC, the works.
Please, it's the central banks worldwide keeping us busy, not local news flow for a change.
I don't know. I suspect that local flow will still dominate at least Indian markets as far as that's concerned. But having said that, global market mood has at least turned positive. yesterday. So you had a positive close, and Nvidia is the big story worldwide. I'm remembering the days when everyone used to wait for the Apple Steve Jobs presentation. Now it's all about the Nvidia CEO that everyone's watching right now. So let's quickly take you through what the global cues are this morning. US markets have snapped that selling streak, ended up. They've rebounded ahead of that Fed meet. The two-day Fed meet begins Tuesday, so tonight our time, and of course the outcome will be out on Thursday morning for us. So you've had a positive close there on the Dow, Nasdaq, and the S&P 500. Nvidia is the story of the day, story of the hour, because they've released a new chip that they've called the Blackwell. This is supposed to be the next generation chip and makes the standard one, which is already in great demand, seem like quite an old version of things. And you have the Nvidia CEO presenting that. The tech stocks also in focus because of a Bloomberg report that says Apple and Google are going to work together, and Google's AI Gemini is going to be used in iPhones. I just found that story fascinating. Yeah, about how, even competitors understand that they need to collaborate on something like AI. So both those stocks are in focus. But apart from all of that excitement, look at the bond. Yeah,
no, just one small, did you know, because even I didn't know obviously, but I looked at the tweet from Charlie Bilello, and it says that Apple has 6.3 times the revenue and 3.3 times the net income of Nvidia, but the market cap is just 1.2 times higher.
But who has the chip?
Yeah, I'm just saying it's been a crazy run for Nvidia.
It's crazy, and it's also telling you how the one who has the technology first can zoom ahead. It's fascinating times. Not so much for the 10-year. Where
fascinating times for the 10-year as well.
I think more concerned than anything else. So look at what's happening to the 10-year, inching up for about 4.38, 4.36. Yeah, 4.36% ahead of the Fed meet, and that is going to continue. Not great for the Brent prices and for crude either. So Iraq, Saudi Arabia both have said that they're going to go slow on production, on exports as well. They have to meet their OPEC plus targets. Russia oil supplies are also under concern. So you had the Brent closing in on even an 87 kind of a level. Asia is the other one to look out for. And just before we rolled on the show, we were talking about Bank of Japan and how important that would be or would not be. So we're waiting to hear from Bank of Japan whether they will raise rates this month or next. Will they, won't they, is the big question after 17 years. Asia stocks are not very positive thanks to that. Let's quickly look at the implied open and what the mood will be in India. And yeah, that's looking negative at this point, possibly about 79 points down. Quick look at fund flows before we get to the trade setup of the day and how the day really ended yesterday. So we are in this range-bound kind of a situation. You had, DII selling, FII selling 2,051 crores, DIIs 2,261 crores in purchases, but it has still been no clear direction, I would say.
100%. In fact, the only thing that stood out, and that's a part of the trade setup as well, the only thing that stood out the last 3-4 days is that this 21,900 has been tested now for 4 consecutive sessions. If you are thinking of the Nifty being on an uptrend, then it wouldn't go down to test those lows. So sadly, that is happening. If it gets broken, then who knows what happens, but until now, so 2 ways to look at it. Is the glass half full that it's testing and coming back, or is the glass half empty that it's constantly testing that? So that's the first piece. 4 consecutive sessions we've had 21,900 being tested. Now the max put OI is at 22,000. So does that become that crucial support for the day today? And if that gets taken out, do we swiftly move on to 21,900, 21,800? Now that remains the key point to monitor in the session today from a Nifty perspective. But as we know, the market is now shifted to beyond the Nifty. While we talk about the Nifty at large, the broader market's behaving a lot differently than what the Nifty does. So that's to keep in mind that the small caps did reasonably okay yesterday. And let's see if this week also they do a bit of a bounce back selectively relative to what they did last week. So I think that's the key focal point. Metals saw a whiff of hope yesterday, didn't they? I mean, with all that's happening in China. But most people that we spoke to a guest on the closing show yesterday as well. We spoke to Rakesh Arora a few days back as well. most people shying away from taking positional bets on metals. Yes, trading plays could happen intraday a couple of days, but positional trades on metals, preempting what China will do is something that is out of the equation. So be careful if you're making those positional long bets on metals, maybe fraught with a bit of risk because of the uncertainty around that. And I mean, frankly, everybody talking about how stock-specific bets more likely in the value zone, likely to be the order of the day. And we saw that yesterday, right? I mean, stocks like Anup Engineering, stocks like Divgi, a clutch of others which were in this heavy engineering space, providing value because of growth, had some massive moves in trade yesterday. So bet on value, don't try and bet on high-price stocks. That seems to be the mantra, at least as far as dealing rooms are concerned.
Makes the list very, very short.
Very short.
I mean, it's a handful of stocks that still look great and are not in the price. But you know, we were discussing that Indian markets are struggling at 21,900. Neeraj, if you look at it, there is really no positive trigger to go out and buy. In fact, when Siddharth Bhaiya had that conversation with you last week, the one conversation I had with him was, he said they're going out for a Far East specific fund. So my concern now is that anything that could potentially come into India is finding its way into markets like China. Better than expected growth, metals looking good, are factors, and of course, very, very cheap valuations make China now, I think, a strong competitor to potential inflows coming into India. And I think that is one reason why we're still not getting the piece of the pie as much as we're eyeing it. Or buying it.
I think that's also a factor of waiting for the elections to be over. That could also be one of the reasons. There is money waiting on the sidelines for this big event to get out of the way. That could be one factor.
Which is what Aditya Suresh of Macquarie said, that in their meetings with the FIIs, the FIIs are saying we want the formal tick mark to be out of the way. Correct. So we know that there is a likely policy continuity, but we want it to be formally done before we put in the money.
But if that was the case in the last couple of election times, the post-election rally hasn't been significant.
Very likely.
It's buying the news and selling the rally, or buying the rumors, selling the news.
Yeah.
And that's been the texture of worldwide markets across asset classes, right? One could argue.
But the only difference, and I don't have, I don't know any of us have the data of what the FI behavior was preceding those elections, but preceding these elections, FIs haven't been putting in the money by the droves. So maybe, just maybe, hopefully that changes.
I mean, what I am hearing is that, while we've talked about this since October, is that China is looking very, very compelling. So if you are vying for flows coming in on back of value, and remember, valuation has always been a concern for foreigners, right? We're not at our historical highs, but we're still not a cheap market by a mile. And that's, of course, DIIs have limited options in terms of buying what is available. You really don't have much of a choice beyond your home market. But for global investors, India, China is an outside and foreign market. So this is just one piece, which probably means that there's no big trigger at this point to help the markets go up. But nevertheless, 22,200 on the upside is also proving to be a quite level of resistance. While you've seen a little bit of recovery across the broader markets, they've still underperformed the benchmark in yesterday's day of trade. GIFT Nifty indicating to flat to lower start, so not too much fireworks expected. It's going to be the stock-specific trade, like Neeraj said, and rotational buying that the markets are currently witnessing that may continue into today's trade as well. Let's quickly highlight a few stocks that are in focus. OMCs will be in focus this morning. Remember, crude is inching higher again. Exports coming from Saudi and Iraq have reduced. There are early signs of an increase in demand. All that is keeping oil prices elevated. Not good news coming in for OMCs, which already are dealing with the fuel price cut that took place last week. So these counters, once again, could be on the sell tab for a lot of traders. Apart from that, Tata's group companies haven't stopped grabbing our attention for the last couple of weeks. And this morning, too, it's no different. It is TCS that's in focus. Not too much in terms of a stock reaction. Of course, you will get a gap down in the early hours of trade, but the story here is that Tata Sons is looking to sell 2.3 crore shares at the price of 4,001 rupees a share, while a block deal in TCS, they're looking to raise close to 9,000 odd crores. This amount that is going to be raised will be used to par debt that Tata Sons has on its books. Remember, the Tata Group stocks have been in focus in March after there was a note which Spark Capital sparked about a possible listing of Tata Sons by September 2025, as it will complete 3 years of being notified as an upper layer NBFC by the RBI. So all these things that Tata Sons is doing is actually part of the course to avoid that listing and not to remain an upper layer NBFC that would be required to be listed by the regulator. Tata Steel is well in focus. This one is good news in some ways. They are looking to stop operations of coke ovens at Port Talbot in Wales. After there's been a deterioration of operational stability, they will increase their import of coke to offset the impact of coke plant closures. Now remember, this is part of their restructuring plan. This plant of theirs in Wales has been losing £1 million daily is what they've indicated, and that could also lead to a further £600 million loss. So all part of restructuring. They're moving to better and more efficient green energy, and hence this could be another big positive because they finally pulled the plug on this plant and are in talks with unions in the UK to ease the situation there. Well, this is a statutory requirement coming from Aditya Birla Sun Life AMC, where the promoters are looking to reduce their stake. This would be done through an OFS. The floor price of this comes in at a discount. Remember, the promoters cannot hold over 25% in the entity, on back of which you will see this. The stock will react negatively, but again, a regulatory requirement, so not too much in terms of a reason for that reaction. So those are the three big ones. In that sense, Tata, of course, grabbing highlights this morning.
Yeah, most certainly. And you know, just thinking that if this is coming out, then do the resultant beneficiaries like Tata Chemicals, etc. also
still gain again?
No, come down today, right? Yeah. Because if the Tata Sons IPO is getting postponed,
it was. I think we're done with that. 40% gain, 25% correction. I think the market has moved on.
My question is, will they sell in other group stocks as well, or is it only Tata Steel? Is this just the beginning of a larger picture?
So I did discuss that with Vishin. I think he's going to talk about that. But they hold stake in 700 companies. It's going to be a tough one to go out there.
Also, the quantum of money that they need to pare.
And we don't know how much debt they have on the books.
At least I don't know. Yeah, but I'm just watching out for Tata Chem. Let's see if there is a resultant impact. Very quickly, a couple of stocks that I wanted to highlight before Tamanna brings in. You know, we're talking about what IT is doing, etc. and stuff like that. And while TCS is saying what it is doing, Citi has this note wherein they have had a conversation with the Emphasis CFO. And the Emphasis CFO is saying, this one line is crucial, the Emphasis CFO is saying that there is no change in the demand environment since the start of the quarter. So much as we're talking about whether there are conversations or demand picking up, the Emphasis CFO is saying there is no change in the demand environment. They're saying that growth in quarter four will be likely better beyond the benefit of the reversal from the furloughs, of course, led by BFS, but no change per se. Margins will remain in the guided range. So thus far, there's no reason to be extremely bullish on tech, thinking that demand environment is changing. It is not.
Not until the elections are the way in the US too.
Maybe, or the rates. Yeah. So you may be right, but I'm just saying that as of now, there's no evidence. So any kind of upticks in IT, Pied Piper stories, part one. Part two, Poonawalla FinCorp is very interesting development out here for multiple reasons. One, HDFC Bank veteran Arvind Kapil, new MD CEO, great for Poonawalla FinCorp, right? Good face coming in, etc. and stuff like that. Is it a big negative for HDFC Bank? That's the question. So Jeffries is saying that the development is tad negative for HDFC Bank as well as Bajaj Finance, because Poonawalla FinCorp, according to them, is one of the closest competitors to Bajaj Finance. And if they are getting a veteran, then it may impact Bajaj Finance as well. So it could be interesting. They are also eyeing, watching out for any exits from Kotak. So that was the other interesting bit. I don't know why, but
no, so the thing with the HDFC personnel who's coming, Kapil, he was heading their entire retail play, which is so he's an important cog in the wheel. Big dependence on him, and there's more HDFC notes out today, which we will get to. But that's definitely.
So Nomura is saying that they are not too worried because HDFC Bank has depth, and also it's one opinion versus the other. But it is very interesting for Poonawalla FinCorp per se, and also for the allied places like Bajaj Finance and some others.
You know, talking about HDFC Bank, and this is what I've been hearing, and I think we talked about this as well. The second rung management at HDFC Bank is going through a massive churn. So the head of private banking had recently moved on to corporate. There were churns from the NRI team that have moved to private. So if you look at it, I mean, all of course we hear about is the top level changes, but the management, the bank itself is going through a serious rejig at level 2,
That's
which is really the guys who get stuff done,
That's
right?
interesting. Yeah, those are the cogs in the wheel.
Yeah, just very quickly, sorry, just before Tamanna goes it, and the last set of stocks, just we should keep an eye out for. Coforge yesterday was very interesting, the price movement. So just the price volume action that we've seen. Coforge was down 7% because of this block deal, QIP, and whether there is some M&A activity out there, that's the rumor mill on the street. 3.5 times their delivery volumes. But the others, 3 small names, very interesting price volume action on your screen. Hindware Home, 9.5% higher on 9 times 1 month average delivery volumes. Spark and Network 18, which went up 4%. On 15 times the delivery volumes. So very interesting mid-size small cap names in focus today.
Yeah. So just since we're talking about financials, L&T Finance was another one that I wanted to put on your radar. Their board approved a fundraise via a non-convertible debentures yesterday. And the upper cap that they've set is quite an astonishing one of 1 lakh crore rupees. So one way to look at it also is how, all of these players are padding up for a big war within that financial space with the competition heating up. So L&T Finance is one I'd watch out for. HG Infra is the other one. There has been more news coming in recently about order flows, but as such, relative in the infra space, the stock has not performed too well. In a year, up about 16%. In a month, in 6 months, down about 7%. But the latest is that they have got a clutch of orders, 4 LOAs actually for solar projects from Stockwell Solar Services, and the aggregate value is about 1,026. So if you look at it versus their order book of 9,600 odd crores, so not too bad. So HG Infra is the other one. JSW Steel I found interesting because the company has issued a clarification that they did not make political contributions to the JDS, that's the Janata Dal Secular, in electoral bonds. And this is going to be one overhang on the market as well. You saw yesterday Biocon's chief come out and explain that she donated in her personal capacity. Now JSW Steel is saying that we did not contribute to JDS via electoral bonds. The JDS data with the Election Commission said they did. Now was it as a company, was it not JSW Steel, remains to be seen. But I just want to also put out this one quote when Kiran Mazumdar-Shaw spoke with us exclusively, in fact, and it reflects the kind of concern that corporates have over this whole electoral bond situation. It's going to peak on Thursday because now the Supreme Court has directed that SBI should put out the alphanumeric details which would allow anyone to match donor to recipient from the political parties. And she says we should not give up on electoral bonds as conceptually it was aimed to bring in white money into election funding. We need electoral bonds version 2 that strikes the right balance of confidentiality and disclosure. So this might be an overhang that you could see in the market as well.
It is. Electoral bonds are leaving us anytime soon from the look of it. But very quickly, 2 listings. You've got Shipping Corporation of India Land and Assets. It's the demerged non-core entity of State-run Shipping Corporation of India. It will be debuting on the exchanges. It is only for trade-to-trade segment. No buy today, sell tomorrow trades would be allowed. This one's important to watch out for the stock. In fact, SCI was one of your big gainers in yesterday's trade on back of this listing. The other thing you want to keep in mind is that this was part of the government's initiative to disinvest a chunk of those non-core assets. Well, as per the Shipping Corporation's 2023 report, the value of these non-core assets stood at 2,392 crores. So this one is important. It'll be exciting to see how SCI, whether it continues a positive up move on back of that today as well. You've also got Popular Vehicles and Services. They will be debuting on the exchanges at 10 a.m. The final price has been fixed at 295 rupees a share. There's not too much of a premium on this one, the grey market this morning, Tamanna.
I'm feeling bad for those who are debuting now.
I know, right?
It just 4 or 5 months ago.
This is just luck.
It's just changed.
It's like you're lucky if you list flat.
Yeah, if you made it. Just a couple of stocks before I go over to Alex and Editor's cut. Signature Global is one you may want to keep on your radar. They've completed an acquisition of 100% stake in the Gurugram Karma City Private. It's now a wholly owned subsidiary effective today. Real estate has been taking a bit of a knock. So Signature Global is one you could see. I picked Veritas because I just found this whole concept of this project they've got very interesting. They've, got an LOA from BMC for 156 crores. And what they're going to make is a 3D model of Mumbai city, which the BMC is going to use to make decisions of how to run this city. And I just thought that was pretty cool. So which is why. Page Industry is another one because there was another brokerage house which initiated a buy rating on it today. Citi has a sell rating today and says the demand environment will remain subdued. The new customer acquisition in men's innerwear also remained subdued. So this company which owns the Jockey brand may see some concerns. Well, so a lot that we've spoken about already, but we have to focus on the story this morning, which is definitely an interesting one. What are these moves that Tata Sons is making and what is the reason?
Well, thanks so much, Tamanna, for that. And this is, by the way, Editor's Cut. This is where we get you beyond the story. And so we will delve into the exclusive details of what Vishwanath Nair, my colleague, has picked up with regard to this entire Tata Sons saga, if we can call it that. But if you are unfamiliar with what has happened so far, Vishwi will also be able to contextualize it to tell you why Tata Sons is possibly doing what it's doing. So let's start, Vishy, with what the latest update is, which is that there is a stake sale that is being talked about for TCS. How much and why?
So what we understand is that 2.34 crore shares worth 4,000 rupees each. That's the sale price that they've decided, which is a slight discount to where the stock closed on Monday, about 3.6% discount. That adds up to about 9,300 odd crore. And that 2.3 crore shares, they represent about 0.65% stake in TCS. Tata Sons on their own 72.4 odd percent.
So not a material
not a material part of their holding. Why is this happening? That's an interesting question. So this money that is raised is likely going to be used to repay some of the debt that is there on Tata Sons' book. Why is that important? See, Tata Sons went from a publicly held company to a privately held company in 2017. This was after N. Chandrasekaran took over as chairman of the company, of the group holding company. The Reserve Bank of India's new guidelines on NBFCs and how NBFCs are treated in this country, they suggest that Tata Sons, which is a CIC, a core investment company, which holds multiple financial services business under it, will need to list by September 2025. Those are the rules. Now, September 2022, they release a list. Say 3 years later, you have to list. Obviously, Tata Sons went, only in 2017, went from public to private. So there is no reason why Tata Sons wants to list now. And what they're trying to find are ways to avoid this.
And they went private, correct me if I'm wrong, because of the change to the leadership by N. Chandra.
Exactly. This case was discussed widely in courts. But at the end of the day, they do not want to list. They are not interested in it. N. Chandrasekaran has gone to the Reserve Bank to seek some kind of exemptions. The RBI said that they don't want to really give any kind of exemptions to Tata Sons because that will send out the wrong message. What they are doing now is two things. One is this clearing of debt, and the second part is to restructure the company internally. What we understand from sources is that likely step that is going to take place is that the group is going to restructure internally to move all the financial services businesses into another entity, which is separate from Tata Sons. And maybe according to RBI rules, they can go ahead and list.
So, but two questions then. Why is the debt on the books of Tata Sons significant in terms of the rules? What in the rules requires Tata Sons to remove the debt on its books to avoid listing?
So, public financing. Basically, one of the main reasons why RBI acts a certain way is to protect public money that is linked to corporate entities, right? And because here there are financial services entities, therefore RBI comes in with NBFC norms. If once you clear that debt, then any linkage to public finances with Tata Sons, that goes away completely. Then they're their own entity with their own funds, and whatever they earn through dividends from their various holding companies, that continues as is.
And then the second question, of course, is what you've spoken about in recent days as well, which is the creation of a holding company for the financial services entities. But how will that ownership structure look? Is it okay for Tata Sons to be an owner of the holding company, which in turn owns financial services company?
So from what we know so far, yes, that structure is kosher according to what the RBI looks at, how they look at financial services businesses. So the holding company is the one that will actually need to list, not the owner of the holding company. They're exempt from any kind of listing. I mean, so far that's what's been continuing with every other financial services entity. That's how it works.
So, and just for the complete closure of this conversation, what are the entities that will then form a separate structure?
There's a bunch of financial services companies within the Tata Group. There's Tata Capital, Tata Motors Finance. You've got the life insurance business with AIG. So mutual fund, of course, all of these entities form part of the financial services business of the Tata Group, and all of these will need to then move out of Tata Sons.
So quite a lot of restructuring for the Tata Group as a whole. And let's not forget that Tata Motors as well is undertaking a bit of a restructuring of its business to streamline its passenger vehicle as well as commercial vehicle business. Not related to this, but important to pay attention to nonetheless. Vishy, thanks so much for laying that out. And by the way, if you've got any questions about this, do write to us on our social media platforms and stay tuned. Lots more coming up before the start of trade. This is NDTV Profit.
Amul has completed 50 years in India. PM Modi will attend the Silver Jubilee celebrations of the Gujarat Cooperative Milk Marketing Federation, the owner of Amul. At one point of time or the other, we've all grown up with Amul butter or milk for sure. The famous Amul girl created in 1967 is family. We all recognize her. But as the brand grows 50 years old today, do you remember the full form of Amul? It is Anand Milk Union Limited. From producing 250 liters of milk per day since the time Amul was formed back in the mid-90s to today, where Amul has over 36 lakh dairy farmers and produces nearly 300 lakh liters of milk per day, the brand has had a long journey. The story goes way back in time. In the 1940s, dairy farmers were worried. The middlemen exploited their ways of profitable income, and a poor milk production system made their living difficult. Tribhuvan Das Patel and Verghese Kurian identified these issues and helped in the formation of the first milk union called Kaira District Cooperative Milk Producers Union in 1946. The cooperative model gave farmers direct ownership of the dairy industry. The union helped them process, market and sell milk and milk products without the interruption of intermediaries. And it was in 1955 that this union chose a brand name for itself called Amul, which means priceless in Sanskrit. And then, in 1973, Amul Dairy, along with 16 other district cooperatives, formed the Gujarat Cooperative Milk Marketing Federation, which has now completed 50 years in India. Amul also started India's white revolution that made our country the world's biggest maker of milk and milk products. The brand follows an umbrella marketing technique which has helped GCMMF prevent association clashes and keep an open door for the patrons to coordinate and create.
Welcome back to India Market Open. Let's start with the top headlines that we're tracking this morning. Tata Sons looks to sell 2.34 crore shares or 0.65% stake in TCS. That's one of the two steps it is taking to avoid the RBI's mandatory listing requirement. US stocks rise on an AI-fueled rally as investors digest news from NVIDIA's AI conference. Two-day FOMC meet kicks off today. Goldman Sachs economists have dialed back expectations of rate cuts by the Fed to 3/4 point cuts instead of 4 for the year. And Aditya Birla AMC promoters, Aditya Birla Capital and Sun Life AMC will offer nearly 11.5% stake through the OFS route. And the government unveils draft rules to exempt select combinations from CCI approval, also releases a draft the minimis MIS rules to elevate scrutiny on small companies under the Competitions Act. Well, those are the top headlines we were tracking at 8:30 a.m. this morning. Implied Nifty indicating to a marginally negative start. No surprises there on back of mixed global cues and the fact that there is a lack of direction coming in for the street. Agam standing by as always with the F&O picture. Agam, morning, 21,900 important on the downside and 22,200 turning out to be quite a resistance for the street.
It certainly is. It certainly is. We are looking at 20,000 at the moment, and the Nifty, it seems it's been taking support there, but you never know how things can, in fact, move. And it's been a tough market to trade, and that's very evident in the kind of numbers that we've seen, or rather the lack of change in open interest that we've seen in the March series so far. For the 10th straight session, the overall open interest number for the March futures continues to be, well, between 250,000 to 260,000 odd in terms of OI. The Bank Nifty futures, the picture isn't very different, underlying flat and, well, more unwinding coming through, this time the tune of nearly 5.5% to 6% coming in. What about your overall options picture? Well, considering the Nifty, well, stayed at around 20,000 to rather 22,000. That's exactly where we saw a little bit more of writing in both calls as well as puts. So keep this mark, keep this level in your mind when you in fact go ahead and trade. Of course, in terms of your overall picture with respect to the maximum open interest, we're keeping an eye on, well, 22,500 on the higher end. That's where your call max OI is, and on the lower end you have 22,000 again with max OI and puts. Moving on to the Fin Nifty expiry is currently, which is at around 20,600, 20,700 odd levels. Those are the levels that we will be watching out for as far as the Fin Nifty is concerned. And finally, coming down to stocks. Again, it was a mixed day of trade. We are looking at longs for Balram Puccini and Zydus Life. Of course, Coforge, Apollo Tyres and Dr. Lal Pathlabs did see some shorts coming in. And among stocks which saw unwinding, longs unwinding for Hindustan Copper, HDFC Bank and BPCL, and short covering for ITC and NMDC. This is as far as the markets are concerned. The question really is, what do you do with these markets? Where do you go from here? And how do you address the Nifty, Bank Nifty, and, well, several other stocks? Let's get an expert opinion. We have Ajit Rambia of Ajira Ventures who's joining us on the show right now. Ajit, good morning. Thank you so much for joining in. Let's start, as usual, with your view on the Nifty and the Bank Nifty. What's the way forward here?
Yeah, good morning, Agam. Thanks for having me on the show. Considering recent market trends, we have witnessed a decent correction. So we expect a subdued market movement, particularly in the small and mid-cap sectors, until March end. So, however, we do anticipate a bullish run in April. So the flow is like we have had a downtrend. We will continue the downtrend up to March end, and then we'll have a bull run. We strongly feel healthcare and insurance sector will outperform post-elections. Speaking about the indices, in Nifty, the recent bottom of 21,900 is seen to be a good support, and we face a resistance at around 22,150 levels. And in Bank Nifty, the recent bottom of 46,100 will act as a good support, and the resistance is placed at 46,850 levels.
Okay, right. So let's move on and talk about stocks, and I believe that you have an idea on Ambuja Cements. Can you take us through that?
Yeah, so we have a bearish view on this counter. It has been showing some weakness. So we initiate a bear put spread where we buy a 580 March put at 8.65 rupees and sell a 550 March put at 2.05 rupees. So the cost of this strategy is 6.60 rupees and the profit is around 30 rupees.
Okay, so a bear put strategy and expecting Ambuja Cement to go lower, and which is why this is implementing this one. Ajit, I believe you also have a view on Canara Bank. Can you take us through that?
Yeah, so Canara Bank has been a trending counter. So for the past 6 months, company has declared a stock split in the ratio of 1:5. Our view stays bullish on this counter, so we can initiate a bull call spread where we buy one Canara Bank March 560 call at 10.20 rupees and sell one Canbank March 600 crore at 1 rupees 95 paise. The cost of the strategy remains at 8 rupees 25 paise only, and the profit to be earned is around 40 rupees.
Okay, so there you have it. That's the other one which can be in focus. Of course, we are in very, very volatile markets, and even though it may look like we are seeing consolidation, don't forget that we have, in fact, seen a lot of choppiness within on an intraday basis, and that in fact has also changed the complexion of the market. Of course, as we approach the elections as well, we are also looking at an ever so slight increase in the India Volatility Index, and of course that is a consequence of the change in the the structure for option premiums. But on that note, Ajit, we're taking a moment to thank you for joining us and taking us through your views on the markets and giving us a handful of ideas. And with that, it's over to you, Samina.
Right, thanks Agam for that. That is the F&O picture this morning. It looks like it's going to be a quiet start. Don't expect too much in terms of fireworks. Lacking direction for now. That's what we have in terms of the street activity. Well, we're also, remember, awaiting Bank of Japan's rate decision. There is some parts of the market that believe that this could be the end of the negative rate cycle for Japan, one of the last countries to actually continue with one in their fight for deflation. So a rate hike there is something that the markets are watching out for. But let's shift focus back home again. A quick check on what stocks the Street will be tracking today. Anushi joins in with more on that. Anushi, what do you have on your list this morning?
Hey, morning Samina. So first on the list is Aditya Birla Sun Life. Over here the founders are considering an OFS that is offer for sale of up to 7% now at a floor price set of about 450 per share. Now over here the founders are also considering an additional stake sale of about 4.47%, so that also remains on the watch list. Again, the founders currently hold about 86.5% stake in the company, so this is in the view to ensure that they are in the minimum shareholding requirements agreement. Again, onto the other holders of the company, the FIIs hold about 1.75% stake in the companies, while DIIs and retail hold about 5.2 and 6.6% stake. Moving on to Aegis Logistics over here, this is in focus after the company's unit has approved acquisition of a specialized storage terminal at its Mangalore plant, with a proposed capacity addition of up to 85,000 kiloliters. Again, this entails a project investment of about 75 crore, and another 50 crore also remains in focus for additional capacity under construction. The mode of financing for this should be through the internal accruals of the company. And lastly on the list is Lemon Tree Hotels, which is in focus after the company has signed a new hotel property in Tripura. This property is expected to become operational in FY27, and this is to be managed by Carnation Hotels Private Management. So these are the three stocks that should definitely be on radar for today.
All right, thank you for that, Anushi. So, quite a few stocks on the radar this morning. Let me go across to Soni Patnaik, who's joining us now. She's AVP at JM Financial Services. Soni, very good morning to you. We've had, a consistent range-bound trade in the markets. What is your outlook for Nifty and Bank Nifty this morning?
Hey, good morning. Thank you so much for having me on the show. See, Nifty, I feel that, it has resumed a range of 21,950, 900 as a support, and on the upside, there's 22,150, 22,200 as a resistance. It looks weak. The FI's positioning have been reducing gradually. They started out with 46% out longs, and now they've just come down to 37% longs, which is indicating that the shorts are increasing in the system. So it can indicate that maybe the support of 21,900 may break. Any close below the support, Nifty can head down lower levels to 21,500, 21,400. So it's a bit better to maintain a cautious approach when it comes to indices. It's it's looking a bit weak right now. The open interest option chain is also indicating that some shorts are getting written on higher side of the call, such as 22,100 call, 22,200 call options. So remain hedged. Cautious approach can help better. If 21,900 were to break, you can see some more selling pressure coming in for Nifty.
Yeah, absolutely. We are going to see perhaps some selling pressure coming in for Nifty, says Soni Patnaik. Soni, anything on top of your list this morning? Any picks that you have for our viewers?
Yes, definitely. So the first would be in Apollo Hospital. Apollo Hospital, we've seen a sizable correction that has taken place of late. It was consolidating and, took the support somewhere around 59, 56,000 as a good support. It's just bouncing back now. We've seen very strong short covering yesterday, backed by good put writing at 6,000 put options. So Apollo Hospital is a buy from current levels. You can see it heading higher towards 6,300, 6,350 as well. Keep a stop loss of 6,040. To hedge this strategy, you can also do a bear put spread in Nifty. It can be done for the 21st March expiry for Nifty. You can buy a put option of 21,900 put option in the range of 50 to 55 and sell a 21,700 put option in the range of 15 to 20. So your net premium outflow for this strategy is approx 35 points. Keeping a target of 70 to 80 points in combined premium can be a target.
Okay. Sony, thanks for those ideas and thanks for that bear put strategy as well. So viewers, if you are indeed into options and puts and calls, you've gotten 3 strategies today already. Watch out for those. Now let's talk about the fundamentals for a bit. Hemang Johnson with his thoughts. Hemang, good having you as always. Thanks for taking the time out. I want to start off, Hemang, with the big one, right? While IT becomes the signature of most eyes at the first port of call because there is quality there, we're seeing it unable to perform. Just when there was a whiff of an uptick, now comes the Tata Sons sale of TCS and that brings down technically the stocks a bit more. But there is a Citi note which says that CFO is saying there's no change in the demand environment. What do you do with IT1 and what's the specific view on TCS?
Sure, thanks for having me. I think when we look at the hard data, if you see last 1 year, IT stocks have done more or less in line with the index. Some cases, particularly mid-cap stocks, have done even better. So while the entire limelight is hogged by the small caps and the mid caps and the PSUs over last 6 months or 1 year, the fact of the matter is that IT has not done so badly. That's number one. Number two, now that we have reached these levels in terms of stock prices, IT index, etc., what are the triggers that one can really look for? When you look at the quarterly numbers or how the situation in terms of tech spend is panning out in US. So clearly things are not that clear. People are not sounding so confident about what kind of growth they can deliver, particularly the typical IT services company. Of course, the AI and the ecosystem around that and the niche category has its own story. But at an aggregate level, I would say that IT is going to be at best a market performer. I don't see it really surprising you with earnings, growth, etc. And when you have a huge supply, like what we are seeing right now, about 9,000 crore by Tata Sons, clearly, it's going to have a bit of a negative impact because at the fund level, what happens is that when you want to buy, because you think that the price is attractive, 3.5% discount, you have to sell some of the other IT names, and which is why we saw that selling across, some other pockets. Overall, I think it's time to kind of stay away from IT in the near term. And if it corrects meaningfully, surely it will present great opportunities.
Hemang, just wanted your take specifically on the Tata Sons news last evening to, the block deal that we're expecting today. And I just want to understand that in the perspective of the whole IPO rush that we had about Tata Sons listing, and then a set of stories which said that they are going to try and avoid it. Do you see this move in that context, and what further kind of moves can we expect from Tata Sons to avoid a possible listing?
So see, this entire thing that unfolded about some report having saying that there is going to be an IPO because there is a deadline. I think the timing of that report was, a little mischievous to my mind, because absolutely there was no indication about when the IPO will happen. There was nothing from the Tata Sons side. It was just a sort of, opportunity that somebody saw to roll out a report and create excitement in the market. If you look at Tata Sons' history, time and again, they have been extremely clear that they are not looking to do IPO and they will possibly do all that they can to avoid, IPO, because these are all, very private kind of companies, and they will want to keep it that way. So I do not think there is a reason for anybody to believe that the IPO is imminent. And we think that whatever is a regulatory requirement, or whatever, let's say if they need funds for some of their other activities, they will keep on diluting some of these stakes to simplify the structure. So I don't think that by itself is going to have any material impact on the stock of the company, because there is enough and more appetite for a company like TCS.
Now the question is if they will look at further stake sales in any of the group companies. But meanwhile, Soni, keen to know your take on TCS on the charts.
We've seen the entire sector, perform sort of under selling pressure, and TCS, as I can see, there's quite a lot of resistance around 40 to 50, 40 to 60 as a range in charts. On the downside, 4,000 is going to be that support level. So maybe there could just be some more selling pressure left in this stock, and until it can test 4,000, there could not be any signs of reversal or bottoming out from here right now. So maybe there's some selling pressure. Just look out for the support of 4,000. If it's not able to break 4,000, it can see some bounce back coming from those levels. But as of now, it's an avoid from the list.
Right. Soni, a couple of other names that were quite active in trade yesterday from the broader markets were stocks like Coforge and Macrotech. One on the gaining side and one on the losing side. Any trading opportunities there on the charts? How do these two look?
Like Coforge, very weak. I feel that 5,600, 5,500 should be that support that it can look forward to. As of now, there are no signs of reversal. It has added very aggressive shorts even in yesterday's fall. So maybe there could be more pressure left until and unless it tests 5,600, 5,500. On the upside, only when it is able to cross 6,000 and above, you can see some reversal coming in, but that seems a bit far-fetched as of now. Talking about Macrotech, the stock has seen a good reversal from 990,000 odd levels. It's about to test 1,200 as well. I think the stock can still show a lot of strength, momentum. As of for today, 1,080 can be the support to watch out for. If it's able to hold the level, definitely it can test higher levels of 1,200.
Hemang, do you have a word on Macrotech? I mean, it's been anything but quite the start until, of course, the QIP. There's M&A activities, what we've heard about recently. The sector itself is on a little bit on the sell side. Anything that you know on Macrotech that you can tell us? And of course, what should investors do if they're looking to pick this one up?
Recently, the company successfully did the QIP, and generally on the fundamental side, or if you look at the data points, things are looking quite good. My only concern with the real estate sector is that the stocks have really run up hard, and valuation wise, I don't find them really very attractive. And so most of the good news that you're seeing in terms of the new projects, the new sales, etc., is to a great extent pricing. I would not be comfortable buying into some of these names at this point. If there's a 10-15% kind of a correction, surely Mactech or Godrej Property and some of the banking-based companies, Brigade, Prestige, this will present opportunities, but I do think that there is a case for some correction, at least in the short run.
Okay. Some correction in the short run for some of these names. Keep an eye out for these. Now, more stocks to focus on. Anushi highlighted a few. Let's get in Varsha to talk about some of the other key stocks to watch in this session. Varsha.
Good morning, guys. So, a couple of stocks that one should watch out in trade today, starting with Paradeep Phosphates, wherein a company has shut down its ammonia and urea plants at Goa. Now, this is due to breakdown of synthesis gas compressor. Now, if you see, Paradeep has two manufacturing facilities having total capacity of 3 metric ton per annum, out of which Goa capacity stands at almost 1.2 MTPA. Then we have IOL Chemicals and Pharmaceuticals, wherein company completes Brazilian Health Regulatory Agency GMP audit, wherein audit of all 10 API manufacturing units at Barnala, Punjab, and without any observation. Now, this marks entry into Brazilian market. Note that this inspection was conducted at company's manufacturing units from 11th March to 15th March. Lastly, we have IRCTC, wherein they've approved the total project cost of 187 crore plus towards procurement of ICT infrastructure, which includes hardware, software and security system. Now this is for setting up disaster recovery site at data center at Secunderabad for 5 years, wherein this includes capex of 92 crores as well. So these are the stocks that one should watch out for today.
Right. Thank you, Varsha. That's a whole list of stocks that one needs to watch out for in today's day of trade. Some of them are slightly smaller, but nevertheless important in terms of stock movement. Well, in that case, we're all watching out for what Bank of Japan comes out with. There is an expectation, remember, that announcement from the BOJ should be out anytime soon. Asian markets trading flat to slightly lower. Well, Sony, have you been tracking HAL?
Yes, of course. I think the stock has resumed a sort of a sideways trend, 32 or 3,300 on the upside, which is quite a strong resistance. And on the downside, 3,000 was a strong support. So I think any break below that 3,000 level, any close below that level, you can see, more downside, more selling pressure somewhere towards 2,800. So that's a very important support to watch out for. On the upside, 3,300 is a resistance. This is quite a broad range. Or move above 3,300, you can see it resuming its further upside towards 3,450, 3,500 as well.
All right. Another story that we should keep an eye on, or a stock that we should keep an eye on this morning, is HDFC Bank. And we spoke about it in our trade setup as well. Let me get Hemang's view on this. So a Nomura note right now out this morning, which maintains a neutral rating on HDFC Bank with a target price of 16.25. The trigger, and there's a Jefferies note also, the trigger seems to be Arvind Kapil, their mortgage business head, moving out to Poonawalla FinCorp. And that entire space with key management moves heating up. What's the impact on Kotak? What's the impact on BAF is the question, Bajaj Finance. I just want to get Hemang Jani's view here on HDFC and Poonawalla FinCorp, if any.
Yeah, so HDFC Bank, I think we've seen some pullback in the last few days. Part of that was because of the FTSE rebalancing and the kind of inflows that were there. I think fundamentally in the analyst meet also, company was sounding quite confident about getting back to slightly better margin territory. Growth-wise also, things should look up. Only thing is that because it has been a stark underperformer, people will start believing once they see the actual data, in the quarterly numbers. So when the stock price moves above a certain level, from a pure fundamental perspective, we have positive view on some of the private banks, particularly, something like HDFC Bank, Axis Bank, and ICICI Bank. All three we have a positive view. And we would definitely look at buying into it while we are going through this volatility in the market. So surely overweight position there.
Right. Sony, have you been tracking Tata Steel? The stock did a pretty sharp up move in trade yesterday. It was up 4%. Fundamentally as well, there's news flow that they are looking to shut down one of their coke plants in Wales, and that's being viewed as a positive. So maybe a further leg up on Tata Steel, and if yes, if we get a flat to slightly higher start, would you initiate maybe a long for the day, intraday trade there?
I think it's best to avoid any longs in this particular stock. The sole reason being that, irrespective of yesterday's up move, a very aggressive call writing has been witnessed at 152 call option. So not a lot of upside from current levels. The support actually comes out to be 140, 142. So the risk reward is not even favorable at current price. 152 remains a very strong resistance. If it's not able to cross that or close above it, you may not see further upside in Tata Steel. Any close above 152, you can see retesting 160, then again 165, 170 can also be on cards, but it looks quite difficult. There's a lot of call writers still present at 152 call option. It's just best to, if somebody would have initiated it yesterday's trade, then it's just wise to book out your profits, and today 150, 151 around, book out your profits and hold. It's a stock that you can look forward to buying on dips rather, somewhere around 140, 135 be that range where you can buy it on dips.
Okay. What else? Just before you take that break, when you look at the set of stocks which could make a move, so aside of the IT ones and the Poonawalla FinCorp piece that we've spoken about, yesterday was some very strong moves that we saw, for example, in select pharma names, and pharma stocks have just started to make that inch higher in select cases. Yesterday was a case in point was Spark. Sun Pharma Advanced Research had a big move in trade yesterday on very good delivery volumes, and it will be interesting to see if some of these stand out in the days to come. Hemang, everybody's talking about buying value. Maybe pharma fits in there, maybe chemicals fit in there. Do these pockets excite you? And if not, what is it that you would be comfortable putting in fresh money to work at the current juncture?
Pharma in the space has done reasonably well when you look at the large cap pharma companies like Sun, Dr. Reddy, even Lupin has been a big performer in the last, let's say, about 6 to 8 months. So I think both from the news perspective, in terms of quarterly numbers, standpoint, the sector is doing well. You will have some stability come through because most of the managements are sounding quite positive when it comes to both India as well as the US generic, market outlook for next year. So I am comfortable buying into some of these large cap names. In mid cap, we do like Granules, which is corrected, in fact, from 360, 365 odd levels, 320, a meaningful correction of almost about 10-15% has happened. So surely pharma will be one sector where, this year, 24-25, it will be one of the better performing sectors in terms of growth. And in terms of valuation, it's not out of whack. I think at an aggregate level, we are getting the large cap companies at 22, 24 kind of a forward PE. Mid caps are 15-20% cheaper. So positive view on the pharma overall.
Okay. And Sony, just wondering, any of the pharma stocks that have stood out for you in the last few days?
Absolutely, Neeraj. It'll be Zydus Life. I think Zydus Life is in a very continuous uptrend. It's showing a lot of strength, remaining above 900, 920, which is a very strong support for medium term. You can look forward to the stock, testing 1,050, 1,100 odd levels in the medium term as well. So any chance for a buy on dips, maybe around 960, 950 would be that ideal zone to just reinitiate the longs, keep a stop loss at 900 and look for targets of 1,050 to 1,100.
Okay. Well, we need to slip into a break, but Hemang, Jani, take a moment to thank you for joining in today and giving us your thoughts. Really appreciate your time this morning. Sony, stay on. Lots more to talk to you about. We'll take a quick break, be back with the pre-open session.
Hello and welcome to NDTV Profit. Today we will talk about tattoos and the worth of this market. The history of tattoos in India can be traced back to prehistoric times when tribal people were captivated by drawings on stone or wood walls. Their attempt to replicate these figures through needles gave birth to the practice of inking skin. Over the course of time, tattoos were embraced by tribals as a mark of bravery, war, religious beliefs, customs, marital status, protection from the male gaze, and so on and so forth. Today, in 2024, tattoos have become a means to express thoughts, individuality, personal experiences, and sentimental designs. The industry is estimated to generate over 20,000 crore rupees per year. What is driving this growth? One of the key drivers behind the growth of the tattoo market is the rising demand for customized and unique designs. Improved technological equipment for making advanced, safer, and painless tattoos have boosted the market. The laser technology for removal or modification of tattoos have also
All right, just a couple of minutes left for the pre-open session. And now, it's difficult to decide what kind of a move to make when there is so much data expected and so many triggers expected. Look at what's happening in the next 2 to 3 days. Just in terms of what an investor would be looking at, Bank of Japan is going to possibly for the first time in 17 years exit a negative interest rate regime. Will the Fed give any indication of when the rate cut cycle will start? Is it going to be postponed even further because of hotter than expected inflation in the US? Back home, Thursday is a day when you will have even more data and enough data points to link corporate donors with electoral bond recipients. So which party got what? Anyway, you have that election overhang all over. So what are the stocks that you look at in a market like this? Soni Patnaik is joining us for more on that from GM Financial Services. Soni, before the break, we were talking about Poonawalla FinCorp, HDFC. There are a bunch of notes today talking about the private bank space as well. Whether it is a Macquarie note, whether it's a Kotak, whether it's an Axis. I just want to understand from you whether any of this is looking attractive to you right now, and what would you say about a Poonawalla FinCorp in particular?
Like if we talk about the private banks, they have by and large quite underperformed in comparison to the PSU banks, and they've not yet shown that leadership skills, just to help Bank Nifty take across the worldwide. So I think from all the entire stock or entire thing, I think ICICI Bank and HDFC Bank are still the two stocks which are looking decent when it comes to technical and derivatives data. Talking about HDFC Bank, irrespective of all the recent news and recent impacts that we have seen, the stock has formed a range of 1420 on the downside, which is a very good support, 1460, 1480 as a resistance. I think this is the range it has gotten to. Any break above 1480, you can see the stock heading towards 1550 also. I think the stock has corrected enough. I think that phase is over. So any small dip that you can see in HDFC Bank towards 1420 should be a good opportunity to just re-enter, initiate your longs, look for the targets of 1550. So it may take a month or 2 months for the stock to particularly reach that level. And talking about ICICI Bank, I think ICICI Bank has also held on to very strong supports of 1000. Any declines towards the support should be a very strong reinitiation point for longs. Stock has the strength to test 1200. It may be a short to medium term sort of a play for the stock. So, just look forward to buying on the decline. So I think both these stocks can outperform when it comes to the private sector bank.
Right. We also have it. Right. Go on, Soni.
So if we can look at right, so Poonawalla FinCorp, there's just a resistance of 490. If the stock can go above 490, then you can see further upside towards 520 plus levels.
So 490, if that gets taken out 520 on Poonawalla FinCorp, the stock is expected to see a good start. Well, pre-open is also what we're eyeing right now. It's going to be an average opening for the markets, no fireworks, flat start. 22,000 for now, and I wouldn't be surprised if 21,900 gets retested in today's day of trade as well. Well, we have with us Rahul Arora as well, CEO of Nirmal Bang, joining us to talk about the markets. Hi Rahul, good morning. Thanks for joining in. Rahul, before we go into conversations around Tata Sons and sector-specific conversations as well, give me a sense of what you're making of the markets. Of course, the big event is the elections. But more importantly, historically, at least we've seen buy the rumor, sell the news. Now, really, there's not too much of a rumor in this case or a guessing game in terms of what the outcome is. But it feels like the markets are lacking any sort of trigger at this stage. Do you agree? What is the next big event that could help the markets one way or the other?
Good morning, Samina, and thank you for having me on the show. So I think it's the correction that you've seen in the market has been long overdue and most welcome. I think whatever the reasons may have been, everyone acknowledged and knew that there were excesses getting created in the market. And while there hasn't been a very material correction, whatever pullbacks you've seen in stocks, 15, 20, 25% is certainly welcome because it has come after a time when stocks have gone up in multiples. As you rightly said, immediately there are no triggers to pull the market in either direction. I think all eyes will probably be on the IT earnings, which will probably start around the 10th or 11th of April. it'll give us a sense into how clients in the United States are thinking about the rest of the calendar year. And I think that's very important because you remember, Samina, the one call that everyone got wrong in the last calendar year was the US recession. I don't think anyone anticipated the strength of the US economy and the way it panned out. But obviously, as the year wears on, there is talk about interest rate cuts, both in the United States as well as in India. And that's going to be positive from an equity market standpoint. But I think in the immediate future, say between now and the earnings, I think it's probably going to be a little lackluster with a downward bias. But I'd still say if you're a slightly long-term investor, if you have a 2, 3, 4-year horizon, it's still a good time to be buying in. I think, none of us are experts in when to time a stock. If you feel your price has come or close to where it is, you can start averaging on the way down. But I don't think in the immediate month or two, you're going to be expecting a tearaway rally or anything of that sort. I think it's probably going to be consolidating, and that's probably best for the market, I think, at this point.
Agree. It's a price or time correction, and the time correction is much needed right now, Rahul. We were discussing this early this morning, and I wanted your perspective on it. There is conversations around where a lot of investors outside, of course, are talking about the fact that China is now, China has looked attractive for a very long time, but the macros haven't been too supportive. Valuations surely have. Things may be just may be coming together for China right now. Do you think the next couple of months, the next couple of quarters, China could give us a stiff competition in terms of, drawing foreign inflows into the equity markets, not the bond market, of course?
So I think, Samina, the one phrase you've probably got tired of hearing is that the entire world is moving on a wave of liquidity. So I think liquidity is not owned by any one country or any one asset class. Obviously, if China on its base can show you a growth that is similar or higher to, say, a lot of other emerging markets, why not? I think it's been out of flavor for a while, as you said. And every now and then, I think you see data points or you hear data points from China which believe they'll probably come out of the woods. And, as a corollary trade in India, you start seeing the metal sector do well, or you'll start seeing, companies that have exposure to China like Tata Motors, etc., doing well. But it's too big a behemoth, right? And I think if you look at the United States and we keep talking about the GDP there, I think if the US is growing at, 3-4% annualized or even 2.5-3% annualized on that base, it's not a bad number. I mean, India was projected to be growing at 6.5% not too long back till we had the stellar GDP numbers that came out not too long back. So I think it's a definite competitive threat in terms of capital flows just by virtue of its underperformance and the flows it's seen out. A lot of global investors do look at China very closely. And let's not forget, Samina, when you talk about global funds, in the last decade or so, I don't think you've seen any India dedicated fund from global investors open up. We're still part of Asia emerging funds or global emerging funds. So I think the way flows can move within those are very, very quick. So I wouldn't write them off. But like I said, it's worth keeping an eye on because there is a trade in India to be made as far as China recovery is concerned. And, in sectors like autos and metals. And you probably wouldn't want to lose out on that once you start seeing positive data points from there. So keep an eye out, I'd say.
All right, some big news coming in globally. The Bank of Japan has set its policy rate in the range between 0 to 0.1%. So the first time after 17 years, Japan is exiting the negative interest rate regime. Let's pull up dollar yen as well. So this is actually a big story breaking right now. They've scrapped their policy to control deflation. They've gone between 0 to 0.1% as a policy rate. They were the last nation in this world actually to exit that negative interest rate regime. Rahul, we've got you just at the right time today. BOG has scrapped the yield curve control and has tweaked asset purchases as well. We're waiting for all of those details to trickle in. It was expected perhaps to happen in April. It's happening in March in this policy. We want to understand what the impact is going to be, not just for Asian markets overall and Japanese markets, of course, but from the Indian perspective too.
No, so I think, Tamana, this is actually a good thing. And I think, the good part is that if Japan has inflation, and it's been a market that has been so silent and dead for such a long time right now that if you actually are starting to see positive signs of inflation, it's actually not a bad thing. It means that, there are parts of the Japanese economy that are doing well. Now, whether this is commodity related or consumption related, I'm not exactly sure. But it'll be interesting to see how the dollar yen pans out. I think from a carry trade perspective and, what it could mean from a dollar parity perspective. But I think in India, I think the one thing that stood out from an external sector standpoint is that and I think that's probably helped the government from a fiscal deficit standpoint as well, has been that the rupee has been stable around 83. I mean, so much has happened, right? You've had two wars, you've had interest rates go to where they are, and yet you've had the rupee being at around 83 and crude has been stable around 75, 80. So I think at the margin, I don't see this having a direct impact on the currency at all. I think we'll probably be stable where we are. But I think India's external sector today is far better than a lot of our other peers, both from developed as well as developing economies. But yeah, I mean, if I'm sitting in Japan and looking at these numbers, and if it's consumption driven, I don't necessarily think it's a bad thing because it's an aging population. And if you're getting a positive take on interest rates and they're anticipating inflation, it may not be the worst thing.
All right. I just want to understand from terms of fund flows to emerging markets, including India, do you see any impact over there at all, Rahul?
Well, obviously, if Japan is going to start offering you positive interest rates, you might see some money going there, right? I think the money always chases where interest rates are higher. And you saw that in the early phase of when the United States was raising rates as well. You did see some amount of outflows that went out from India into the United States, because once the carry on the interest rates becomes narrower, you're probably safer in playing developed markets than you are in playing developing markets. So I think from that perspective, going back to your earlier point about China, I think the one that Samina raised, at the margin, I think this could potentially create another avenue of competition for capital, but I don't know how substantial it will be because the interest rate is just about 0.1%. But can it at the margin help in global flows going there? For sure it can.
Rahul, Neeraj here, good morning. Just the implications of what it does to maybe borrowing costs as well, not just for Japanese companies, but for companies which do the yen borrowing as well. Is there a large India implication here?
It all depends on how much you borrowed in terms of Japanese denominated bonds, Neeraj. I think, you can think of one large auto component company in India that has a very large Japanese presence. There are one or two conglomerates that have raised a lot of money from, central banks, from private banks in Japan. So I think all of this was to bring down the weighted average cost of borrowing that they had. We have seen similar cycles when ECBs were being raised when interest rates were very low in the European Union as well. But it all depends on the quantum. I mean, if I have $100 million loan, for example, from any of the Japanese banks, and I see my interest rate going up by 0.1%, but if it's not going to affect my cash flows in a very major way here, if I'm a very profitable company, I don't think at the margin it's going to make that much difference. But yeah, obviously the interest costs will go up to that extent. But I don't think Indian companies, the listed ones to my memory, have had such large borrowings from Japanese companies that this would move the interest rate very materially for them, and that their cash flows won't be able to fund it. There are 3 or 4 companies that come to mind, and I wouldn't want to enlist them. I'm sure you know which ones I'm alluding to. But I think a 0.1% for the kind of cash flows that those companies enjoy, I don't think is going to dent their P&L in a very material way.
See, was one that closed a large yen bond deal and raised 3,500 crores in early Jan. But I'm guessing all of this comes in with, those contracts are watertight, Rahul, to say the least. But yeah, it'd be interesting from a carry trade angle. The dollar yen is, of course, having quite a move in trade as we see it. The currency markets have also opened up. So it'd be interesting to see how those cross-currency pairs actually play out. I think the dealing room, Neeraj Tamana, is going to be a good space to be in this morning in the currency dealing room.
But I wonder if the Nikkei is showing that spike.
Pressure.
Just get the Nikkei up on the screen, because it could be, while at times they're 0.36%. So nothing dramatic there on the Nikkei thus far. Let's just wait and watch.
You have seen the pressure coming in last few sessions already, because this was being anticipated as well, that there would be, an increase. But
there's a triple prong moves: rates, YCC, and purchases of risky assets. We don't have the details as yet, but that could actually mean a decent rise for the Japanese market. I think these rates are stuck. Let's just move out from the Nikkei thing. But it could be very interesting to see what the Nikkei does today on the back of this thing, and whether that has a resultant impact on some of the other Asian markets in the session today.
Yeah, absolutely.
We've settled as well, by the way, the pre-open session.
The pre-open rates have settled. Let's just pull that up quickly before we get your top brokerage notes of the day. Yeah, I mean, pre-open rates are settled, but you are looking like you're in for a weak start. There's no doubt about that, at least initially. All right, Macquarie says investor mood has become cautious on Indian financials. Harsh is joining in for more. Yes, Harsh.
Well, Tamanna, I'm going to try to keep this quick. Macquarie actually met 40-odd investors in their financial roadshows. They seem to be cautious with regard to Indian financials. HDFC Bank, they believe, still has value, but investors still not confident. Still some amount of headwind to go before it starts to re-rate. Shriram Finance, though, is largely the consensus overweight for investors. PSUs is something investors are looking favorably at a time when you're seeing pretty much a lot of headwind on the deposit side of things and liquidity side of things. With regard to fintech, no interest currently in Paytm, at least till the dust settles. PB Fintech valuations look stretched according to Macquarie, and investors believe that re-rating has already played out. HDFC Life, they believe there is a challenge with regard to growth, largely on the back of the fact that HDFC Bank is focusing more on garnering deposits. SBI Life is the preferred pick among insurers, and SBI Cards is a consensus sell given multiple headwinds that are playing out in that space. Now, with regard to the larger trade, they are looking at long PSU banks, selling private banks currently, and the Macquarie view is that in FY25 growth will be the largest casualty. That's largely the Macquarie view.
Okay, Harsh, thanks so much for that. Sony, will come to your stock recommendation after this, after the market open, because just 15 seconds left for the markets to kickstart trade. We'll keep BOJ on hold for the next 3-4 minutes until we mark the markets, Indian markets, and then come back. Remember, TCS has started off negatively, so we'll have a start somewhere down here for Tata Consultancy Services. Let's look at what some of the others are doing. So this is, of course, the Nifty 50, 1/3% in the red, I believe led by Nifty IT. Let's bring up Nifty IT, possibly amongst the big casualties today, 1% lower. Are banks participating? Quickly bring up the banks and then the heat map. And no, banks aren't participating, so banks are okay. Nifty IT is dragging the markets lower. This is the heat map. TCS down the order. Metals, after a rally yesterday, just pausing a little bit, but it is essentially IT and essentially TCS, 2.7% lower. BPCL is still down. Some losses for a Wipro, Bajaj Finserv, SBI Life, Bharti Airtel, but nothing too untoward. It's effectively TCS on the losing side, and not too many gainers. The top gainer is ONGC, followed by Adani Enterprises. Both of them are down, or both of them are up less than 1%. That just shows you that the only talking point in the market at the start, while we are down about 0.5%, is what's happening to Nifty IT and TCS in particular. Though I must say, metals are also participating, or commodities are, because Tata Steel, Coal India, Reliance, all of them are down. So the culprits are Reliance and TCS, which are dragging the markets lower. Down about 90 points on open. Tamanna.
Yeah, TCS, because of also what Tata Sons has valued it lower than what their buyback costs were, so 2.5% down. But we're going to be focusing on what's happening in the broader end of the markets and some particular stocks there. In fact, let's see if we can pull up, yes, the Nifty mid-cap. Not too bad compared to the Nifty. Let's pull up the small cap index as well. So a bit of weakness there. Specific stocks that we're talking about this morning, and of course, while TCS remains top of mind from an Indian market perspective and from the Nifty perspective, I just want to pull up Poonawalla FinCorp as well. That's a counter that we've been talking about since the trade set up in the smaller space. So that's 2.5% up, nearly 3% up, and that's all management change. They have an MD and CEO, a new one, who has moved from HDFC Bank, was heading their mortgage business, Arvind Kapil, and that is looking as positive for Poonawalla FinCorp. Balkrishna Industries is the other one that I have on my radar. They have been under pressure for IT raids, and a clarification now coming from them that those raids have ended. Completely flat there. JSW Energy is the other one. They have clarified on their bond purchases, electoral bond purchases, saying that they have not given any to JDS. Nevertheless, 1% down on that counter. L&T Finance had okayed, their board has okayed raising money through NCDs up to 1 lakh crore rupees. That's the overall upper limit that counter about 1.5% up. Just Paytm once again, because the way this stock keeps going up despite all the broader headwinds is interesting. 1.5% up this morning in trade on Paytm. So those are some of the stocks that I'm spotting, but I think the morning's all about TCS, Samina.
It is. TCS is your biggest loser on the street. In fact, worth noting is when TCS had conducted the buyback, it was at 4,150 rupees. Tata Sons clearly valuing it at a much lower price. So the stock is under pressure on back of that bulk deal. Well, you want to also, Neeraj mentioned that stocks like Tata Chemicals may see some further selling in today's day of trade, as now it seems almost conclusive that the Tata Sons listing is out of the way. Flat, no major reaction on Tata Chemicals just yet. A few other stocks that are moving in today's day of trade that are worth mentioning. Tamina has, of course, mentioned the likes of Poonawalla FinCorp, but that is seeing very big volumes also in trade. So it looks exciting in that sense on Poonawalla FinCorp. Up 2.5% is what we have. Piramal Pharma is turning out to be a top gainer with a 5.5% rally this morning. And again, it's gaining on healthy volumes as we see it. You've got 197, once again up in trade, 2.5% up move, yet not on an upper circuit there. You've got Adani Energy Solutions doing well. They sold off a little bit in trade yesterday, so recoup those losses from yesterday and added some more this morning. 2.5% on Adani Energy is what we have. Well, you've got solar industries looking good. In fact, the whole Adani pack is trading with a very clear positive bias with gains anywhere in the range of 2 to 3%. Adani Total is also up 2%. Adani Enterprise in the large cap space and ports were doing well, but Energy and Total both trading with a gain of 2%. Some of your metal names are doing well. Pull up REC. Let's see what's happening with that stock. We were talking about how with an increase in interest rates in Japan, that 3,500 crore bond that they raised in those Japanese markets could be impacted, but no impact. REC actually trading flat to slightly higher in early trade. Cochin Shipyard is up about 1.5%. Shipping Corporation of India, let's pull that one up because they are subsidiary, or in fact, the Shipping Corporation of India Land and Investments is set to debut on the street today. The stock was up 5% on SCI in trade yesterday. Today, of course, doing okay. Gensol is up 5%. Anup Engineering is seeing a 4% up move. These were smaller stocks that were on the radar this morning on back of stocks and news. Gensol seeing a 5% up move. You've also got a move coming in on Rate Gain, which is up 2% in trade. Lemon Tree is also trading with a gain of 1%. PNB Housing, some of the other counters that are looking good. On the sell side, it's another down day. Tata Investment Corp seeing another 5% cut. So it's down about 25% now in the last 5 days. Relentless selling and downward circuit on Tata Investment. TCS is the other one, which we've already talked about extensively. But largely speaking, Neeraj, Tamanna, no major trend emerging. It's largely stock specific. Yeah. But this Tata investment is something I personally can't get my head around. It kept going up a circuit and now
overvalued so badly that about time that this happened. But
have they reversed all the gains?
No, they've given up only 25% yet. They were up about 285%.
So some ways to go. Some ways to go.
Long way to go.
Yeah, but just a quick detour because we got a guest on this BOJ decision. So a quick view from Anuj Gupta. He's head of commodity and currency at HDFC Securities. Joins us right now for his quick perspective. Anuj, good having you. Thanks for joining it. Good morning. What do you believe are the implications of the BOJ move?
See, after the 17 years, they increased interest rate from minus 0.1% to 0%. So basically, they ended this yield curve to control the policy, and I think this is a positive impact on the Bank of Japan. So possibly, the interest rate will put some pressure on other currency. Might be, you can say, we are expecting some depreciation in USD INR. Possibly, we are expecting the rupee may depreciate a little bit towards the 83 levels.
Sorry, did I hear you say you believe the rupee would kind of settle at the 83 levels to the dollar?
Yeah, definitely, because when the Japanese yen is strength, I think possibly rupee may depreciate, and rupee expecting to depreciate further. However, dollar index is trading around a 103 levels. And dollar index is also waiting from the Fed policy, which comes tomorrow. So possibly market may be very volatile in terms of the currency segment, and possibly due to this expecting some little bit depreciation in rupee. However, recently we saw appreciation in rupee in last 15 days. But now market is awaiting also for the federal bank policy. Possibly due to this, we'll see some volatility in the rupee. However, yesterday we saw some depreciation in rupee. Possibly expecting a depreciation in USD INR, and it may test 83 to 83.10 levels.
Anuj, I want to talk to you specifically about the dollar yen, because I know with the yen borrowing that happens, a number of corporates in India either go out and hedge their exposure in terms of their ECB, or you also have structures that are long dated in nature with knock-ins and knockouts. Considerably lesser now than it used to be a decade ago. But where were positions as of yesterday on the dollar yen on the cross-currency side with a lot of the banks and corporates? And also secondly, what will this now do for hedging cost?
I think now the hedging cost will increase because earlier interest rate was in minus, and right now interest rate are at 0. So possibly the corporates who are hedging the position, possibly the little bit, it will be costlier to the hedgers who are hedging with the dollar yen because right now the interest rate are 0, and actually Bank of Japan is now yielding curve their policy. And this will impact on the the hedger side, and this will be costed to the corporates.
Thank you so much, Anuj Gupta, the head of commodity and currency, talking about what the impact is going to be. Let's pull up the Nikkei very quickly, and there you are seeing sell-off deepening as the BOJ makes this historical move. We will, of course, through the day break down implications, etc. But let's just shift focus back to the markets shortly after open, where you are seeing weakness persist. The Nifty almost 0.5% down now. Rahul Arora and Soni Patnaik still with us. Rahul, I want to come to you on what you think the trend is going to be in the run-up to election season. You're going to have about 2.5 months. Where polls are going to dominate. Do you think that this is a factor at all that markets are going to be looking at, investors are going to be looking at, or are most market participants sitting pretty, having concluded that there is going to be policy continuity post the 4th of June?
No, so I think cash levels would have definitely gone up, especially with the kind of directives that have been coming out of late. I think if you looked at pre this correction, I think mutual funds on average were sitting at about 3% on cash. So I think those levels might have gone up. But I think from a market perspective, I think, if you're looking 5 years out, if you assume the current establishment was to take office again, I think it's going to be a very economically friendly market condition. And if nothing goes wrong globally, I don't see why the market on average can't compound about 15% CAGR over the next 5 years. That doesn't mean you'll get 15% every year. You may have a down year, 1 year, but you probably make it up another year. So I think if you're taking that call, and I think the way the Prime Minister has been thinking, it's going to be manufacturing led. And when I say manufacturing, I don't necessarily mean defense. I think there are so many other aspects to manufacturing that are not represented in the index today, but might find their way in some way, shape or form. Whether you talk about hydrogen, green energy, semiconductors, alternates, there's just so much happening out there. So my sense is that it's going to be very manufacturing driven, and we need to find the right kind of companies to invest in. On physical infrastructure, even though the finance minister announced that, at an aggregate level, there's probably a step back, sorry, because they want private sector to come in. But even then, I think with the kind of focus that's going to be there from private and public sector on infrastructure, cement could be one very good play to be making. So, and, we were discussing China a little earlier. If the Chinese economy comes back on track and global demand is all right, and the dumping and the destocking from China stops, chemicals could make a comeback as well. So there are pockets of the market where value is there and emerging. And you also have to probably try and see which themes are emerging over the next 3, 4, 5 years, which may not be very obvious to the naked eye today, but may find, you could potentially find very decent multi-baggers in those if you're able to find the right stocks, listed or unlisted today.
So cement, chemicals will be interesting spaces. Rahul, I also want to get your view on, I think, the stock of the morning, which is TCS. That big stake sale or the big block deal has happened this morning with Tata Sons offloading, some of its shares. The stock about nearly 3% down. The fact that the price at which Tata Sons is offloading is lower than even their own buyback, maybe a negative sentiment. How would you look at a TCS right now and the space?
So I think, Tamanna, when you look at the frontline IT companies in India and say frontline FMCG companies in India, these are very mature businesses, right? I mean, if you look at, say, a Lever or things like that, I don't think these are companies that are going to consistently give you 10% top line compounded. I think those days are well and truly gone. I think the pivot point for both IT and mature consumer companies remains about 5%. I think in bad years, that growth probably tends down to 1 to 2%. In good years, you probably get 7 to 8%. I think the big lever that a lot of IT companies are going to leverage on is going to be margins, utilization, and how they can optimize whatever third party or subcontracting costs that they have. Rupee depreciation is just one aspect to it. That's not why you would buy a company. But I think something like a TCS gives you a free cash flow yield, and that this is true for the IT companies as well. It gives you a dividend yield. It offers you buybacks from time to time. So in an uncertain environment, it becomes a kind of hedge. Like how you say gold is a hedge against inflation and investors buy gold. IT in some ways could be a hedge in an uncertain market environment. Add to that, if the market gets it wrong again about the US recession this year, this could actually land up being a sector that outperforms. Actually, Tamanna, if you go back and plot the last 10 years, in terms of returns, the IT sector has outperformed any sector in India. I don't know how many people know that. It's actually given you more returns than even in the banking sector by about 1.5 times. So I think it's a very safe sector to be invested in.
But here's Rahul, sorry, but here's my question. You always spoken about, right? Past performance will not be an indicator of future performance. So, and Sony, will come to you after this. Please stay on. But just one quick follow-up, Rahul, to you. Since past performance is not be a factor of future performance, and since CEO after CEO is coming out and saying there's no change in demand environment, what's the need of putting money to work right now in IT?
No, so that's the call, Neeraj. I'm not saying that we have to put in IT. I'm just saying that, if you get into a situation where you see the markets consolidating or going down, this could be a good defensive bet to play. We at our brokerage house have a sell on all the IT stocks, barring Tech Mahindra. And I think the reason we have a buy on Tech Mahindra is because the margins are so depressed, Neeraj. I think they're about 5-6%. My IT analyst Girish's view is that margin would probably head to 12-13%. So the earnings growth in Tech Mahindra could potentially be the high. So that's a very company specific thing. But like I was saying a little earlier, do you want to be paying 20 times, 25 times for a company that's giving you mid-single digit growth? That's a question you need to ask, and you need to ask that question in FMCG as well. I mean, it's a sector I've looked at very closely. Do you need to be paying 40 times multiples for companies that are giving you 1-3% kind of volume growth? So I think these are saturated businesses. They are good defensive bets, but when you're looking to make money in an aggressive market, I don't necessarily see these sectors playing out as outperformers. They have good free cash flow and dividend yield, like I was saying earlier. They give you buyback options, so shareholder return options are there. But in absolute terms, I'm not sure, the kind of money that you can make, because it's been such a rank outperformer in the past.
Right. Thank you, Rahul. Great talking to you today. We'll hopefully connect soon and get more perspective from you. Sony, sorry, we had kept you waiting a while with everything that was breaking news in every sense. Very quickly, your first reaction on today's opening, and if you've spotted a trading opportunity for our viewers.
I think yes, Tamanna. So if you look at Nifty still hovering around its support of 21,900, not much to read into that until and unless it's not breaking below 21,900. There could not be any chances of further sell down. So I think just wait for those levels. And in terms of any trade, the morning trade can be looked at for PI Industries, looking quite strong. Yesterday, it has given a very strong breakout on intraday charts. Even today, if you look at it, crossed the distance of 3720 and current CMP is 3740, it can definitely head towards 3800, 3820 with a stop loss of 3750.
Right. Thank you, Sony. Thanks for joining us today on the show. That's PI Industries with Sony's buy call. Well, on that note, we'll take a quick break. It's the morning where history has been created as Bank of Japan breaks its negative interest rate regime for the first time since 2007. So I guess the dealing rooms, currency dealing rooms in India must be a toss with a lot of activity as we see it. We'll take a break. We'll come back. We'll talk to UBS's Tanvi Gupta Jain on the election outcome scenarios. Please stay tuned.
completed 50 years in India. PM Modi will attend the Silver Jubilee celebrations of the Gujarat Cooperative Milk Marketing Federation, the owner of Amul. At one point of time or the other, we've all grown up with Amul butter or milk for sure. The famous Amul girl created in 1967 is family. We all recognize her. But as the brand grows 50 years old today, do you remember the full form of Amul? It is Anand Milk Union Limited. From producing 250 litres of milk per day since the time Amul was formed back in the mid-90s to today, where Amul has over 36 lakh dairy farmers and produces nearly 300 lakh litres of milk per day, the brand has had a long journey. The story goes way back in time. In the 1940s, dairy farmers were worried. The middlemen exploited their ways of profitable income, and a poor milk production system made their living difficult. Tribhuvan Das Patel and Verghese Kurian identified these issues and helped in the formation of the first milk union called Kaira District Cooperative Milk Producers Union in 1946. The cooperative model gave farmers direct ownership of the dairy industry. The union helped them process, market and sell milk and milk products without the interruption of intermediaries. And it was in 1955 that this union chose a brand name for itself called Amul, which means priceless in Sanskrit. And then, in 1973, Amul Dairy, along with 16 other district cooperatives, formed the Gujarat Cooperative Milk Marketing Federation, which has now completed 50 years in India. Amul also started India's white...
All right, poll season has begun. What are the possible outcomes we can see from this election, and what will be the impact on the Indian markets? UBS has come out with a note on this where they've looked at 3 possible scenarios and what their impact could be as far as investors are concerned. Tanvi Gupta Jain, India economist at UBS, joining us now to speak more on this. Tanvi, great to have you back on NDTV Profit. Superb to be speaking with you today on the note. Now, you've looked at 3 possible scenarios. In scenario 1, the BJP is the single largest party, has a majority on its own. Scenario 2, it's in a coalition. And scenario 3, the India alliance comes to power. Do you have a take on what is most likely and how markets would react to each?
Okay, thank you. So before I start, let me start with my disclaimer that at UBS, we do not predict the election outcome. And we do know that opinion poll, exit poll have been wrong in the past. That said, we did try to look at the various election scenarios possible, which we just highlighted, talking about BJP single largest party, BJP-led coalition, and the third option is a weak coalition led by India Alliance. I would say as of now, based on whatever opinion polls are available, they are hinting that Prime Minister Modi remains the most popular leader in India. In fact, even if I look at the recent performance in assembly elections, it also showed that the Modi factor or the perception of work done and even the implementation of the welfare schemes kind of, were in favor of the BJP government. So at this point, most of the opinion polls are pointing to political continuity. Our discussion with investors at the same time, looking at the valuations right now in the market, I think the first 2 scenarios seems to be already priced in.
In your scenarios, you also talk about if the BJP comes back as single largest party with a clear majority, which it also had in 2019. An alliance is running the government, but the BJP has a majority on its own. Then the positive private capex cycle will begin. That's, one outcome possibly. What I was wondering, Tanvi, is that the conditions in that case for the positive private capex cycle to begin already exist from the last 10 years. Why have we not seen it then, in that case, if the factor was a full majority of the BJP? And then what changes if they come back?
All right. Very, very valid question. So if you look at the underlying drivers for a capex cycle recovery have now turned positive in terms of asset quality of the banks, which I think in the last so many years, we did see a lot of cleaning up of the bank's book happening. And finally, we are seeing a double-digit buoyant credit growth, even though it is more biased towards consumption. And I really hope that we start seeing corporates, the larger corporates, start asking for credit, because in the hope that there will be a private corporate capex revival. And second is, even if I look at the balance sheet of the corporates, I think a lot of corporates deleveraged their balance sheet over the course of the pandemic. And now, for the first time in a decade, they are in a much better position to add more or take on more debt to expand capacity. The third driver of the private corporate capex cycle, which is, I would say, is much anticipated, we are yet to see it in a big way, is that if I look at the funding, taken up by the banks, by the corporates, with, or I would say the RBI has started releasing that data in terms of funding secured for capex, and that is also showing a very sharp pickup, especially in the first half of FY24. We only have the data available from April to September. And the last data point is the capacity utilization levels. We have seen that capacity utilization levels have picked up from the low of 60 to almost close to 76 right now. If I look at going back in data or going back in history, normally when capacity utilization levels are around 78, 81, we do see companies or the corporate sector beginning to expand capacity. So when I say political continuity, it actually bodes well for business sentiment. And we really hope that the much anticipated private corporate capex recovery actually picks up post-election. So that is something which we are estimating. In fact, I would say in those scenarios, I would even expect further progress on supply side reforms, whether it is in terms of clean energy transition or high infrastructure spending, not only soft infrastructure spending or digitalization, but also a lot of focus on physical infrastructure spending, a larger manufacturing push. And at the same time, what the BJP government has kind of highlighted in the budget, targeted policy initiatives, whether it is youth, poor, women, and farmers. So I would say you need an overhaul of many things to work for the overall broad-based recovery in private corporate capex that we hope to see at some point in time.
That's what I was curious about as I was going through your report, Tanvi, that what's on the list left to be done? Because if you look at the entire, and of course this happens pre-poll, if you look at the entire campaign, it is that all the promises made have been fulfilled. That we're already on that growth trajectory. A lot of the reforms have already come into place. And I'm wondering what remains that would be key to the markets and, in the hope of not just this positive private capex cycle, but going to the next level.
Absolutely. So what we did was we actually looked at what could be the impact on different reforms and the various government scenarios, depending upon the three scenarios we talked about. And we looked at some 8 to 10 parameters, whether it's fiscal discipline, whether it's infrastructure, whether it is further digitalization push, divestment, FDI, PLI, including, something like a land acquisition bill or a uniform civil code. So I think what more can happen definitely are three things. One, a big push towards physical infrastructure, which India is still needing, as per our estimate, while a significant digitalization push has actually helped in improving productivity and efficiency levels. We still need a massive push towards physical infrastructure spending. Maybe taking it towards 7 to 8% of GDP on a more sustainable basis for India to move to a higher growth path. So that is the first part. Second is PLI. We are already seeing the government has expanded the PLI. They have identified 14 sectors. There is an incentive scheme in place, but definitely we need much more further boost in terms of other easing of regulations in trying to boost the manufacturing push towards India. Third is a land acquisition bill. I think maybe another attempt could be possible. So I would say even in the rural economy, maybe there could be more focus on structural reforms. So definitely there are a lot of possibilities where we do see that to help India move towards a higher growth path, there could be more policy push needed at this point in time, largely on the supply side reforms.
Tanvi, just the thing around what a policy continuity could mean for FDI, and because India's share of FDI has fallen quite considerably in the recent past, one of the thoughts is, and I would love to understand how you think about it, one of the thoughts is that because commitments are being made into futuristic sectors wherein the pace of investment will become large with the next 2-3 years. So you will actually start seeing the material physical flows only in maybe 25, 26. Would you, if there is policy continue assuming, would you believe that to be the case?
Okay, so the way we do it is we looked at FDI in sectors, and what we realized is that if India was getting FDI inflow of $60 billion, we are right now tracking FDI around $40-45 billion. When you look at the net FDI number and you say, wow, FDI has actually halved, that is largely because a lot of repatriation of FDI outflows has happened in the last couple of years. So I won't completely, yes, partly I would agree that it is the newer sectors where, we would expect FDI to pick up. In fact, if you look at UNCTAD survey, they are saying India is one of the few countries or the top 5 countries where the greenfield investment intentions are very high. And if you plot that according to the FDI inflow chart, you do see that they do tend to move in tandem. There is some lead and lag. But at this point, even we are hopeful that the FDI inflow will pick up. But I would say at this point, we are still getting $45 billion of FDI. If I look at manufacturing FDI, which is the most important metric to track, to look at how big meaningfully the supply chain shift to India are happening, that number used to be $8 billion a decade back. Today, it is somewhere between $14 to $15 billion. So in that sense, yes, there is a significant improvement. But yes, for FDI to really pick up, we definitely need much more massive manufacturing push in the country. So the hope is in the next 3 to 5 years, FDI flows start to pick up. But at this point, I think it is more because of the weak global capital markets, private equity deals not really happening, and that does flow into your FDI inflow number. And the third is a massive also repatriation of FDI outside the country.
Okay. Tanvi, net, just trying to think out, 5 years out, do you believe the numbers will look stratospherically different? I know we are out of time, so just take one quick question. Do you think the numbers will look stratospherically different than what they are looking right now?
Absolutely. I mean, if I am very confident that India is on a 7% GDP growth track in terms of higher potential growth, the FDI number, which you are seeing right now, roughly around $45 billion, would definitely be in the range of $75 to $90 billion dollars in the next 5 years.
Great. Okay. Tanvi, so good having you. Thank you so much. Would have loved to talk more, but I understand we have to let you go. But thanks for taking the time out and being with us today.
Thank you.
All right. That's Tanvi Gupta Jain, UBS, on the report that they wrote. We need to slip into a break on the note that the equity markets are, well, quiet. Nothing too dramatic. No big fall or no big rise. Just about that 0.3% kind of a downtick, led down by TCS. We'll be back from a break with more conversations.
Hello. Good morning, ma'am. I'm speaking from XYZ company. Are you looking for a job or a job change?
Have you been receiving unwanted calls from spam numbers? Are you tired of being offered new jobs, insurance schemes, or free health checkups? Well, today we will look at an interesting survey report by local circles on Pesky calls that received 60,000 responses. Most unwanted calls are related to financial services, 54%, and real estate, 22%. In fact, the report has taken names. 40% mobile subscribers have identified Bajaj Finance as a top offender, HDFC Group as the second biggest pesky caller. The report reveals that 60% of people received 3 or more spam calls on an average day every day, and 92% of people registered on the Do Not Disturb list still get pesky.
Antony Waste is in focus because they have won orders recently, but they're also branching out into a number of different things, and hence conversation with Mr. Iyer Subramaniam NG, the CFO of Antony Waste Handling, is important. Mr. Subramaniam, good having you. Thanks for joining in. Give us a sense of what all have you branched out into in the last 3-4 months since we spoke, and then we'll of course talk about your Q3 numbers and the recent order wins.
All right. So over the last couple of quarters, couple of things which are already in the pipeline started culminating into operations. We started our waste to energy project, which was a big aspect for us. So we started commercial utilization of the asset from 7th of October. So that was a big deal for us. So that started off. Second, more important is the construction and debris waste processing. That has almost started completing its construction phase. So we start looking at commercialization of that from the first quarter of the next year. So those are two critical things which makes Antony go more into processing and less into collection and transportation, because that's where the margins are and that's where the need of the country is today.
Okay. Are these the reasons why your margins showed up so significantly in quarter 3, or was it a base effect of quarter 3 FY23?
Partly because of the waste effect, but more importantly because of the change in the revenue mix. Pre-Q3, my revenue mix predominantly was skewed towards project revenue, which is predominantly an Ind AS accounting treatment, wherein I need to recognize the capex through the income statement, which is a low margin business. Come Q3, my capex phase is over, so I started booking all those revenues into my core operating revenue, which is a high margin business. So Q3 is reflectively the core assets being put to use, being reflected in my numbers. So pre that it was more of a padded up numbers because of the accounting treatment. Now going forward, core revenues and the core costs will be sitting on my books, and that shows in a slightly better margins.
Okay. No, it's not slightly. From 13.55 to 20.33, if this is slightly.
For us, that's slightly.
I wonder
that's
what's going to
historical trend
happen
for us.
Okay, no. So let me try and get this clear. You talking about embarking upon a couple of projects which are higher margins, and while they have not fully fructified into your numbers, you've improved margins to 20.33%. Am I to assume that over the next 24 months, your normalized EBITDA margin performance could be higher than the 20% mark?
We are targeting somewhere between 22 to 23% to be our EBITDA margin, because that's the steady state of affairs based on our core operating performance. So that is something that we're working on. So 3 projects that's likely to drive these numbers are the waste to energy, the construction demolition waste, and the recently bagged Citco biomining project. So these will give us support in forms of margins of betterment for us.
Okay. So how large do these pieces become? Because when I look at your revenue contribution as of now, and please correct me if I'm wrong, processing is 20%, contract is some 26%, CNT is some 54%. So what changes in this mix over 24 months?
Over the next 24 to 36 months, we would see CNT business contributing around 55 to 60%. The balance 40% will be my processing, which is why you are seeing a change in the margin profile.
Okay, so contract and others, which is about 26%, will
that
be
gets
overtaken by
flipped into
processing.
my yes.
Okay, and does this have an impact on the earlier guided growth targets? Because I remember you telling me that you hope to grow at 20 to 25%, if I'm not wrong, for the next 4-5 years CAGR. Is that constant?
That will be constant, because that we are talking about is a core revenue. So based on my capex phase, which has now been completed, the core revenue growth starts coming in. So if you look at the Q3 numbers, my core revenue grew by around 19%. So that is something that we are targeting. When your CNT project and the biomining starts performing, that adds to my core revenue growth. That drives our growth numbers here. So anywhere between 19 to 24% is something that is comfortable. Any future project wins will add to that.
Okay. Yeah, so circa between 20 and 25%. I mean, one odd percent here and there. Okay. Tell us a bit about this biomining thing with Citco. It's a small order thus far. Do you believe that this pie can grow with multiple orders from other geographies, or can you deepen the slice with Citco itself?
Answer to that is both yes. We did Greater Noida biomining, where we kind of did around 2.2 lakh tons of biomining. So that was a very successful project. post that we did this, we backed this Sidco biomining, which is like an 8.5 lakh ton kind of a scenario, so which is like almost 3 times what we are looking at. So we are feeling confident that we can execute large kind of biomining projects here at a positive scenarios for us. The problem that India is facing, a lot of cities have open dumping grounds, and that is something of an eyesore, and it's also an environmental nightmare. So the only solution currently is to kind of get rid of these kind of dumping grounds and what we call as bioremediation or biomining of legacy waste. So we are seeing a larger potential of, over the next couple of years. And once you get your act together, once you know what works, what kind of machinery works, you are able to kind of really fine tune your margin profile going forward. So the pie will increase for biomining as a segment for us. With Sidco, it's one of the better run organizations, and there are always a processing contract or a CNT contract coming up. So historically, our experience has been that you work with a particular client and start giving him more of the projects. Like Nagpur, we did CNT and now we are doing power sweeping. PCMC, we did CNT, we are doing waste to energy. Similarly, with Sidco, we are doing biomining. Maybe in future, we'll try to do some processing activity with them as and when the tender comes up.
But okay. And the other question is this biomining. You've mentioned a couple of things, a small one with Noida, if I'm not wrong, and the one with Sidco. Are you in talks with some other geographies for such projects?
So we are in talks with the larger cities currently, but because of the election code of conduct, everything's got into the mothball scenario, so it's going to take some time. But definitely large number of cities, let it be Chennai, Bangalore, you name it, large number of cities have this as a problem, and they're in talks with large number of players to find a solution. I mean, Delhi is one of the prime candidate for this scenario where they're talking about getting rid of the Ghazipur dumping ground. So it's a problem facing a large number of cities too.
Sure. So you've had a flat revenue growth in Q3. If the election code of conduct is in place and new orders don't come in, would growth come in from executing the previous orders, and will you be able to therefore match up to that 20-25% growth? Because the reason I asked you this also is when I look at the March 23 numbers, revenues is 850 odd crores if I'm not wrong, and the trailing 12 months is circa that number. So will you add to that 20%, or can we expect a bit of a flatline performance for Q4 and Q1?
Yeah, so if you look at the 850 odd crore of revenue, you need to split out the Ind-AS accounting revenue, which is around 175 odd crores. So my core revenue was around 625, 630 crores. Now that is the pie that we talk about, which is going to grow at 19 to 22%. So that is a growth that we're talking about. Based on the new waste to energy and the CND and the biomining, that 625 will grow at around 18 to 20% comfortably for us. That is something that drives the margin for us, not the Ind-AS accounting revenue.
But
so that will grow for us.
The reported revenue, will that flatline, or will that also grow?
That will flatline. That will flatline unless until I bag certain more large CND contract. That will flatline over the next 24 months because of the absence of the construction revenue coming in.
But the margin can still grow. Margins and PAT can still grow.
Yes, margins will definitely grow. PAT will be slightly subdued because of higher depreciation and interest costs coming in from the waste energy project. So cumulatively, we will see a 25 to 26 crore of depreciation and interest coming in over a trailing 12 months or the future 12 months period from the waste energy project.
Got it. Okay. Mr. Subramanian, one last question. Any fundraising activity in the near term?
Not yet. I mean, the balance sheet looks very strong. We have a net debt to equity of around 0.6x. We have a A- for a large subsidiary. The cash flow from operations are 110 to 125 crores. DSOs are around 100 days. So pretty comfortable today. But if we back few large waste to energy or waste processing contracts, when the discussion will be on the table then.
Wish you all the best for that. Thanks so much for talking to us this morning.
Thank you. Thanks.
Viewers, thanks for tuning in.
Hello and welcome to NDTV Profit. Today we will talk about tattoos and the worth of this market. The history of tattoos in India can be traced back to prehistoric times when tribal people were captivated by drawings on stone or wood walls. Their attempt to replicate these figures through needles gave birth to the practice of inking skin. Over the course of time, tattoos were embraced by tribals as a mark of bravery, war, religious beliefs, customs, marital status, protection from the male gaze, and so on and so forth. Today, in 2024, tattoos have become a means to express thoughts, individuality, personal experiences, and sentimental designs. The industry is estimated to generate over 20,000 crore rupees per year. What is driving this growth? One of the key drivers behind the growth of the tattoo market is the rising demand for customized and unique designs. Improved technological equipment for making advanced, safer, and painless tattoos have boosted the market. The laser technology for removal or modification of tattoos have also added to the spurge. Increased exposure and promotion of tattoo designs on social media have led to widespread influence of tattoo culture on the youth. Take a look at these figures now. As per Fortune Business Insights, the global tattoo market is projected to grow from $2.04 billion in 2023 to $3.93 billion by 2030 at a compound annual growth rate of 9.87%. This is a sharp rise from 3.8% year-on-year growth between 2017 and 2022. As per Custom Market Insights, the diamond jewelry market is expected to grow at a compound annual growth rate of 5.5% by 2032, while the luxury jewelry market at a rate of 8.9%, but the tattoo market is estimated to grow at 9.5%. Is the tattoo business lucrative? According to an article by Opportunity India, tattoo kits are now easily available for less than Rs 10,000, while high-end kits range from Rs 20 to 35,000. Now, in a city like Mumbai, the average cost per inch is Rs 2,000 to 2,500. In Delhi and Bangalore, the cost per inch is between Rs 1,000 to 2,000, and in Goa, it is about Rs 500. We spoke.
Well, two listings on Dalal Street today. Popular Vehicles and Services, the car dealership chain. It's a 600 crore IPO which was subscribed just 1.23 times, and hence the kind of downtick that we're seeing. Most of the companies on which ever since this whole tightening by the regulators has happened, most of the companies on which the listing numbers were a bit weak have started off very sluggish, in a very sluggish fashion. The other one to keep in mind, not an IPO, but Shipping Corporation of India's Land and Assets, which is the demerged entity, has also listed. So that's also to be kept in mind. But key is the IPO, which is Popular Vehicles, down. Now remember, for most of these companies, the outlook of organized auto business, be it a chain, be it a dealership, be it a service station, is very positive, especially if it's the high-end car market. But keep an eye out for Popular, could be very interesting. SCI, as I said, SCI Land and Asset has also made its debut on Dalal Street, so that's the other one. But Popular Vehicles is the one which is alive and counting, 7.5% lower in trade. In a few minutes from now, we'll also get in our guest for Talking Point today. So I'll cut across to Vikas Khimani as soon as he's here. But just very quickly, what's happening in the markets is the other interesting piece, because now we are down about 0.7%. We started off about 1/3% lower. Now the Nifty 50, I wouldn't say is in a free fall, but has certainly come off very rapidly in the last 30 odd minutes of trade. And I would suspect that IT is at the center of it all, because IT stocks have certainly cracked. TCS was light down there, but 1.7% down for Nifty IT. Led, I'm guessing, by TCS, will come up on your screen, but a clutch of others are also down. TCS is 2.7 odd percent, but if we can get the Nifty IT losers, or the Nifty IT gainers and losers chart on the screen, it will show us all the key components which are reacting today. So at the top of the pile is TCS, but LTTS, Persistent, Wipro, HCL Tech, Infosys, everything is down except for Coforge, which corrected in trade yesterday. Almost every other stock has corrected and corrected quite significantly in the session today. So keep an eye out for IT. Aside of that, the other thing that is putting a little bit of pressure are the oil and gas stocks, the oil marketing companies in particular. So look at BP, HP, IOC, and I think the crude uptick in part to be the reason, because BPCL is down 2.5% today. HPCL has also corrected in the session today, about 3% lower. And with crude prices being what they are, and which is that they've moved higher, but at the same time there's been pressure on the Indian petrol pump pricing as well, because there has been a cut that has happened 3 or 4 days ago. I think a mix of those two has resulted in this kind of derating that we've seen. If you look at HP, BP, IOC in the last 1 month or the last 2 months, in anticipation of some bit of action on the pricing front, the stocks have already gotten derated quite a bit. The problem though, if crude prices continue to inch up, which they might, who knows, it's a very unpredictable commodity, then we have an issue at hand. So there's lots that's happened in the last 12 to 24 hours, which is that while we await Vikas Khemani, there's lots that happened in the last 12 to 24 hours in that BOJ has acted, crude prices have inched up, and we are awaiting the Fed decision tomorrow. So there is a fair degree of market activity to watch out for. But thanks for tuning into Talking Point. I am your host, Neeraj Shah, and we will get in Vikas Khemani in just moments from now to try and understand from him how does he think are the current developments that are happening in the market, which may influence what risk assets do in the near to the medium term. So that's also to be probed with him. The other aspect, of course, is what's happening to individual stocks beyond IT and beyond oil and gas. So there was Piramal Pharma, which has gained a bit in the session today, 3 or 4% higher amongst the stocks, which are actually doing slightly better, 3.5% higher, because Jefferies has come out with a note wherein they are talking about some positives for Piramal Pharma and talking about how they might do a double-digit growth even in Q4, despite the fact that CDMO and CRO expenses are lower. And if that happens, then the upsides for this one could be better. But as I said, thanks for tuning into Talking Point. I am Neeraj Shah, and our guest today is Vikas Khemani, founder, Carnelian Asset Management and Advisors. Vikas, great having you as always. Thanks for taking the time out. Hope all is well.
Yes, hi Neeraj, good to see you. Always great to chat with you.
Thank you so much. The feeling is entirely mutual, Vikas, and would love to get your insights, Vikas, into some developments that have happened recently before we move to some of the fantastic newsletters that you guys have written. But BOJ has made a tweak, much anticipated, but the tweak has finally happened. We're on the cusp of another Fed policy as well. Central banking action, how crucial would this be in the near term, particularly the BOJ move, which has already happened?
I think, there's no denial that, I haven't really sort of, tracked what's happening. But more importantly, I think if you see, the Fed has already indicated that there will be a cut over this course of this year. Two of them, and interest rates are peaked out, and it's only a matter of time how it sort of comes down. And I think, we will have to see in that context. But see, as far as the Japanese rates are concerned, they have been in a very, very low trajectory from a very, very long period of time. So I won't read as much as Japanese economy is recovering after a very long time. We've seen a lot of positivity around that. So, but I would say is that US rates are coming down. It could be delayed. It could take time depending on data dependency and all. And that will determine a lot more global macro factors, because I think that's where a lot of, rise had happened in the last couple of years. I wouldn't think that very, very big impact would come from Japanese interest rate movement. This is only a small tweak, so I don't think that will have a major impact per se. That's my view. Not that I'm a very big expert on the global macros.
You're being modest, Vikas, but here's my second question. Therefore, do you think a delayed Fed cut cycle would have a material impact on how flows or multiples behave? Or do you think that now, by virtue of the fact that the last 2 or 3 months, the data and the commentary has not been very dovish, that some of it is baked in?
If let's say, Fed Fed kind of delays the interest rates cut, it could have some impact on that because the emerging market flows are directly linked to the cut in this interest rate cycle. The good part is that the interest rates are peaked out. Other interesting part is that Indian currency is not expected to depreciate. To that extent, there is a kind of natural hedge available on that. So flows should start trickling in. I do believe that 24 calendar year could be a good year of flows. Having said that, any delay in the rate cut can have an impact on the flows.
Okay, because now you've been constructive on the Indian growth story and the implications of it for markets for a while now. It's played out really well. The last few days, we've seen some bit of moderation in the risk appetite, particularly towards the mid caps and small caps, but even the larger areas. Now, my question to you is, while India growth is, let's assume the GDP growth stays as most people are predicting, as the RBI prediction of 7% as well, could equity markets deviate a little bit in this year of some bit of global policy uncertainty? We have our elections as well, and the fact that valuations are also nothing to scoff at.
Absolutely. I mean, it's very natural that when you have a year like 23, which was a stellar year across the board, especially mid and small caps, it's a very natural thing for it to consolidate and because you can't have these kind of year returns very often, right? But having said that, these are the kind of years of consolidation only are the years when you kind of construct your portfolio, because that is where you get good quality companies at a reasonable valuation. I mean, I have no doubt on that in my mind, right? So while I think from 24, you can keep your expectations low, at the same time, this is also a great year to build your portfolio, is how I would see. There could be sideways movement, there could be some more correction. While when I'm saying this, I don't expect a deep correction in the market. I feel deep correction will come only if there's a unexpected, 3, 4, 5 sigma event, which you can't model for. But otherwise, the normal correction happens only because of two reasons, liquidity and leverage. And both right now are very well placed as far as the Indian markets are concerned. The leverage factor in the market itself is also very, very low. The margin funding book of collective market is very, small given the size of the market cap and all. So I think it is leverage which generally accelerates the market falls. So I don't see a major deep cut in the market. At best, I think probably, and save and except for some big unexpected event, I think it will kind of trickle, it will kind of remain sideways, consolidation, time correction might happen. And that's a good thing to happen in any bull run.
You might think that I invoke IT in almost every conversation that we do. Not that your view changes, because it shouldn't change quarter to quarter. But I'm inclined to ask this to you because of the deal that has happened with TCS and Tata Sons valuing TCS at a slightly lower level than the buyback price. One. Two, there are brokerage notes out which speak about the commentary that select IT companies have given at various investor forums, including the Citi note on Emphasis, when the company is saying that there is absolutely no change in the demand environment since the start of the quarter as well. Because for somebody who is wanting to put fresh money to work, is it a tad too early to bet on IT? I mean, for money that is already there, which is fine, but for somebody who's wanting to put fresh capital to work, are there better options than information technology currently?
Again, really, it really depends on your time horizon. Of course, there are better options than IT as well. So I'm not saying that there are no better options. I mean, probably pharma could be a very interesting one as compared to IT. Just if you look at the growth perspective and the change in the entire environment is happening, so you can always look for alternatives. I'm not saying that, but when you construct a portfolio, it's a balance of pretty much, a lot of factors. And IT definitely offers a good hedge, and as far as we are concerned, we've been very constructive on especially the mid and small cap ITs where the growth prospects are very high. We are very constructive on IT companies which are focused on ER&D space. We're very focused on companies which are more focused on the product space. So that is where I think the real growth lies. So, IT, you can't look at with a broad brush. You have to, even while the sector is growing, at a moderate growth, within that, there are many companies that are growing at 20% plus. And it is our job to identify those companies and kind of bet on that. And if one is able to find that, whether fresh capital or existing capital makes no difference, you can definitely put it, because IT continues to remain an interesting play even over the next 8-10 years. And IT will pivot. It's not that current IT form will keep on. I mean, IT today is very different what it was in Y2K time. So I think every time there's a transition in technology happens, there's a pivot which happens. Most IT companies do that, and today they are pivoting towards AI and related technology, apart from cloud digitization and cloud migration. So this sector will keep evolving, but I have no doubt in my mind that sector will be relevant. It will grow from here. It will continue to kind of deliver good value creation.
So sorry, I just heard you mention ERD. People also talk about enterprise businesses, which is a small subset, but doing well. And then there is the larger IT services chunk. So is IT services still in the fray, or are ER&D and enterprise solutions parts of tech a better aspect?
It's still in fray. I mean, IT services are not going anywhere. Within that, I think ER&D will be faster growing sort of part, right? So that's ultimately as an investor, what we are chasing. We are chasing basically growth and growth at a reasonable valuation, right? So wherever you find this, and especially in any sector, growth is what determines the outcome, right? So if you are able to get a reasonable valuation at a good growth, then I think sector by and large governance is not an issue. Most companies are good. So if you find a good business with a good traction in the growth, you go for it. And those are the kind of companies, especially ER&D as a space, is growing faster than the conventional IT services. And that's the reason most of the plays we have have a larger portion of that, which is driving both profitability and the growth. The conventional model also continues to do well. It's not that it's under big stress and it's not doing well. That also continues to do well. So ideally, where you get both combination or a accelerated in form of ER&D, you go for that.
Got it. Before we take that break, since you mentioned healthcare as being a sector that could have, a good run too, or I mean, not verbatim, but you said something like that, maybe better than IT are the prospects of healthcare. It's a wide bucket now, because what within this do you like the most? Because when you joined us in the opening week, you were of the view that CDMO, CRO seems to be set for multi-year growth. Is that the first amongst equals?
I'm more specifically meant for pharmaceuticals and all. I mean, of course, healthcare has a wider this thing, including hospitals and diagnostics and all. The pharma piece has reasonably good legs. It's come out of a long time of hiatus, and I think we are seeing demand environment in the US changing significantly. We are seeing CDMO and CRO getting a, in my opinion, decadal, shift from China plus one. Of course, right now, because of the biotech funding drying up, it's been a bit slow. But if I take a 5-10 year view, I think, just like how IT services grow, you will see CDMO and CRO places, companies will grow over the next 10-15 years. And I won't be surprised if there are, many CDMO, CRO companies, which could be 2-3 lakh crore market cap in times to come. And this will happen in front of our eyes. So, again, depends on your time horizon, portfolio allocation. It's a combination of all. But we remain very positive on pharma as a segment and CDMO, CRO as a subsegment of that.
Okay, Vikas, stay on. Viewers, we need to slip into a quick break. But remember, a few days ago, 3-4 days ago, Team Carnelian, which is Vikas's firm, wrote a note saying Bharat Amritkal, the India story re-begins. We'll try and talk about that a little bit on the other side of this break. Stay tuned.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash, made from 51 precious herbs.
Hello and welcome to NDTV Profit. Today we will talk about tattoos and the worth of this market. The history of tattoos in India can be traced back to prehistoric times when tribal people were captivated by drawings on stone or wood walls. Their attempt to replicate these figures through needles gave birth to the practice of inking skin. Over the course of time, tattoos were embraced by tribals as a mark of bravery, war, religious beliefs, customs, marital status, protection from the male gaze, and so on and so forth. Today, in 2024, tattoos have become a means to express thoughts, individuality, personal experiences, and sentimental designs. The industry is estimated to generate over 20,000 crore rupees per year. What is driving this growth? One of the key drivers behind the growth of the tattoo market is the rising demand for customized and unique designs. Improved technological equipment for making advanced, safer, and painless tattoos have boosted the market. The laser technology for removal or modification of tattoos have also added to the spurge. Increased exposure and promotion of tattoo designs on social media have led to widespread influence of tattoo culture on the youth. Take a look at these figures now. As per Fortune Business Insights, the global tattoo market is projected to grow from $2.04 billion in 2023 to $3.93 billion by 2030 at a compound annual growth rate of 9.87%. This is a sharp rise from 3.8% year-on-year growth between 2017 and 2022. As per Custom Market Insights, the diamond jewelry market is expected to grow at a compound annual growth rate of 5.5% by 2032, while the luxury jewelry market at a rate of 8.9%, but the tattoo market is estimated to grow at 9.5%. Is the tattoo business lucrative? According to an article,
back with talking points. A talking point on NDTV Profit. One of the key talking points today was also this demerged entity, shipping corporation's demerged entity, SCI Land and Assets, which listed today. Smriti has an important insight on the valuations. Smriti, good morning.
Good morning. Yes, the entity got listed today and it's currently trading at 44 rupees per share. We tried and calculated the book value and the fair value of these shares. Now, the book value was at 66 rupees and the fair value is 121, so double that of book value. And if you look at the current trading price, that's about 33% discount to the book value itself. Now, if you look at the assets of this company, the book value of these assets was somewhere around 2,300 crores or so. But we tried and calculated the market value of these assets that comes close to 4,900 crores, so almost double there. Now, just to give you an idea, this company has all the non-core assets of Shipping Corporation of India. So it's essentially land, building, and that sort of assets that the company has. We also looked at the assets, which is the book value of freehold property, which was about 92 lakh compared to the market value that's over 1,000 crores. The land was valued at about 2,376 crore, while the market value is over 3,800 crores, and there's a cash balance of 1,000 crores as well. So keeping all of these things in mind, and there's some amount of liability as well. So based on this, the calculation that we've come out with is of the fair value and the book value, and as you can see, even after the demerger, it's currently trading at a discount.
Down 5% as we speak. Smriti, thanks for putting that into perspective. Because the PSU move taken a bit of a breather. I wouldn't say it got derailed, but has certainly taken a bit of a breather. It was the toast of town until recently. How are you thinking about it?
Absolutely, Nikhil. Just like how you see that, after having such a sharp run, last year was a stellar year for you, PSU. After such a sharp run, it is very natural for it to consolidate. And in case of some PSUs, I think probably a bit of an overstretch also happened. So, again, it is not PSU, you can't brush it to the broad basket, but there are PSUs where still there is a lot of value. Of course, some part of the deep undervaluation went away. Today, they are in a fair value zone. But I guess as the transition and transformation continues to happen, I think we will see more valuation re-rating happening. So I would say large part of the run is done, and now we will mostly track the earnings growth as Indian economy keeps growing. And also you have to look at sector specific. You really can't, because each PSU within a different sector will have a different lever for growth and delivery of returns. We've been very, very bullish and positive on PSU banks. We haven't sold any. We continue to remain invested because we think that will do well. Power sector, we've been quite bullish. We have continued to hold. So we haven't really sold anything because I think these kind of consolidation, correction, temporary things will come in every market cycle. And we would like to just continue to hold and play out the full story.
In some sense, is the market getting unduly worried about what's happening to oil marketing companies? Moat around the business looks okay, but yes, there has been some intervention and some uptick in crude prices, but the derating has been very significant.
To be honest, we haven't really bought any of the oil marketing. That's why I'm saying that you have to look at different sectors. We do where we think there's a good management control on the future on the fate of the company, and there's sectoral tailwind. Unless we are convinced about these two, we won't buy. And specifically in the PSU segment, in any any ownership matter, but especially in PSU segment, especially oil marketing company, that it's not been the CMD of oil marketing company doesn't control the outcome. There are lots of variables, so we have never kind of taken bet on that.
Got it. Because we are going to be talking at length about this on a separate show, but the headline of the article or a note that you've written recently is intriguing. The India story re-begins, Bharat Amrit Kal. What are you trying to say from an investing perspective here?
So Neeraj, I think, very often we get a question that, what is happening with the valuation, what is happening to the markets. So when you zoom in, you're worried about here and now short term. In this note, we're trying to say when you zoom out, your perspective can be very different on the Indian story. You can look at very, very different aspect. And if you are zooming out and seeing, let's say, next 10, 15, 20, 30, 25 years, your perspective about how to look at equity investing changes completely. And this is what we're trying to, kind of say here in this note. As you know that India is embarking on the journey to become developed country by 2047, which means that we will have almost $29 to $30 trillion of GDP, which is between 7 to 8x from here. So what are the possibilities as it happens? Why we think it can happen? And in India, many changes have happened. And to give you an idea, today's corporate profitability at a country level is $150 billion. In 2001, it was $8 billion. And despite all kind of uncertainties in last 22 years, Indian corporate profitability has become 20x, right? Now, this corporate profitability will go from 150 billion to $1 trillion by 2035. It means our market cap will be between 18 to 20 trillion dollar. It means our Nifty will be anywhere in and around 1 lakh. Now, if this is the kind of journey you have next, 10 to 12 years, then you don't really worry about what will happen next quarter. Not to say that, our job is to keep an eye open, but you don't really then try to say, oh, let me book a profit and come back and buy 5% cheaper. So if you look at this perspective of over next, 10, 12 years, massive amount of wealth will get created, and you just focus yourself on participating in that without getting bogged down by the short-term intermittent noise which is there always in the market. And this is the perspective we are trying to build. Also, we are trying to say that what has changed in India? Why do you think it's possible this time around? India has always been a promising country, but that is where we are saying there are big mind shifts change have happened in India, and those mind shifts change are which are driving. Number one, which I always say that India as a country has moved from incremental mindset to exponential mindset. Today, we are executing everything at a rapid pace, as of yesterday kind of mindset. This is a very big change, very big departure from the past. Likewise, India doesn't operate from a constrained environment anymore. We're saying we have resources for everything and we don't act like a poor country anymore. Our mindset has changed from, big time on that. Like that, there are many 6, 7 tectonic shifts which have happened, which we think, will make sure India will reach to that, size and scale over next 20, 25 years. At least our conviction on that is very high as we analyze, and that is very well articulated in the note in a very detailed manner, that what are the big departures from the past and what are these tectonic shifts and what will drive the future of the country. So we think that we are in a massive wealth creation cycle over next 10, 12 years, of course, over 25 years, but the acceleration will be far, far, far more higher in next 10, 12 years. So, that is one should look to capture rather than worrying about, what will happen over next 3 months. So this is our whole perspective. What we are calling is an, Bharat Amrit Kal period, what will happen.
And because just before we wrap up, though, so 60 seconds left, but there are investing implications for this in a meaningful way. You launching a portfolio on this as well.
Yes, absolutely. And so one is that opportunity we are showing, and then how do we capture it? Around that, we have a fund called Bharat Amrit Kal Fund, which we are launching, and you will see that coming out soon. And so how do you capture this massive wealth creation opportunity ahead of us? And that is what we'll be talking about.
Okay, well, Vikas, let's get you on a show to talk about this, because our viewers can certainly benefit, even if they can't invest in your fund. If they can't, they'll certainly benefit from the conversation that happens around it. So looking forward to that, but thanks so much for tuning in to joining in on Talking Point today, Vikas.
It will be my pleasure. Thank you very much.
Yep, the pleasure is ours. And viewers, that's all that the time we have for this edition of Talking Point. Thanks so much for tuning in.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
Hello. Good morning, ma'am. I'm speaking from XYZ company. Are you looking for a job or a job change?
Have you been receiving unwanted calls from spam numbers? Are you tired of being offered new jobs, insurance schemes, or free health checkups? Well, today we will look at an interesting survey report by local circles on pesky calls that received 60,000 responses. Most unwanted calls are related to financial services, 54%, and real estate, 22%. In fact, the report has taken names. 40% mobile subscribers have identified Bajaj Finance as a top offender, HDFC Group as the second biggest pesky caller. The report reveals that 60% of people received 3 or more spam calls on an average day every day, and 92% of people registered on the Do Not Disturb list still get pesky calls. So is being listed on DND working? Clearly not. But the report also recorded a minute relief, as per which 6% people don't get any such phone calls. This relief comes after the TRAI directive to banks, insurance companies, and other commercial entities. TRAI is the Telecom Regulatory Authority of India. In fact, the Department of Consumer Affairs has constituted a committee comprising members of different regulatory authorities, telemarketing companies, and cellular industry to draft the guidelines to address the issue of pesky calls. So yes, pesky calls are still a worry, but there is a little relief too. Can you ignore them though? Toll-free numbers are identifiable, so institutions have found a new way. According to the report, calls from different mobile phone numbers that seem to belong to companies or brands have risen from 29% in February 2023 to 36% now. And look at the change in trend. Real estate selling has risen from 18% last year to 22% now. However, job offerings have decreased from 10% to 4%, and in the case of those selling financial services, the calls have slipped from 60% to 54%. So the bigger question is, will the nuisance of pesky calls end anytime soon? There should be a system where pesky callers are blacklisted at the Aadhaar level, so they have the risk of not getting a new SIM. Also, brands on whose behalf the contracted callers are calling also need to be held accountable by the Department of Consumer Affairs, so brands institute the right consumer outreach practices both with employees as well as third-party contractors. For more such updates, stay tuned.
Markets continue to trade lower and Nifty falls below 21,900 while the Sensex is down 500 points near 72,000 levels. It's a sea of red among sectors dragged by IT, pharma and oil and gas, while metals reverse gains to trade in the red. And shares of TCS slip over 2% in trade after 2.02 crore shares changed hands in 5 large trades. Stock hits lowest level since Feb 27. And Japan exits world's last negative rate regime. Bank of Japan hikes interest rates for the first time since 2007. It's underwhelming for popular vehicles. Shares list at 1.9% discount on the exchanges. Hello and welcome. This is Meena Nalwala and Agam and me will take you through all the F&O action this morning. Well, the market's having a bit of a down day. It broke in 21,900, which has proved to be an important level of support on the Nifty for the last few days of trade. This morning, the trading sub 21,900. Well, with the lack of triggers and no real direction, it seems like the bears are gripping some control of the street. The breadth of the markets also deteriorated from the word go. Your OMCs are leading the losses on back of higher crude prices globally, with reduced exports coming from Saudi and Iraq, and signs of higher demand is what's keeping crude prices higher and in turn impacting the way OMCs are trading this morning. TCS also sees a 3.2% cut on on back of Tata Sons looking to offload some stake at a discount in the conglomerate. Cipla, Nestle, Tata Consumer, Dr. Reddy's, HUL are some of the other big losers. On the winning side, you've only got a handful of counters, 5 to be precise, that are trading in positive territory, with marginal gains for Hindalco, the Bajaj Twins, and ICICI Bank. Across the broader markets, the picture is no different. The broader markets underperforming the benchmark once again in trade. Agam, it's not actually looking good. I mean, we've broken 21,900, but of course, we can't rule out a pullback above those levels to close. But for now, the breadth is weak, and I think that's what's a little concerning.
Yeah, so as soon as we lost out on 22,000, all the focus would then be moved towards 21,800, and that's perhaps a slightly stronger support as compared to, of course, 22,000. That's as per a lot of the technical analysts that we've been talking to over the past couple of days. But, well, sure, at the moment we are looking at the weakness, and it does seem like the Nifty is just, trying to take support around where it is right now, just about 60 odd points above 21,800. So that's a level that we'll certainly want to keep an eye on. Of course, it's a Fin Nifty weekly options expiry, which means that the banking counters will be in focus, particularly something like an HDFC Bank. So we'll be talking about that as well. But before I talk about that, let's very quickly take a look at how things are panning out for the futures and options space. I've been saying this over the last 12 odd days, sounding like a broken record where there has been no change in open interest. And today as well, once again, we see the Nifty March futures, OI, still at the moment stand at around 250,000 units. And, we don't have any interest from traders, because usually down well into an expiry, we tend to see this particular number move up, inch up higher, but hasn't. This is even as the index has now come off by 0.9%. So we haven't seen, in fact, some amount of unwinding coming through out there. Well, the Bank Nifty pulled that up as well. That's where, once again, the picture isn't very different. And here as well, we have seen traders become very hesitant in adding more positions as far as the March futures go. The Bank Nifty again, well, it's just shy of the 46,500 mark. That's another important level to keep an eye on. Let's move on and talk about how things are panning out in the option space for the Nifty Bank, or pardon me, the Nifty. Well, we are still seeing writing around 21,500, 21,600 at the moment. But of course, on the higher end, also a lot of unwinding with respect to calls and puts. Around 22,000, so keep an eye on that one. And as far as your overall open interest distribution goes, OI still stands at around 22,000. That's the max OI around puts. Actually, that has reduced over the past 1 hour, so we'll be taking an eye on that one as well, keeping an eye on that one as well. Yeah. So your overall open interest picture has certainly changed over the past couple of hours. And of course, we will have to wait till the end of the day as to how things pan out. But for now, well, we are below the 21,900 mark in the Bank Nifty, just shy of, or rather at 46,500. Let's wait and watch as to how we can take this forward. But on that note, let's get in our experts for today. We have Richard Jain, CMT, lead research analyst at 5paisa, as well as Ashwin Ramani, derivatives analyst at Samco Securities, is joining us on the show. Good morning to both of you. Thanks so much for joining in. Richard, I start with you. Your view on the Nifty. How are you trading this one?
Hi, very good morning, Agam. Very good morning, Samida. Well, the short-term trend is quite important to watch out today's closing. If we look at previous historical levels, then this 21,850, 21,900 is a very crucial support range where previous swing lows are there. Today, in last half an hour, we have seen that 21,900 has been broken, and good amount of OI addition is now seen in that 21,900, 22,000 call option, which indicates that certainly it won't be easy to move higher from current levels. But I think I would watch for today's closing. If the market closes below 21,850, then that would be initial signs that the down move would continue, for the rest of the week as well. So 21,850 would be seen as a crucial support, which would be watching important watch on a closing basis, and 22,150, 200 is the important resistance range. So for now, I think index would trade within this range, and only a breakout either below 21,850 or about 22,200 would lead to the next directional move.
Right. Even the PSE space is seeing a big cut in trade. I mean, all your big PSU entities are seeing tremendous selling pressure. SJVNs, RECs of the world are down 3 to 4% each. Ashwin, what is your trade on the Nifty? 21,900 was proving to be an important level of support up until this morning. How would you approach this? Lack of triggers, bears are seemingly getting a grip of the street for now.
Good morning, everyone. Thanks for having me on the show. Since the 1.5% fall on the 13th of March, if we look at the daily chart, Nifty has been moving in a narrow range. And in the last 3 days, Nifty has gone below 22,000, but has somehow managed to come above 20,000 and close successfully above it. Also, it is important to note that, this week we got a lower close on the weekly chart. That is the close below the previous week's low. The last time this happened was somewhere in the 18th September to 22 September week, and Nifty had cracked nearly 3% in the following week since then. If I also look at the India wicks, the 16.5 levels has been acting as a very strong resistance. And every time the India wicks has gone up to 16.5 levels, we have seen the volatility cooling off. So that is giving some kind of comfort to the bulls. But despite the price rising over the last few months, we have seen Nifty making higher highs. We also seen a fresh highs of 22,526. But the RSI, the relative strength index, hasn't moved in tandem with the price. So there's always this RSI bearish divergence that was visible on the daily chart. And also, if we look at the long short ratio, if we look at the foreign portfolio investors' activity in the index futures front, their activity has remained subdued. A large portion of the rally that we have seen over the last couple of months has been without an active participation from the FPIs. Out of the total contracts, the percentage of longs that are held by FPIs is near about 40%. It's been hovering in the 35% to 40% range. And the net shorts that have been held by them is around 60%. So FPIs are also holding more short positions relative to long positions in index futures. And also right now, Nifty is trading quite close to its 50-day exponential moving average on the daily chart. And I feel the immediate support for Nifty is around 21,850. But over the last 3 days, put writers have somehow managed to probably get price about 22,000, and it will be important to track the option activity at 22,000 today to find the future cues in Nifty.
That is the word coming in on the Nifty. It looks like it's going to be a day that the markets may continue to struggle under pressure. Remember, there aren't too many cues coming in terms of trade, and the big trigger now, of course, being the election. Ahead of that, the RBI policy could probably determine market sentiment. But there has been a listing today. Popular vehicles that listed on the exchanges opened with a 1.5% debut and continues to see some pressure. It's down about 8% as we see it. Well, the larger market sentiment clearly not supporting this listing. Raj Narayan, CEO of Popular Vehicles and Services, now joins in to talk to us about what business is looking like, the outlook, and of course the utilization of funds. Raj, good morning. Thanks for joining in. Raj, let's start with telling us a little bit about...
Very good morning.
Very good morning. You've successfully raised the money that you were looking to raise, about 600 odd crores in this listing. Give us a sense of what the fund utilization is going to be. I believe it is for retiring some amount of debt on your books. Elaborate on that and tell us, post this, what would be the debt equity ratio for Popular Vehicles?
So the major chunk of the funds we raised will go in terms of the debt reduction immediately, but slowly it will get plowed back into our market expansion plans. In terms of the debt equity ratio, if you look at it, like for example, in the last financial year, in our books, we had closer to about 500 crores, out of which about 100 crores is only long-term debt. Balance 400 crores is the inventory funding, which we keep taking to sell off the cars. So that keeps going up and down. So, it may not be the right way to look at it. If you look, it's fully, we pick up the cars and we sell it. So it shouldn't be a problem.
Raj, explain to us the business model. I believe you are a distributor for mid to lower mid price range vehicles. What is the inventory? What is the deal that you've struck with the likes of a Maruti? Help us understand what business is like, and then of course we can then dwell deeper into more specifics.
So the business model, we are an integrated dealership. We start with the driving school. We have we sell new cars. People come back. We also facilitate the insurance and the finance. People come back to us for service, body repairs, and after a few years, they can come back and sell it to us and buy a new car from us. In terms of the inventory, on an average, we hold an inventory about 30-35 days. Other than a certain seasonality during festive season, etc., when we take it up quickly and then we kind of bring it down. If you look at our last financial year, we did about 4,900 crores of turnover, and the inventory we had was about closer to 480 crores, which is approximately like in the range of 30 days. So most OEMs that we work with, that's how we kind of manage. I mean, we are there with Maruti, we are there with Honda, we are there with Jaguar Land Rover. So across passenger cars itself, we have the luxury segment as well as the mass market. In terms of the commercial vehicles, we are associated with Bharat Benz and Tata Commercial Vehicles, and we have recently entered the electric foray into through Ather two-wheeler and Piaggio three-wheeler. We also have a spare parts distribution outside of the dealership, which is we are the authorized genuine spare parts distributors for Maruti cars, Tata passenger cars, Tata commercial vehicles, Ashok Leyland and JCB.
Raj, can you tell us a little more about the geographies that you guys and geographies and markets that you guys are present in, and perhaps any expansion plans as far as this?
So we started in Kerala. I mean, we were one of the first dealers that Maruti appointed across India, and we were the first in Kerala in 1984. And from then on, we have expanded our footprint across all the other dealerships, OEMs that I talked about, and then we ventured into Tamil Nadu, then we moved into Karnataka, and very recently moved into Maharashtra early this year. Very clearly, we've been expanding, and that will continue. The inorganic growth in terms of getting into new markets is one of the key strategies for the next year. So service being our clear strength, we would like to get into markets where the car penetration is high. So the markets like Delhi NCR, Gujarat, Hyderabad, Telangana, Maharashtra, where there's sufficient car population. Because if you look at our total turnover, 15% is contributed by service, but in terms of EBITDA, 56% is contributed by service. So very clearly, we would like to go into markets where there's enough car penetrations and enough car population, so that we can tap into the service revenues.
Sure. Tell me, what is the top line? Of course, the first half of FY24 has come in at 2,834 crores. What is the kind of guidance you can share with us? So what is the growth momentum you're looking to maintain for the next financial year? And also, you talked about expansion. Is this going to be focused on new geographies only, or new service offerings too?
So I think I'm supposed to talk only about the past figures, and I'm not supposed to talk about anything futuristic at this moment. So if you look at it, we did 4,900 crores in the previous year, which is a 40% growth over the previous year. And that year we clocked a 19% growth over the previous year. And we clocked 2,900, as you rightly said, which is showing a growth. But in terms of the second question that you asked, very clearly new markets, and we are also open to new OEMs. And we are very clear we would like to enter into some of the luxury segments, both in terms of, the JLR, we are already there with JLR, but in terms of the other brands also. And so it's a combination of new market, acquisition of any dealership that we can acquire, and also in terms of the luxury brands. But very clearly our focus has been on service. So today Maruti has a 40-43% shares of the market. So very clearly the service business lies with them. Luxury market is still at about, they sell about 42,000 annually, which is still at about closer to 1% of the entire car market in India.
Right, Raj, final question then. What is the largest chunk of your expenses? And I'm looking at about 4.5% in terms of your operating margins. Can we at least expect you to maintain that? Do you think there's an expectation of an improvement there?
So if you have seen the H1 figures, we have come to 5.1 from a 4.8. So it's on a growth path. And just to specifically answer your question in terms of what has been the largest line item, of course, the employee cost, because we are into services, the mechanics, service advice, frontline sales. That's a single line item. But the EBITDA has grown in H1 compared to the full last year. Again, as I rightly said, we have a lot of strategies in place. But then I'm not supposed to talk about any futuristic numbers per se, but very clearly we will continue to focus on disproportionately growing our service revenues, Used car business is something which is still in the nascent stage where there is a tremendous scope for growth opportunity. And as we said, the organic growth in terms of expanding into new markets through our existing OEMs that we are currently associated with, and also in terms of, getting into an association with a new OEM, which shows growth, a lot of promise.
All right, Raj, we'll leave it at that. Thank you so much for joining us and taking us through, what the company is all about, as well as what we can expect going forward. We wish you the best for the future. Well, on that note, it's time to slip into a short break. But on the other side, we get your expert views on the Bank Nifty as well as stock recommendations. Stay tuned. We'll be back in just a bit.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment,
all you have to do
is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
Welcome back to the F&O show. Let's take a look at what our experts have to say and what they make of the Bank Nifty. Well, Ashwin, I'll come to you on this one. What's your take? How would you deal with the Bank Nifty at the moment?
Bank Nifty looks weaker compared to Nifty. I mean, if you look at the daily chart, Bank Nifty has been moving in a lower low formation since almost last 7 trading sessions. And we have seen a fall from almost 48,000 to 46,000 now. And also, if you look at the last 3 days, it has been making doji candles, which signals some kind of indecision that is looming large over Bank Nifty. So the key strike price to track in Bank Nifty is 46,500 because both call and put writers have been fighting out fiercely. And the one who exits from this strike will probably set the future trend in Bank Nifty. Or just in case if we close below 46,500, we may even see 46,000 in the short term. And if even and 46,000 is also the strike where maximum put open interest is placed. So that will also act as an immediate support for Bank Nifty. Below 46,000, we may even see 45,700. That's where the previous swing low is. But 46,500 is the key strike price to track to get cues about future Bank Nifty direction.
Right. Richit, what about you? For you, what's the trade on Bank Nifty? For a change, it's not doing as bad or worse than the benchmark itself.
Trading around its important support of 46,000, I think that's the level which could be make or break for banking index. Till it is above 46,000, we expect some consolidation in the index for few trading sessions. No, but in case if it breaks that 46,000 mark, then I think 45,400, 45,500, that also could be tested. So overall trend is not positive here as well, along with the Nifty where we have seen the shorter term trend is negative. The same continues for Bank Nifty as well. But in terms of relative strength, if we see, then Nifty is underperforming because of the correction that we have seen in IT heavyweights. So I think relatively it may fall less compared to Nifty, but the trend certainly does not seem to be positive much, and 46,000 would be the important make or break level that we are watching out for.
Okay, that's your view on the Bank Nifty. Let's take a look at all the key stocks which are looking at gains in open interest and see whether or not we can in fact decipher a trend there. So let's pull that list up and see how things are panning out. So you do have Bajaj Auto as the only name on that list which does have an increase in open interest towards longs. Otherwise, it's shorts for TCS, Cipla, Dr. Lal Path Labs as well as MRF. Moving on, let's take a look at all the stocks which are seeing unwinding in OI. And we do have Aurobindo Pharma, Tata Steel, Tata Power, Coforge and Jindal Steel. All of them are looking at a decline in their underlying, and they're also looking at declines in their respective open interest. Of course, one of the few of the most interesting ones are from the Tata Group, and we're seeing all sorts of changes of late over the last 2 to 3 weeks around Tata Group. Of course, in the latest is the big bulk deal that happened in TCS today. So that, of course, will be in focus. But let's take a look at what our experts are recommending for us in terms of trades. Ruchit, trades as well as stocks on your radar?
So IT is one space where the weakness is there. Some stocks are witnessing unwinding of long positions, and even some stocks are showing short built up. Tech Mahindra is on my radar where one can look for creating short positions over there. So of late, when we witnessed a price up move in many of the IT names, Tech Mahindra has been in relative underperformance even when the entire trend is positive trend was a bit positive for the sector. So I think now when the trend has turned a bit of corrective in nature, this underperformance could continue going ahead. So Tech Mahindra futures one can look to short with stop loss about 1290 and expect targets around 1220.
Ashwin, what about you? What are your top trade recommendations this morning?
I have a couple of stocks, the first being Godrej Consumer. So Godrej Consumer, since the budget day, it's been consolidating in the 1180 to 1280 range. So it's almost 100 points range that we are seeing in Godrej CP. And just a couple of 3 days back, we also saw a bullish engulfing formation on the daily chart, which is considered to be a bullish reversal signal. And this formation was also at the 50 EMA support. And I think from there, after the bullish engulfing formation, we have seen some uptick in the stock as well. We could see some fresh longs that were being added in this stock. So yesterday we saw, I think the OI was around 6%, the price change was around 2%. So there are some long additions in the stock as well. So I think my recommendation would be to buy Godrej Consumer at 1230 with a stop loss at 1200 for a target of 1280.
That's the call coming in on this. Richard, just very quickly before I take Ashwini's last call, have you been tracking TCS, Richard, at all? If you've got a strategy on that one, because it's seen a pretty big fall today, but it seems like that's may potentially be only restricted to today.
I think it's more because of that block deal that we have seen at lower levels. But the broader trend for the stock, the mid to long term trend is not much negative. I think we may see some more dip in the stock in the short term in the range of 3950 to 3970. But that's a very crucial support where swing lows are placed. So there's no trade setup at current levels. But I think if we get lower levels around 3950, then the risk reward ratio could turn favorable to take some contra buys over there.
Okay. And I believe, Ashwin, you have one more on Interglobe Aviation. Can you take us through that as well?
Yeah, so Interglobe Aviation, I think it took resistance around the 3,300 zones twice since last 1 month or so. So it tried to go past the 3,300 mark in the morning, but it is slightly trading below it. Also, the call writers, so the maximum call open interest is also placed at the 3,300 strike. And I think the chances are that we may see a good rally in Interglobe if call writers exit from the 3,300 strike in Indigo. And also, we could also see some fresh longs that are added in Indigo as well. We could see the OI is up around 3%. The price is up around 2%. So there are some fresh long additions that we are seeing in Indigo futures as well. So my recommendation would be to buy Indigo March futures at 3,300 with a stop loss of 3250 and for a target of 3,400.
Right. Thank you, Ashwini. Thank you, Ruchit. Great talking to both of you. Indigo is a stock that's looking good. Remember, a lot of fundamental analysts as well in the last couple of weeks have been recommending Indigo. In the meantime, we're leaving the markets a little down and under, but there's a lot more action on the other side, so stay tuned to NDTV Profit.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target, what's good for long term, when to buy, when to sell. How do you stay ahead of all the financial noise to achieve your dreams?
Good morning, welcome. You're watching the small and mid cap show here on NDTV Profit. I'm Harsh Saita. With me is Mahima Vajrajani. And we're going to firstly take you through what markets are up to before we quickly move on to the managements who we've called on the show today. First off, with regard to the Nifty 50, we're trading very close to the day's low. In fact, just off the day's low now, 0.9% lower in trade. Pressure across the board. There's no single pressure point, at least in trade today. You're seeing The losses, or rather the points decline, largely led by a TCS, which is contributing roughly 30 points to the declines. But outside of that, you're seeing the breadth of the market also extremely weak. You're seeing 200 points down on the Nifty, but look at the breadth. 535 to 1473. That's indeed a weak breadth. But I'll stick with the larger caps and the contributories. Let's pull up something like a TCS, a Reliance, a Larsen & Toubro, Infi, all four of them pulling their weight down on the index. We're seeing roughly almost 90 plus points contributed negative by these four stocks alone. So essentially that's where the pressure point is coming from. In terms of where the broader markets are doing, the Nifty mid cap down around 1.5% in trade as we speak. So pain there as well. Again, the breadth over there extremely weak. 92 declines on the Nifty 100, Nifty mid cap 100 I mean, of just about 8 advances. So extremely weak breadth as we see it. The Nifty small cap as well seeing very similar trends, seeing 200 plus declines to just about 50 advances that we are seeing on the Nifty small cap, 1% lower on that one. So broader markets also continuing to face some amount of pain, but that's currently the texture of it. In terms of specific stocks, I'll just quickly highlight a few. You have some positivity. Something like an HG Infra is doing fairly well in trade, 2.8% higher. Poonawalla Piramal Pharma is doing fairly well. Poonawalla FinCorp also up just about, but Piramal Pharma up 3.5%, so that's a positive. You have a positive Jefferies note with a buy call, 160 rupees being the target price. Poonawalla Fin did well, but we're at the day's low at the moment. Management change there on that one. So those are some of the positives. In terms of the negatives, TCS definitely among the large caps leading the pack. You're also seeing some pain in something like a Paradigm Phosphates and AB Sun Life, seeing some amount of a reaction of that OFS announcement, and Aegis Logistics is also down roughly 3% odd. That's what the texture looks like. In terms of some of the other movers, I also want to quickly flag off Interglobe Aviation up around 1.5% in trade today on the back of positive note coming in from Kotak Institutional. But we have the management of Sangvi movers, that one in focus. Now Q3 is behind us, but let's talk about the capex side of things. One, they've done roughly 400 crore of capex versus the 450 crore that they've guided for the full year. Now, the other piece, of course, is they've ventured into EPC. Very small component, especially in the first half of FY24. But what are they going to do in the second half? We have with us Rishi Sangvi, who's the MD at Sangvi Movers, now joining us. Firstly, welcome to the show, sir, and wishing you a very good morning.
Good morning, and thank you for having me.
Right. So, Rishi, talk to us. EPC currently contributes roughly just about 12 crores. It's just a starting point. Out of the 450 crores that you've clocked for 9 months FY24, where does this go, say, in FY25? How does this start to meaningfully contribute to top line?
Yeah. So, going forward, we believe that EPC will be a significant revenue contributor to the top line. Next year, we see almost 30% of our top line coming from pure play EPC work. And going forward, maybe 2 to 3 years down the line, our crane rental business and our EPC business would be on par.
Right, Rishi, Mahima this side. 30% is what you're expecting as contribution to revenue, but from what I believe is that the margins in EPC businesses are a bit lower, and at present your margins are around 69 to 70%. So do you think your blended margins because of this will go down?
Most definitely, Mahima. You're absolutely right. We will witness lower margins on the EPC business. But, you know, we have a unique value proposition in the entire execution chain of EPC. I want to clarify that we are currently undertaking turnkey EPC projects for the wind industry, specifically the renewable wind energy, where we have our vision is to do something called from concept to commissioning. So concept to commissioning, where the IPP is only responsible for choosing the WTG model, and Sangvi Movers would undertake the entire execution of building of the wind farm.
Okay, I take your point. You have a significant presence in wind, but I want to try and get a sense on some of these numbers. So my first quick question is, largely you're going to be in wind, is that right?
Yes, we will be doing some project EPC as well, but the significant portion would be coming from the renewable wind energy side.
Understood. And you are suggesting 30% of top line being contributed by the EPC business alone. So firstly, you're roughly anticipating a top line of 600 odd crore as we go on an annualized basis for FY24. Where does it go in FY25? Just to try and get that number, that what kind of an EPC number, or rather what kind of a revenue number will come from EPC?
Right. So, generally we don't give any forward guidance as a management.
I understand. Yeah.
But I would put it this way, that the EPC contribution would significantly increase the top line.
Okay. And before I hand it over to Mahima again, what kind of margins EPC standalone would you be looking at?
So again, they are in double-digit margins, but significantly lower than what our crane business would yield right now.
Right.
The unique value proposition that we add in the wind EPC space allows us to enjoy a certain premium, which increases the margins.
Right. Mr. Sangvi, your debt at present is around 293 crores. Do you expect this to increase, to sustain at the same level? What are the debt levels that you're looking by, like, let's say by FY25?
So we, this year we have done a 400 crore capex plan, and we have still maintained a very healthy debt to equity ratio. And we also have significant cash reserves in the company right now. Going forward, subject to board approval, we would be looking at doing similar numbers next year. And I don't see the debt to equity going up the next year as well.
Sure, take your point. Now with regard to your current existing business, how is it really shaping up? You've done a bulk of capex. What's the kind of capex guidance for FY25? What's the thought process there?
So again, it would be subject to board approval, but there is tremendous demand across all sectors, and we see ourselves doing a similar capex to what we have done this year.
Understood. And how would the capex largely be funded? Is there a thought behind that?
We fund our capex with 30% cash internal accruals and 70% of long-term borrowings from the banks. Even having said that, we generate a lot of healthy free cash flows. Therefore, the debt to equity level will not go up next year, even if we do a similar capex.
Right. And in terms of segment mix, around 49% comes from wind at present. So then, let's say by end of FY25, where do you see this segment mix going?
Again, for us, our average blended yield in the crane rental business, the yield we get from is sector agnostic. So we sort of build our order book based on what the demand is and what the order visibility is. But we'd see a similar mix for the revenue contribution next year.
Point taken. Now, I want to try and understand with regard to, again, your ROEs as you continue to ramp up and scale up in terms of capex. Would ROEs sustain above the 15% mark? Is that how one should look at it? Will ROAs, which are very impressive, continue to be as is as you scale up, or would you also look to improve some of those metrics?
I think a better way of answering your question without giving any forward guidance would be to say next year, even if we do a significant amount of capex, we would still be able to maintain our EBITDA margins and our average blended yield.
Right. And your capacity utilizations at present stand at around 85% to 86%. So where do you expect these going by the end of FY25?
So in an asset utilization business, a 90%, 85 to 90% is a theoretical 100% utilization. So we are actually maxed out at our utilization numbers. It could improve by a few basis points, but it would be similar in the next year.
think, Mr. Sanghvi, I think what Mahima meant to say was, is that kind of number sustainable? Can we continue to see an 80+% kind of number on that capacity utilization?
Look, every sector of the economy is firing. There is tremendous amount of demand. There is a heavy capex cycle both on the private and public side. We have a general election also coming up, and there's significant focus on infrastructure development. So I am bullish on the economy, and I do see that kind of demand coming in next year, where we would maintain similar utilization levels.
Right, Mr. Sanghvi. Well, thank you so much for speaking with us at NDTV Profit. That was Rishi Sanghvi, MD of Sanghvi Movers, who guided us that 30% of revenues, let's say by FY25, will flow from the EPC business. But it's time to slip into a quick break, but don't go anywhere. We'll be right back.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash, made from 51 precious herbs.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
So it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the
Don't listen to anyone and everyone.
Welcome back. You're watching the Small and Mid Cap Show. Well, the next company in focus is Mukka Proteins. The company is one of the key players of fish protein industry in India, involved in manufacture and supply of fish meal, fish oil and fish soluble paste. Mukka Proteins is also amongst the largest exporters of fish meal and fish oil, which constitutes around 58% of FY23 revenue. With a purchase order worth now, they've recently received a purchase order of around 15 crores from Avanti Feeds, and the order book currently stands at around 150 crores. And to discuss more about this order execution and what the company's future outlook looks like, we have with us Mr. Kalandan Mohammed Harris, CMD and CEO of Mukka Proteins, who joins us now. Welcome to the show, sir.
Thank you. Morning.
Right. So, so my first question to you is that your exports currently are 58% of your total revenue. Where do you expect this mix to go by, let's say, by FY25? Do you expect your exports to increase, or do you plan to expand geographically in terms of domestic market?
Well, the last, if you see 2023, we did overall 1,177 crores. With the EBITDA margin of 8.1%. And the last 6 months, if you see last half of 2023, we did around 606 crores, and with the export revenue of 65.89%. and a domestic portion of 35%, where the EBITDA is about 10.11% and PAT is about 5.44. So we expect better growth as well in the coming financials as well.
So what could you define better for us? Would it be maybe 20%?
We expect, but not certain on the numbers, but we expect much progressive levels apart from these financials.
Okay, sure. And how would the split be in terms of export versus domestic? And even within export, are you looking at newer geographies? Is that where the growth is coming from, or existing geographies?
Yeah, existing as well as the newer geographies. See, if you would see, like we have a pending, as on today, we have about 175 crores of orders, which is to be executed in next 45 days or so. So, the new season coming in now across Southeast Asia and India, that is domestically. So we aim to get more orders as well in coming quarters. So the revenues should be also fair revenues coming in that sense.
Right. And your total debt has seen a rising trend. Like in FY22, it was around 175 crores, which is now gone to 325 as of September. Are there any plans of debt reduction, or do you think that this will go on rising? What is the trend that you're observing?
Well, you see, if you see, we don't have much borrowings. The debt you can see, it's only the packing rate, what we maintain the stocks. So the ratio, if you see, the stocks are more than the debts what you see in the books. So in the next, the March ending balance sheet, you could see in detail process of that. So if you could say, we hardly have borrowings as a term loan. We have hardly a few term loans we have. So maximum utilization would be the PCFs, the packing rate for the export purpose. So in order to that, we maintain a good huge stocks as well. Yeah.
Sure, I take a point. So I just want to try and understand the context behind orders with regard to your business in particular. What does it mean? Because I'm looking at a top line which is roughly at 600 crore in Q2 end. And you have a 150 crore order book. Does that mean you'll execute pretty much the entire order book in Q4? Is that how one should look at it? And how is it relevant, important? Does it mean that you'll have recurring orders coming through? Could you give us some context?
Yes, see these orders which you are seeing now, 150, but as of now, as of today, it's about 175 to 180 crores. So this is this has to be executed by end of April. So there is a recurring orders as well. Maybe see this we take 2 months order in for planning our shipments and schedules and things like that. So May and June, you can see further orders coming like this, more than that perhaps. So there will be recurring order all the time, and we maintain the these orders to execute our supply chain and shipping schedules and things like that. Yeah.
And would you continuously keep updating exchanges with regard to some of these orders that you'll keep winning? Because the last one we saw was for 15 crore and the cumulative order was 150 crore. That's why.
Yes.
Okay.
We do that.
Okay, sure. And lastly, as you scale up, does that also mean that your margins will start to creep up? What's the raw material cost like for you? And therefore, what kind of impact does that have on margins as you continue to scale up?
See, if you could say margin, we have healthy margins in the fish meal. Going forward, we have to create a lot of focusing on the enhancing in the fish meal, insect meal sector also, which we have started last couple of years. And that scalability will increase the margin portfolio of our entire ecosystem. So year on year and quarter on quarter, like you see, last couple of years we had a good amount of capex. Now only we are planning and focusing on the production and production of fish meal again in all the strategic locations where we have invested. So that's why you could see, little bit of borrowings here and there. So now only the productions and supply and the inventories what you have done in insect meal, this all will lead to the increase and enhancement of the profitability of the entire yeah.
Right. So, sir, two things. First thing, what does your revenue mix look like at present? And secondly, your revenues have been growing at a CAGR of 39% since the last 2 years. So, is this 39% sustainable? Will it go upwards of this? What is the trend that you're expecting?
See, our revenue is right now mix of primarily of fish meal and fish oil and fish soluble paste. So we have 3 products in our fishing protein. So going forward, we expect to have a 5% of insect meal based protein portfolio in our product. So that will have a huge impact on the profitability in the coming quarters. You can see. But the scaling up, what we do is in the insect meal is the circular economy which we contribute, and where the insect the food waste is being converted into the proteins, and it has been catered to all the pet feeds, and which is a new kind of system we adopted now, and it will really have a milestone achievements in the coming days. So we are the largest insect breeders and converted proteins into insect in India as of now. So we have a great vision to increase this portfolio. And with regards to growth, if you say the PMMSY and the Prime Minister Matsya Gandha Yojana, which is also contributing a huge significant growth towards our industry, and the Blue Revolution 2.0, which the aquaculture is called supposed to call as a rising sector now, which is PM's pet project now. So all these contributions come together. So we'll have a greater margin and profitability, we hope, in this coming days.
Right. So at present, your market share is around 25 to 30%. By the end of FY25, where do you expect this figure to go?
Yeah, certainly there will be an increase, but I'm not sure how much it's going to be reaching. But it all depends on the how the insect. As I said, the scaling of the profitability would be in the insect. So this will also have a lot of game changing in this our entire industry, because insect meal is something new innovation and which is proven in entire Europe and US. And now India, we are the first to start this as an alternate protein, and as I say, contributing a circular economy as well. So which will have a lot of gaining of carbon credits and subsidies from the governments. And also in the fisheries sectors, if you say, a lot of subsidies has been granted to the fishing sector in the recent budget as well, and the central budget as well as the state budget. So I hope everything will get together, and we should be having a good ahead of numbers here coming on.
Sure. I have a couple of quick questions. One is, as your capex comes on stream, where does your capacity utilization go in FY25?
Well, see, we have installed capacity. We are only running 50% of the capacity, as you say. This is a seasonal industry, so we maintain always the double capacity. So the advanced fishing vessels across Oman and Indian coasts, so all these things with the new technology we are going to adapt. So in this, the production and the process also will be increased. So here the selling is not a challenge, only because across the world this fish protein is a shortage now. So we are damn sure that we are going to create a good market space within us and create a good portfolio in terms of percentage as well.
Okay. Any number you can put to that?
Well, it's too early to say.
Okay, fair point. And with regard to your top line, around 1,200 crore in FY23, where does it go in FY25?
At least, minimum of 10%, 15%, 10 to 20%, we have still days more to come. So
over both years, right, is my guess. Yes. So maybe a 10-15% in FY24 as well, and then a 15% compounded on FY25.
I'm not sure about the numbers, but still,
okay. Sure. And with regard to margins, can we say it will go towards 15% gradually as you continue to do higher margin business? You spoke of profitability.
overall, you want to say overall numbers?
Yes, yes.
Yeah, should be.
Okay, okay. And as early as FY25?
Yeah, still again.
Okay, okay. Perfect. Okay. Thank you so much. Thank you so much, Mr. Harris, for speaking with us. It's a pleasure talking to you. Thank you for that perspective. With that, completely out of time on this edition of the Small and Mid Cap Show from Mahima, myself, everyone who puts the show together. Thanks so much for watching. Stay tuned to NDTV. More on the other side.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash, made from 51 precious herbs.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target, what's good for long term, when to buy, when to sell. How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Good morning and thanks so much for joining in. You're watching NDTV Profit. This is Ask Profit and my name is Alex Matthew. With me is Smriti Chaudhary and we'll take you through the next half an hour or so of trade. Now, take a look at the markets right now. You've seen that the benchmark indices have been under pressure all of today. In fact, the Nifty 50 trading below that 22,000 mark, which it held above in trade yesterday, is down about 0.9% as we speak. And there continues to be pressure in the broader markets as well. And you have the mid-cap index that's down about 1% or so, more than 1%. And you have the small-cap index, the small-cap 250 index is down about 0.75% or thereabouts. Now, you have to understand that despite the fact that you see more cuts on the benchmark Nifty 50 today, the broader markets have seen more of a sell-off in the recent weeks. In fact, the small-cap index is down over 10% at this juncture from the peak. And there is, in fact, pressure in a few specific sectors. The IT sector as a whole is down about 1.8. The index is down about 1.8%. A few of the stocks that are leading that decline, and we're going to talk about one of them in particular. You have the FMCG index is also down about 1.8% or thereabouts. You have the Nifty oil and gas space that is under pressure as well. Media is down. You have pharma that is down over 1% or thereabouts. You have healthcare that is down over 1%, and you also have In fact, the PSU banking index is down. In fact, all of the indices are down, but you have some that are losing less than others. And among them, you have the Nifty Bank that's down only about 0.25% right now. But we are focusing in on one particular stock that is down in the dumps today. It's Tata Consultancy Services, and it's proving to be a bit of a drag for the benchmark Nifty 50, but also for the IT index. And that's because of a couple of trades that took place, Smriti, this morning.
Yes, we have gathered from our sources that Tata Sons is looking to sell stake.
Has sold.
Yeah, has sold actually now in Tata Consultancy. And the idea is for Tata Sons to pay their debt so that they won't have to list. But just to give you an idea, they've sold 2.34 crore shares at a price of 4,001 rupees per share. Now, we're seeing this impact on the stock itself today, which is down 3% in trade today. So the question is this a buying opportunity for investors? Should you now enter the stock? And for that, we'll get our guests in. We have Rohan Mehta, founder and portfolio manager at Total Wealth, and Osho Krishnan, senior research analyst and technical derivatives at Angel One. Welcome to both of you, and thank you so much for joining us. Rohan, I'll start with you. Would you suggest from a fundamental long-term perspective, this sort of price correction is an entry point for investors?
Hi, good morning. See, if you see TCS along, we had seen 4 years of, now this is the 4th year of a consolidation with, decent numbers which has been posted, and the whole IT pack for the same, excluding some of the mid-cap IT's name. I believe that still, if you see this, not a correction, it is just cool off from its all-time high. But still, it has been a laggard for Nifty 500 outperformance if you see on the scale of outperformance of the market. I would still suggest and wait for the numbers which are going to come for this quarter and then come to any decision. It's a great company, no doubt about it. But we believe that still underperformance of this company will continue for at least 2 to 3 quarters. So we will wait and then come to any decision for this quarter numbers.
Right. And Osho, would you also suggest the same, to wait and watch for the stock, or should you buy at these levels?
Very good morning, Smriti. Well, if I'll be talking about the technical developments, then the cycle of higher highs has been maintained in TCS. Yes, there has been some kind of plunge, a massive plunge in TCS being a giant IT company. There is 3% correction that has happened, but these things should be considered as a healthy one. Although the company has sold the stake in the company, so that is something that can be having some repercussions on immediate basis. But if I'll be talking about medium-term perspective, then this counter looks very positive. On technical front, 3950, 3980 is the zone where one should wait for some accumulation. And once, if there will be any kind of dip towards 3950, 3980, then definitely one should try to gauge momentum or accumulate this counter for short to medium-term time frame.
So that's the view on Tata Consultancy Services, and you just saw on your screen the moving averages and where the current market price is in correlation to that. Let's take the questions now. And by the way, I forgot to mention, but I think a lot of you already know this. This show is geared towards getting you answers to all of your stock-related questions. So if you're tuning in for the first time, you can send us your question on WhatsApp. I'd encourage you to tell us your name and where you're tuning in from, so that you can know that this question is in fact yours that we're asking. You can also write to us on any one of our social media platforms, and indeed on YouTube, which is live right now. The first question we're taking is from Saurav. He's writing in from Delhi, and he's bought SBI cards at levels of 879 and Happiest Minds at levels of 1084. Should he hold or sell is the question. Osho, I'll come to you on this one. Based on the charts, what is the recommendation that you would give him?
See, firstly, for SBI cards, this counter has been into a corrective phase. From the zone of approximately 950, there has been no looking back to the counter, and from there onwards, it has came down towards the zone of 700. But if I'll be talking about the historical support, then the same zone near about 690 to 700 has acted as a decent support zone for this counter. So from here onwards, I'm expecting that the downside is very limited. More 20 points of downside can be seen in a further correction zone, but overall we can expect that from here onwards a sign of reversal or relief can be seen. But on the higher end, a massive resistance is present around the zone of 760. So until it surpasses the zone of 760, we are not very much bullish in this counter. But the time it crosses 760, from there onwards, we can see a very strong reversal for immediate upside target of nearly 920 to 950 levels.
All right, got it. Next up, we have a question from Mohit from Ludhiana, and they're talking about the stock NMDC. Now, this is from a longer term perspective, Rohan. So, they've bought the stock at 136 levels, and post the demerger, they also got off NMDC Steel. They got 500 shares of that as well. The time horizon is 2 years into the stock. If you look at the stock trajectory of NMDC, in the last 1 month or so, it's only been on a downward trend. But Rohan, from a longer term perspective, a 2-year perspective, what would you suggest an investor to do with these, both the stocks now, NMDC Steel and NMDC as well?
So not tracking NMDC Steel, so not much aware about it. But for NMDC, I think so. There is a sure turnaround which we are seeing into the company. The numbers have been better. The price also has been, supporting the numbers. I think so. For a long-term point of view, NMDC could be a great hold with a better number and a turnaround story. Also, investors should expect a good consolidation period also for 1 or 2 quarters, because the stock has done exceptionally well for last 2 to 3 quarters. So positive on NMDC, no idea on NMDC Steel.
We've got NBCC that a view is being sought rather. Parag Joshi is asking about this, and also Engineers India. He's holding on to both of these, NBCC, which he's bought at levels of 67.25, and Engineers India, which he's bought at levels of 142 or thereabouts. Should he hold or sell? Because he's not really given us a time frame. I'm going to you, Osho, based on the charts. What should he do with these two?
See, firstly, NBCC has seen a very drastic vertical rally from the zone of 80 towards 180 odd levels, and from there onwards, it has even retracted more than 50%. So I'm expecting that on the downside, the technical developments have partially cooled off. The counters or the technical developments have came down towards the oversold territory. So I'm expecting that from here onwards, the downside is very limited. Approximately 95 to 100 is the very strong support zone for this counter. So one should definitely hold it for a short to medium term perspective. On the higher front, I'm expecting a target of nearly 135 to 140 from a short term time frame. And which was the other counter?
I'm just trying to...
Engineers India.
Engineers India, yeah, that's right.
Yes. For Engineers India, again, this counter have seen approximately more than 50% of retracement of the rally. But from here onwards, the downside is again not very far away. I am expecting 175 should be acting as a very strong support zone. Two reasons. One is the 200-day SMA is placed around the zone of 170. And second, the counter have already seen a decent correction. So time-wise correction has been seen. This counter has cooled off from the technical parameters. So I'm expecting that from here onwards, there will be a gradual move, not very aggressive on the targets, but on the gradual move, the primary trend is likely to continue. 210 to 220 is the immediate resistance for this counter. Once it surpasses those zones, then one can expect 250, 60 kind of a targets.
All right. The next counter that we're talking about is Hindustan Unilever. This one's from John from Chennai. Now, Rohan, we've seen the stock price in the last couple of sessions, actually more than that. It's been on a downtrend, and it's down today as well, about 1.5%. But from a longer term perspective, here also the time frame for John is 2 years. We've seen a bit of a slowdown in the FMCG sector, but do you think that story is going to change? And how much do you think HUL is going to benefit from it? And would you suggest accumulating at these levels if somebody has already bought into the stock?
Yeah, see, HUL has a very unique story. It has been a great compounder, great company. But now what is happening, if you see across, is the startup companies onto FMCG has come over so much, and people want different choices to look forward for. And HUL doesn't give a lot of choices for it, looking forward for some unique blend of products. It could be, from environmental friendly to, a lot of 100 of things. And, if we see our choices of what we have bought in last 2 years, it would be much unique choices in comparison of Hindustan Unilever. So on that zone, I think so we need something turnaround into the story, which we are not finding. See, numbers are decent. It has done a 10,000 crore of PAT. That is brilliant because it's a pure supply chain story. But as of now, if you see on revaluation side, we don't see anything into it. So as of now, we would be on the sell side, no for accumulating also Hindustan Unilever for longer period of time. Let's wait for the story and then decide.
Okay, fair point. The next question is from Raghuram Patro, who's asking about ITC as well as Tata Power. ITC has been bought at levels of 404, which is below the current market price. And he's got 5,000 shares. And he's got Tata Power 1,000 shares at 392. He's looking for a medium-term view. I will come to you, Osho, on the charts. ITC is still about 100 rupees or thereabouts away from its all-time highs. What should the medium-term strategy be, and also in Tata Power?
See, overall, ITC have seen a very strong rally in 1.5 year kind of a time frame. And from the past 8 months, the counter has been hovering in a very narrow zone of approximately 460 towards 400 odd levels. But if I'll be talking about the retracement, then the retracement still shows that the counter has the potential to test the zone of 380 in the coming future. That should be acting as a very strong development for a bullish market. So I'm expecting that even though if the counter comes towards 380 odd levels, one should definitely try to accumulate it for a longer duration, because on the price extension, the stock has the potential to firstly retest the 440 odd levels, and from there onwards it can even go towards 490 followed by 540 from medium to long term perspective. So in shorter duration there can be some consolidation or correction that can be seen in ITC, but for a longer duration one should definitely try to accumulate it in a staggered manner till 380 odd levels.
Got it. Next up, we have a question from Raj from Chennai, and we're talking about HDFC Bank. Now, this is a common question on this show. Pretty much every day we have questions around this counter. Rohan, this one specifically, for the longer term perspective, should you buy on dips for HDFC Bank? And if there are any picks in the PSU sector?
No. I asked, let me clarify, so sorry, because maybe my message wasn't clear. I asked him whether he's holding any other banks, and he said that he's holding about 4 banks. By the way, these are all public sector banks, and he's making a decent profit in all of them, about 20% or thereabouts. And I think he's wondering whether to add HDFC Bank at the current level and to keep buying on dips. So that is a question. Should he do that, Rohan?
So first of all, buying at dips is a way I don't recommend anyway. It's like a half confidence we are showing according to a stock, specifically in a SIP way of a mutual fund or an ETF. It's still okay. So coming back to HDFC, what I'm not recommending is only thing that we've been very internally. We did scuttlebutt for 3 months of what HDFC is happening. The two merger of the culture of HDFC Bank and HDFC is going to be still 1 or 2 years ahead of the time. It will take still the merger to happen. Also because of the merger, I don't know why it was been done, but because of that, there are certain complications onto the NPA side and certain complication to the money management side. So for that all reasons, I would wait for the time where the things are still getting better to it. So as of now, I would not accumulate and not recommend also to the portfolio. Rather, I would go forward for a PSU bank or an Axis Bank or an ICICI Bank.
All right, fair.
Got it. We'll slip into a short break now, but we'll take more questions on the other side. Stay tuned.
Co-presented by Patanjali Honey, world's best Patanjali Honey, 100% proven on more than 100 parameters of purity.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Welcome back. You're tuned into Ask Profit. Let's start with the questions. Next up, we have a question from Bhaskar from Telangana. This one's on Canfin Homes. They've already bought into the shares at a price of 813 a piece. It's currently trading at 703. So quite a bit of a, I mean, they've bought it at elevated levels clearly. Now, from a shorter term perspective, Osho, would you suggest holding on to it? And what levels should you watch out for in this specific stock?
See, overall, the NBFCs have seen a kind of a correction. They are into a correction phase as of now, and I'm expecting that this should continue for coming 1 to 2 trading weeks. For Canfin Home, 700 is the last psychological mark that should be acting as a support zone, below which it has the potential to even plunge towards 660, 670 odd levels. So I should it's advisable to keep a strict stop loss of 700 odd levels. If there will be any kind of an authoritative plunge below 700, then another 30 to 40 points of fall can be seen in Canfin Homes for short-term duration. For longer duration, yes, one can definitely hold to the counter because the downside is limited to 5%. And from here onwards, if there will be any kind of reversal in the overall NBFC space, then this counter has the capability to move towards the zone of 720, followed by 750 odd levels. But that too, if it reverts from the zone of 700. So better to keep a strict stop loss of 700 and then one can definitely keep this counter for short-term period.
All right, Rajendran's got the next question. He's asking about Natco Pharma, if we can pull up the price right now. He's looking at the next 3 to 5 years as a time frame, and he's looking at buying this based on the fundamentals. The question is for you, Rohan. How do you look at this particular counter as compared to its peers?
Yeah, Netco Pharma, if you see on specific, in comparison, as you were told rightly, that into the comparison of the peers, I think so still a lot of other companies like Zydus Life, not very extremely peer-to-peer comparison, but on the mid-cap side, Netco Pharma, in comparison of it, a lot of other companies looks good. So maybe Zydus Life could be a best choice in comparison of Netco Pharma.
All right. Next up, we have a question from KG Vargasi, and this one's on PVR Inox. They've bought the share at 1,677 a piece. Elevated levels, Osho. Would you suggest holding on to this counter from a shorter term perspective?
See, overall, the counter has given a breakdown from the zone of nearly 1,350 odd levels, and I'm expecting that on the downside, it has the potential to test the zone of 1,220. For short-term perspective, it is advisable to exit and accumulate it at a lower levels of 1220, 1200 odd levels. But if the view is for longer duration or for investment perspective, then stay invested, try to accumulate more on any dip towards 1200 odd levels.
All right. The next one is on PVR Inox, and we got Mr. KG Varghese. Okay, it's already done. Tata Motors is the next counter we're looking at. Prabhavit from New Delhi is asking about this. Whether or not it can come back to 1,050 levels. What are the technical indicators suggesting, Osho?
See, overall, because of the sell-off in the Tata Group, there has been some kind of pressure for the day in Tata Group companies. But overall, the technical structure is very positive for Tata Motors. And I am expecting that these kind of plunge or these kind of sell-off should be attracting the buyers For Tata Motors specifically, it is having a very strong support around the zone of 925, 930 odd levels. So if there will be any kind of further correction towards 930, one should definitely accumulate it. For immediate upside target will be 990, 1000, and above that one can definitely look for 1050 from medium term time frame, not very aggressive target in short term.
All right. Next stock we're talking about is a new listing, which is Popular Vehicles, which got listed today at a 2% discount to its IPO price. Now, Rohan, if you've had a chance to look at this, we have a viewer, Anirudh, who has bought 1 lakh shares of Popular Vehicles, and they wish to hold it from a 3-month perspective. So kind of a short-term perspective here. But if you can give us a little bit of an idea about fundamentally, what do you think about this counter? I understand it's a short-term query, but still.
Sorry, ma'am, I don't track the company.
All right. Now, since this is the recent listing, we'll move on to the next question. Next up, we have a question from Venkat Ramani from Bangalore, and this one's on 2 stocks, IR Infra and JMR Infra. This for a shorter term perspective, Osho. These 2 counters, do tell us the levels that you should watch out for.
The first counter was
IRB Infra.
IRB Infra. Okay, one second.
Let's pull up the chart. All right. So, in fact, let's pull up the longer term charts also of IRB Infra while we're talking at it. Now, about 1.5% in trade today. And if we can pull up the key levels, it's done reasonably well over the last 1 year. Osho, have you pulled up the chart?
Yes. So basically, IRB Infra has been into a positive trajectory, currently having some kind of profit booking or correction for the time being, but it is having a very strong bullish gap near the zone of 52, 50 odd levels. So any dip towards the zone of 52 should be acting as a initial cushioning for this counter, because on technical fronts, majority of the technical parameters has cooled off from the overbought territory towards comfortable and even towards the oversold territory. So from here onwards, there can be some kind of surge in the counter that can be seen, not very much aggressive on the targets because recently it has seen a very drastic up move, but on the very short term perspective, 62 to 64 should be acting as the first target or resistance for the counter. Once it breaches the zone of 64, then from there onwards, one can expect a target of 69 to 70 in the coming future.
All right. Okay. We've got Venkat. Okay, we've taken Venkat Ramani's question, right? Let's go to IOC, which we've got a question from Beam on, and he's bought at levels of 177. Should he hold or should he exit? The reason I'm going to go to Rohan on this rather than take a technical view is that we've got a significant development in the recent past, and we've seen that the oil marketing companies have been under a little bit of pressure since then, and that is a reduction in the prices at the pump that we've seen. Rohan, what's your view on the fundamentals on IOC and also on the space?
Yeah, see, whatever we had seen, the correction is because of the price rise, and I think so that's a short-term point. They look at the valuations and the way the growth is going to happen. We believe it's a very good stock to hold on to. Everything looks very positive, from the cash flows to the turnaround story to the valuation currently right now. It's a positive from our side, hold for a longer period of time.
Right. Next up, we have a question from Ashish from Surat. This one's on Crystal share. Now, they say they've bought this stock long back, and they bought 750 shares, and if we can pull up the chart, yeah, it's currently trading at around 4,900 levels. From a longer term perspective, what's the story that you see here? Rohan, would you suggest holding on to something like a Crystal?
Yeah, I think so. It's one of the most fantastic company looking around how the India SME and MSME are growing, and we need a credit rating agency. I'll give you a very shocker thing. There are only 2 companies in US who have AAA plus rating, and if you see in India, there are a lot of companies. We need a rating policies, strong rating agencies in India with strong background. And CRISIL has been the highest share, market share, and the way the company is growing has been fantastic. So it will not do good when the economy will not do good. It's very clear to it. But the economy, what we see in next 5-6 years has been brilliant. So CRISIL will be a very big contender for India growth story. So positive from our side.
The last question we're taking is on Adani Enterprises. This is from Arvind. He's writing in from Andhra Pradesh. He's got 100 shares which he's bought at levels of 3,308. Slightly elevated levels. Based on the technicals, what should he do, Osho?
Definitely Adani Enterprises have seen a very good recovery from the lows, and obviously it is having a cycle of higher highs, higher lows. So the recent plunge that has been seen in this company should be acting as a very strong support zone, because it has reverted from the 100-day EMA on the daily chart, which historically have seen a very strong support zone. So I'm expecting that from here onwards, there can be some gradual and consolidated move that can be seen. But from medium-term perspective, definitely 3,300 can be seen on immediate basis. And above 3,300, even for medium-term perspective, one can even see a higher target of nearly 3,380 should be the first target, followed by 3,450, 3,460 odd levels.
All right, thanks Osho for that. And by the way, standard disclaimer, NDTV Profit, the channel that you're watching, is part of the NDTV group, which is owned by the Adani group. That brings us to the end of this particular edition of Ask Profit. Rohan as well as Osho, thank you so much for the answers that you did provide to our viewers today. And by the way, if you did not get your question answered today, hopefully the other questions that we discussed on the program have benefited you in some way. And we'll be back tomorrow at 11:30 to take more of your questions, so you can tune in at that point. Lots more coming up over the course of the day from Smriti and myself and the team that put the show together. Thank you so much for watching. This is NDTV Profit.
Co-presented by Patanjali Honey, world's best Patanjali Honey, 100% proven on more than 100 parameters of purity.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target, what's good for long term, when to buy, when to sell. How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Markets continue to extend losses. Nifty falls below 21,900, while the Sensex sheds 500 points, trading near 72,100. It's a sea of red among sectors, dragged by IT, pharma and oil and gas, while metals reverse gains to trade in the red as well. And shares of TCS slip over 3% in trade after 2.02 crore shares changed hands in 5 large trades. Stock hits lowest levels since February 27th. And Japan exits world's last negative rate regime. Bank of Japan hikes interest rates for the first time since 2007. Hello and welcome. This is Hot Money. I'm Agam Vakil, and in this show we take you through all the stocks which are buzzing in trade and all the stocks which have been the flavor of the season. But before that, a quick look at the markets and how they're faring. And it's been a quiet day of trade. Sure, the Nifty is coming off by around 1%, but on the whole, overall, you haven't seen too much of a change. Besides that, and as I've mentioned, even in terms of the other benchmarks like the Bank Nifty or the Fin Nifty, they also have a relatively quiet day. It may look choppy, but these moves are not very, very extreme. And as far as the the Fin Nifty is concerned, that will also be in focus because of your weekly options expiry in today's day of trade. So that's something that you can keep an eye on. And let's talk about the Nifty then. Let's talk about the constituents of the Nifty, the contributors, where you have that pull and push coming through. Naturally, considering the Nifty is losing out as much as 1% right now, a lot of that pressure is on account of Reliance Industries. Sure, one might expect TCS, which has a relatively heavier cap and is relatively heavier weightage on the Nifty, is also weighing down on the index. Infosys as well is down, along with something like an L&T. So if you just consider those 4 counters, that's the bulk of the losses that you're seeing as far as the Nifty is concerned. What is also providing a marginal support to the index is Bajaj Finance, HDFC Bank, and something like a Bharti Airtel. But all in all, another week day of trade. In fact, the Nifty now is inching further towards the mark of 21,800, where a lot of technical analysts have suggested that that's where the support is. What about the broader markets? Let's take a look at that as well and see where, in fact, there is a lot more traction there. So the broader markets are clearly moving in line with the Nifty. In fact, a little bit of an underperformance. So the mid-cap index is down around 1.3%. And something like the small cap index, that is also under pressure at the moment, and we are looking at a decline of around 1% there as well. Even in the broader markets, we do have a lot of weakness in something like a Patanjali Food. That's down around 4.5% right now. L&T Technology Services is down around 3.8% as well. It's very recently raised funds. And Astral is under pressure. That's down around 3.6%. Along with something like a PFC and REC. PFC and REC, of course, which have been the flavor. And in fact, the top gainers through the course of the last 12 months are now genuinely starting to see not just some profit taking, but also a little bit of weakness seeping in over the last couple of weeks coming through. So we'll be watching out for that. On the gaining end, we do have Paytm, which is up around 5%. And besides that, not too much to speak for as far as your gains go. Something like a Balakrishna Industries, Max Financial Services, Oberoi Realty, all of them gaining less than 1%. That's it. What are we going to talk about in today's edition of Hot Money? Well, we will be talking about TCS, HDFC Bank, Piramal Pharma, Aditya Birla Sun Life, as well as Philips Carbon Black, that's PCBL. And we will also be taking a stock of how things are panning out for the two-wheeler companies as well. And to take us through that, well, we have with us Vineet Bolinchkar of Ventura Securities, who will be joining us. Vineet, good afternoon. Thank you so much for joining in. But Vineet, before I come to you, let me address what's happening with TCS. And of course, the shares have come off by quite an extent. And this is largely because of those block trades coming through. But I'm going to say no more and get in my colleague Vishwanath to give us an update on this one. Vishy.
So Tata Sons is likely to have sold about 2.3 odd crore worth of shares in TCS. Now, this was, of course, reported last evening through sources that Tata Sons will be looking to offload some part of its stake. Remember that Tata Sons owns about 72.4 odd percent in TCS, and what they were looking to sell represented just about 0.65%. That was worth around 9,300 crore. Why is Tata Sons doing this? Well, what sources are telling us is that the proceeds from this sale will be used to retire some of the debt on Tata Sons' balance sheet, which will aid in the process of avoiding a mandatory listing. Of course, alongside the share sale, Tata Sons will also have to undergo some amount of corporate restructuring, move the financial services businesses into a separate holding company, just so that they can avoid that mandatory listing, which is, according to RBI norms, supposed to happen before before September 2025. Now, if that is a process that is being followed, then Tata Sons will escape that mandatory listing and will likely have some amount of restructuring within the financial services businesses.
Okay, Vishy, thank you so much for joining us and taking us through the latest update there. Vineet, welcome to the show. Your view on TCS, how are you looking at things? It's currently inching towards the 4,000 rupee mark. Keeping the prospects in mind as well as valuations, what's your take on this counter?
So, we've seen a lot of overhead supply come in, and that has kind of contributed to the, institutional appetite kind of drying up. And with the March end trades happening, we expect it to sell off, and it has logically done so. I think around 3,900 is where we see slight value emerge. The reasons being that, their Q3 has seen a kind of a rebound in performance, and that is expected to gather steam as we go forward from here.
Okay. All right, so that's the view coming in on TCS. The other stock that we want to address was HDFC Bank. Now, we have another bunch of broken news this morning, and we understand that firstly, we have Nomura, which suggests which maintains a neutral rating on HDFC Bank with a target of around 1,625 odd. They say the mortgage business head Arvind Kapil will move out of the bank, and who is of course slotted to join Poonawalla FinCorp. Now, not entirely certain if this is a bad or a good development. The stock, of course, has not reacted. But besides that, we have already known about the plans for the bank to focus more on earnings as compared to deposit growth. That was, of course, what was evident, and that's what came out from the MD and CEO of the bank a few weeks ago in one of the conferences. That's it. We also have a Jefferies view on the latest development, that is Arvind Kapil moving out. And they also have a buy on the bank with a target price of around 1,800 rupees per share. Now, that isn't a significant upside, but at the moment, we do know that HDFC Bank, after the sharp correction since its Q3 earnings, has now consolidated around these levels. The question really is that what do you do? Because there are a myriad views on HDFC Bank at the moment, and there really isn't a consensus around what one could do. I reckon that a lot of analysts on the street are still awaiting more developments, more commentary from the management, more clarity with respect to what their plans could be going ahead. So Vineet, I'll take your view on HDFC Bank. How have you placed there, given what we've seen in the third quarter and all the management commentary coming post?
So, let's take a step back. When the merger happened, there was expectation by Q4 the entire situation would change and they would be back to their growth trajectory. Now, the revised commentary from the board is that, we are going to focus on profitability rather than chase growth. So that is kind of telling you the challenges that the franchise is facing in terms of deposit mobilization. And, if you link this to the interest rates going out for Japan, where they've abandoned the negative or yield control strategy, we are going to see interest rates move up quite a bit from here. Given this kind of a macro theme, I am not sure that I would like to be long HDFC Bank at current levels. My take would be that I would wait for 2-3 more quarters before actually taking a view on this stock.
Okay. So, Vineet, if I can just add another question there. As an alternative to HDFC Bank, do you see value in any other private sector bank or even public sector bank for that matter, if you want to stay in the same sector?
So I think SBI as a proxy to HDFC Bank is a much cheaper franchise, growing well, and is available at very cheap rates. It's only 1.2 times book. And if you add to this the performance of its subsidiaries, I think there is a lot of juice left in the bank for growth to take place.
Right. Well, Vineet, stay with us. We slip into a short break, but on the other side, we talk about a whole list of other stocks that we have already indicated we're going to talk about. Back in just a bit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to Welcome back to Hot Money, and we now talk about the pharmaceutical space. One company specifically, well, we have Jefferies, who has reiterated their buy on, Piramal Pharma, and we have Anushi, who's joining us to tell us a little more about that. This stock is up and about in the trade today. Anushi, what do you have for us?
Right, Agam. If you have to look at Piramal Pharma, about 7% of gains over here, after which it did see some reduction. But the overall gains we're seeing is on the strong note of Jefferies, wherein they have implied about a 47 upside over here with a target price set at about 170. So a couple of reasons stand out for the business. One is the company's expects it to do better than the 12.5% of revenue growth that they have projected for next year. So it is, and the margins also improving in the 16% range compared to the 13.9% range it holds in FY24, estimated to hold in the range. Again, another factor remains on the company's net debt to EBITDA, going down to about 1.6 times by FY26 compared to about 3.5 times, so almost about half of what it was before. Again, if you have to look at the valuations also, specifically the EV to EBITDA multiple for the company over here, it is significantly much lower than what it is in compared to with its peers. Again, what remains on the focus going forward is the company's CDMO mix, which is now driven towards the innovation side of the business. So that is supposed to be margin accretive as well as provide some revenue comfort for the business going forward. However, on the downside though, key debate remains on the company FY25 revenue EBITDA growth guidance that they have given, considering overall macro uncertainty that has been going on for biological firms. Apart from that, if you are to look at the analyst recommendation for the business, 7 buy calls over here while 0 hold and sell ratings, which implies about a positive stance for the business. Onto the stock price also, if you are to look at the current 1-month return, about 10.2% of downside presently, while the 1 year the company has seen about 80% of growth. So overall, this is the picture that has been building for Piramal Pharma if you are to look ahead.
Thank you so much for getting us those updates on the latest there. Vineet, is this under your coverage? Any idea about how things could pan out for Piramal Pharma? And if not this, any other stocks on your radar when it comes to the pharmaceutical sector?
So, our topic in this sector is Muscles Pharma. But before coming to that, let's discuss Piramal. I think that there is a strong order book build-up happening in their CDMO business. And the debt easing is, although positive, the interest rate hike is going to impact it a bit. Second thing is, the earnings growth of the company is going to now start catapulting from FY25 onwards. So from, 1 point some odd loose change, we're expecting the EPS to move to about $6-7. And at 120 times, it's available at a fairly cheap valuation of about 17 to 18 times. And there, I think that, this high growth phase that they're entering into could definitely mean that the stock should get a better multiple. Having said that, I believe that, you should sip into this counter. There is no tearing hurry to get into it right away. You can space out your buying decision over the next 3 months, looking to buy on declines.
Okay. All right. From there on, we move on to another stake sale to bring to your notice, where we have 2 promoter entities of Aditya Birla Sun Life AMC who have offered to sell over 11% stake. Let's get in my colleague Harsh to give us more details here. Harsh.
Well, yes, thanks, Agam. 7% stake sale at least up for grabs right off the bat, and you have also the option for another 4.5%, which may be exercised by the promoters. Now, first off, 2 promoters here in question. One is Aditya Birla Capital, holds roughly 50% of Aditya Birla Sun Life, and the balance around 36.5%, 86.5% promoter owned, by the way. So the balance 36.5% is owned by Sun Life AMC. Now, in terms of the stake sale itself, 3% stake sale expected from Aditya Birla Capital, roughly 4% from Sun Life. On the primary 7%, which is up for grabs, floor price is 450, or seeing a bit of a tank on the stock as well on the back of that. There is also the option of reducing another 4.5% by both promoters, bringing down the stake to 75%. This is largely because they're trying to comply with the minimum public shareholding norms. The minimum public shareholding norms require a minimum public shareholding of 25%. And if both of these sales go through, which is 7% plus 4.5% combined goes through with the option of the 4.5%, then the promoter's ownership will be at 75, and therefore minimum public shareholding norms will therefore be complied with. So that one in focus on the back of these couple of announcements which have come through. Of course, need to wait and watch if the full 11.5% does get divested.
Okay, Harsh, thank you so much for getting us that on the latest on Aditya Birla Sun Life AMC. Vineet, your take on the space, and of course, if you also have a view on this particular AMC. But AMCs in general, if you consider the way things have panned out for these companies over the last, 2 or 3 odd years, certainly not seen any outperformance here. What's your take here?
I think, they've been losing market share among their peers. And that to me is a worrying sign, given the fact that, the industry has been getting quite a lot of traction, given the fact that, portfolio flows remain strong among the retail investors. So having said that, I would not be very keen to buy this stock. Rather, I would look at, in the financialization space, KFIN, which appears to be a very, very strong stock, with 50% upside from current levels.
All right. Okay, so let's move on and talk about another stock, which has actually done very well if you consider how things have panned out over the last 1 year and perhaps even 3 years. And by that, I mean PCBL, that's Philips Carbon Black. What's really happened is that just about a few weeks ago, back in February of, or that would be just last week, or a couple of weeks ago, we had seen the stock make a high of around 338, 339 odd rupees per share. Of course, the stock has since corrected, and it is now at around 250 rupees per share. That said, you still have a lot of analysts on the street who are still very positive. In the last 12 months, even after this correction, it is still up around 119% as we speak, as you can see on your screen there. Of course, the company has also been a beneficiary of a lot of tailwinds which are playing out in favor of the company. One of them, of course, being the Chinese carbon black market losing market share. We've seen a slowdown in capacity additions for a lot of other global players, and it does seem like at the moment it is the Asian carbon black players who are now gaining traction, as well as some sort of a benefit coming in there. Of course, Philips Carbon Black consequently also tends to come through and get that favor, and which is also evident in the kind of numbers in the earnings traction that we've seen of late. But the question really is that after this correction that we've seen from its recent live high, is this a level at which we can in fact go ahead and start nibbling? Vineet, what's your take on PCBL at the moment?
So we have coverage on this stock, and we believe that over the next 2 years, we are expanding. By FY26, we are expanding their sales to double from their FY23 sales. Profits are expected to move to 1,700 crores from about 900 odd crores that they will clock in FY24. So, we are seeing a significant ramp up take place in terms of revenue and profitability. Even as we say this, the business profile is diversified quite a bit. Just from carbon black, they're moving into specific carbon applications for the lithium-ion battery and specific high-end cathodes. And the new JV that they've formed for water, which they've taken over, is seeing them make a marked change into specialty chemicals. Also, the name change from Philips Carbon to PCBL is a step in this direction. And we believe that this stock can definitely be bought. Although the decline from the highs has been rather steep. But you can definitely buy these stocks on declines, and we have a target of 50% to 60% higher from current levels.
Okay, so very interesting one to keep an eye on. And from there on, we move on to the final theme that we wanted to talk about, and that is essentially the two-wheeler space as a whole. Now, after a decent couple of weeks, we've started to see a little bit of consolidation coming in for names such as Hero MotoCorp or something like a Nisha Motors. Even something like a Bajaj Auto, which has perked up its head just a tad bit over the last 1 week or so. But on the whole, we've seen numbers, we've seen volume numbers, and they have been largely in line with what the street has been expecting. And the question really is that what's in store for FY25? Can we see a substantial improvement in the volumes profile based on consumer appetite and the need? Of course, let's not forget the replacement market, and what kind of strength can we expect here? So Vineet, firstly, the prospects of the entire sector, and secondly, if you in fact like a name or two in this particular area as well.
I think very bullish prospects for the segment as such. We don't expect this growth to slow down for another couple of years. Having said that, we believe that Bajaj Auto has moved up rather quickly, and there are some reasons for it also. So they have become the third number in terms of market share for EVs. They've beaten Ather. They're expanding their two-wheeler and three-wheeler distribution to over 200 cities from the current 140 odd levels. And, their export market is also expected to start doing a little better now. So we believe that keeping all these things in mind, Bajaj Auto will do well, but we think it is expensive. We clearly like TVS Suzuki, and we believe that TVS is well positioned to get benefited from the electrification space, and hence we would be buyers of the stocks on declines.
Okay. All right. So that's the view on the two-wheeler space. Some opportunities there as well. But Vineet, we're out of time on the show. So thank you so much for joining us and taking us through your views on the several themes and stocks that we've addressed. And with that, it's also a wrap on this edition of Hot Money, but lots more lined up on the other side. Stay tuned to NDTV Profit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask Profit.
There are different types of stocks: large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
Thanks for tuning into the Portfolio Manager. Here's a show where we try and talk to a portfolio manager about how she or he thinks of the portfolio construct in order to generate alpha over the course of the next 12 to 24 to 36 months. It could be a 1 year to a 3 year view that the portfolio manager may bring to the table. Our guest today is Mr. Ramesh Mantri of White Oak Capital, and we're going to be talking to him about one of the benchmark schemes that he's been leading since inception at White Oak, which is the FlexiCap Fund. And Ramesh, thanks so much for joining on the show. And it's the first time we're having you in a studio, so welcome.
Thank you, Neeraj. Thank you for hosting.
The pleasure is entirely ours. So the idea of taking the FlexiCap amongst many other things, Ramesh, because it gives me a chance to ask you about the whole gamut of market cap, right? So How are you approaching the portfolio construct at this point of time wherein we've seen a bit of a rally for the markets and the year is filled with a number of uncertainties, including FOMC decision and the election results globally?
Yeah, so first I would say the world is always uncertain. So I wouldn't never give the confidence that there is no uncertainty. The uncertainty is the degrees changes, and by the way, expected uncertainties don't impact the market. You know, it is unexpected events that really move the market. So I would say election is now less of an unexpected event. And so, and Federal Reserve has been around for a long time, so it's always Federal Reserve actions will happen. So I don't think these are big deals. I think what has happened in India, you know, post the COVID is the economy has seen broad-based momentum. You know, earlier a few sectors were doing well. You know, in fact, the economy was quite weak going into COVID. You know, the only sectors like IT, pharma, consumer were doing well. Now I would say a few engines were running, and now the whole economy is doing well, whether it is cyclicals like capital goods, metals, commodities, infra, real estate, tremendous, you know, economic momentum in real estate. So it's a broad-based recovery. And that's why the set of opportunities have expanded in the market. And of course, after a long period, after 17, a lot of companies got opportunity to go public, right? So companies and entrepreneurs are raising capital. So we've seen a huge amount of companies go public in the last 3 years. So that expands the opportunity set. And you know, every $1 trillion of GDP you need to create new companies, new business models, you know, new industries. So if that cycle of new companies stop coming into the market loses their economic vibrancy.
Sure.
You know, so you know, I'll just give example. Something like electronics manufacturing is something that has happened in the last 5 years. A number of companies have gone public. You didn't have scale electronics manufacturing companies going public. So for example, now you have started seeing interesting consumer tech companies also started going public. Many of them were loss-making, but they made very interesting pivots, many of them, and some of them very successful pivots to profitable business models. So you need constant churn, new companies to come into the market. Like for example, healthcare services sector, hardly a few companies listed a few years ago, and now you have a large number of, you know, healthcare companies available. So the opportunity set has become a lot more interesting. It's a better market to be an active manager.
Better market for an active manager, great. So, okay, so in light of that, I'm again looking at one particular aspect of your AMC, and which is the Flexi Cap Fund, as we said at the start. I see a very interesting allocation thus far. This is as of Feb end, I believe. But despite having the choice to be different, you still have about 40% or slightly over that in the mid space, and 28% in the small cap space at a point of time when everybody's crying hoarse about the valuations in the small cap universe. So you clearly believe in this thing about emerging themes, which will likely become larger over a period of time, and you're putting your money where your mouth is.
Yes. So one, I think clearly valuation, the ask rate in small caps is higher today than it has been for last 3-4 years now. So I wouldn't say there's not a challenge in small cap space. At the same time, for AMC, which is extremely well resourced on research, you know, for us, you know, small cap, by the way, small cap, mid cap is a higher alpha pool for everyone. If you have a lot of your own research, then you have a lot more ability to generate alpha. So it is like our ability, our confidence in our team's ability to generate alpha, even when valuations today are less attractive in the small cap space than they have been. And there is also constant churn happening in the small cap with new companies coming into the markets, new IPOs and all. So, and I would say the new emerging India, you participate actually through small and mid caps. You know, only when companies become large and mature, they transition into large cap. So a lot of those, you know, emerging themes in India, whether you talk about, you know, growth in, you know, defense, capex, or for the matter, electronics manufacturing, healthcare services, number of sectors that have been doing exceedingly well, they typically tend to be in small and mid cap.
So would it be safe to assume that your view, I'm paraphrasing or maybe I'm putting words in your mouth, but would it be fair to assume that you believe that even if the mid space were to go sideways or even correct, but there'll be bottom-up opportunities wherein earnings growth, etc., is in favor, which might do well independent of what the indices do?
Yes, so in small cap and mid cap space, managers can have portfolios can behave very differently from the benchmarks because it's a very bottom driven risk investment. Macro themes matter less, and micro themes like what the individual company does matters a lot. So clearly a lot of confidence that you can do substantially different. In fact, a very strong small cap and mid cap rally, which we have seen in the last 12 months, is actually difficult for active managers because in a very strong market rally, highest risk taking gets rewarded, not balanced risk taking. But as market transition and volatility now emerges and has emerged clearly in the last few days, you'll start seeing very clearly that active managers start doing well.
Okay. Well, looking forward to doing this show 1 year from now to try and assess that as well. But no, I mean, it's great for times like these to happen because then the wheat gets separated from the chaff, right? Otherwise, everybody's painted with the same brush. So I'll talk about multiple themes as well. But are there, Ramesh, any risks as a portfolio manager who's looking at multiple portfolios, FlexiCap and others by virtue of what you do, direct or indirectly, that you do oversee at White Oak? What, to your mind, is the biggest risk? And I know you said that the known risks will not impact, the unknowns will. But I'm still tempted to ask you, what worries you the most?
Yes, so one, the valuations in the smaller the market cap, when you can start from SME, then micro cap, then small cap, the valuation curve is reverse. Today the mega caps are the most attractive, then large caps, then mid cap, and then you can go down the market cap. It keep getting worse. So the quality clearly, and secondly, markets have not in the last 12 months differentiated between quality businesses and poor quality businesses and managements. So enough capital has been made available to even poor quality companies and management. So, and by the way, supply also keeps turning up because a lot of companies are constantly raising. You have practically in capital raising every day today. Apart from IPOs. I'm talking of either a large, big investor exit or companies raising primary money. So I think the supply is really the issue. The quality of supply, that is really the issue.
Okay. So, and viewers, here comes the other point as well that Ramesh is trying to say, right? He's emphasized twice or thrice in this interaction already about the need for making a quality investment as the market matures in its rally, because that is what will do well, arguably. And if the quality of the paper coming in as the supply is not great, then that reduces the chance and makes the job of every individual investor also that much important. So focus on this. We'll slip into a break currently, and I'm doing a very short first segment but a longer second segment, because in the second segment we'll try and understand from Mr. Mantri about what are the areas that he's betting on to create alpha. We've gotten the crux of how he thinks about current investing. Now we'll try and think of what is it that he's betting on. Stay tuned, we'll be right back.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Back with the Portfolio Manager in conversation with Mr. Ramesh Mantri of White Oak Capital and White Oak AMC. Sorry, I use those terms intermittently, but yep, Ramesh, you're well known, so don't need to do that. I'm trying to look at the pockets that you bet on and where is it that you are overweight, underweight, maybe relative to the sector, but independent of the weightages as well. Would love to understand what is it that you believe had the highest chance of generating alpha over the next 12 to 24 months?
So if you ask me where does the value lie in markets,
Okay,
where fundamentals are good and value and prices are right, I think clearly BFSI sector is where, you know, the fundamentals are still very good. You're still not seeing a credit cycle, you know, which is what damages BFSI on the lending side. So that part of the market, I think valuations are actually below average, particularly for very high quality financials. So that's really, I would say on a 3-year basis, that is really the pocket that looks very attractive to us. Then the other reasonably large sector where valuations are very normal and fundamentals continue to improve is pharma sector. This again, that sector did well during COVID and then went out of favor. Again, fundamentals have improved both on US generic, and clearly there's a very large opportunity on the CDMO CRO side, which is, I would say the another Indian version of the IT industry. You know, there's a large potential there, and of course, even on healthcare, while some regulatory challenges have emerged on healthcare, the opportunity in medical tourism still remains very large. And again, this sector again has seen a lot of discipline. So these are the two real sectors where valuations are reasonable or attractive, and fundamentals remain good. Unfortunately, a number of other sectors either are seeing much above average valuations or too much just poor quality of companies and, you know, just too much stretch valuations. So I'm slightly cautious about them, but otherwise these are the real two pockets for me on a sector basis.
So banks have been showing value for a while now,
Yeah.
right? But the movement isn't happening. Was it a supply side issue and in the foreigners selling which was leading this? And do you think that is the reason which will change, which is making you so constructive? Because fundamentals have been good now for a while.
Yes, so let's understand this. You know, a large part of FI selling, you know, in the last 2 years in India have happened in financials. That number is 60 to 70% of the selling that's happening. So they've gone from significant overweight and they've cut that position. And it is very difficult for domestic capital to absorb that kind of selling. And by the way, market also become much broader. Today there are opportunities in all sectors, so people don't have to allocate only to financials. And number two, particularly on a couple of large banks, you've seen management transitions. And, you know, in the sense, and one in a management transition, one in a merger. And of course, we are going through a very difficult liquidity cycle. There's a massive fight for deposits, which is causing a lot of pain in the banking side, on the cost of the funding side. But I would believe these are intermediate challenges. And as the liquidity situation improves, the biggest risk in banking is always a credit cycle. And we don't see any signs of a credit cycle. Yes, there are pockets in below 50,000 loans, very narrow pockets where generally banks don't participate. We have seen some spikes in credit quality, poor quality. But otherwise, there is no signs of a credit cycle as yet. So banking typically struggles when there's a credit cycle. Deposits, eventually, they will figure out to price it to the customers.
Got it. And you clearly betting on the private bankers, because I see the weightages. I'm not asking you to comment on stocks, of course, but I'm just laying it out that ICICI, HDFC banks right up there, not too many PSU banks. So you're betting on the private banks doing better than the PSU banks?
Yes. So one, the valuation differential between private banks and PSU banks have not narrowed significantly. When you adjust for the quality of franchises, we do own public PSU banks.
Yeah, you do.
Within the pack. But I would say clearly, when you look at very long-term, even long-term averages, clearly today private banks are more attractive than PSU even on a relative basis.
Fair call. The other aspect I heard you mention about CDMO, CRO being an opportunity. Healthcare presence about 5% in the portfolio. Is that an overweight stance or is it an equal weight stance? Part one of my question. Part two of my question. These are, in some sense, also slightly longer gestation businesses in that returns are maybe lopsided, back-ended related to the investments. You think, and companies have been around for a while now, they're making some of these investments. You think the returns are now closer than what they were earlier?
Yeah, so, if the businesses are short gazettation, right, then actually you can see a lot of competition. Because if someone starts doing well, other people will jump in. If a business is a very long gazettation business, just think of another very different example of life insurance, right? Then it becomes very difficult. The pot of gold is much later in the cycle. So actually it creates large entry barriers, the fact that the business is a long gazettation, and the terrain is in favor of the incumbents. It's like people who are there, it favors them. So competition becomes harder actually over longer term. The competitive space is much simpler if it's a longer term gazettation period. Number two, the same, if you're talking of CDMO, CRO, CDMO, the same capabilities that India has in IT, which is basically one highly qualified talent, which is in, chemical engineers, BSc chemistry versus tech engineers, low cost, highly talented. And number two, the fact that India has a great reputation for, history of protection of IP, that's why the IT industry is scaled up. Those two dimensions remain. And number three is, I think the US, pharma companies are under significant pressure to cut costs because the cost of drug discovery is going up a lot. So India is, and number three, because of the geopolitics today, even on this industry, India is better positioned today than it was. So over longer term, but it's a harder industry. It's also, if it's harder, it also means competition is going to be less. Coming to healthcare, we are clearly overweight there. I like to say is that, among all the industries you can think of, healthcare is probably one of the most non-discretionary spending. In fact, I would say, when you're sick, you don't even like eating food.
Yeah.
So medicine is comes ahead of food, So it's a sector with very low, longer term, correlation with markets. Long-term returns are very good. And it's a sector which requires very specialized knowledge. So if you can do bottom-up research, you can add a lot more alpha in pharma and healthcare. So that's the reason. We're overweight not because we think the sector will do very well. It's simply we have a lot more confidence in our ability to, generate alpha in that sector.
Okay, and it's concentrated towards CDMO, CRO as opposed to US generics, etc.
Yeah,
just the relative weightages.
So we are participating in nearly all pockets, but I would say it is more balanced towards this bucket than domestic branded generics and also healthcare in India.
Okay, so other than pharma, the healthcare services?
Yes, healthcare services.
Okay, got it. Diagnostics, hospitals, what have you?
Yes.
Okay, fair call. I heard you speak about real estate.
Yeah.
A sector that has enjoyed great reputation in the past, great weightages in the past until 2008.
Yeah.
People who've been around that long would remember this. The weightages have come off quite materially.
Yes.
Is it right to think of maybe the possibility of weightages going back to those levels, because almost everyone believes they're in the midst of a long-term upcycle? How are you thinking about real estate investing?
Yeah, one, if you look at globally, while real estate happens to be the largest industry in just about every country, yet very rarely you see very large index weights in real estate stocks. There are two reasons for this. One, it's a sector that tends to fragment. It's a fairly fragmented. Real estate tends to be very local. Often, the Delhi developers don't do well in Bombay, and the Bombay developers don't do well in Delhi. So even in US, it's a very localized business. So it's a very local dimension. So you can't scale profitably. People do try to go to other markets and when they become very ambitious, but actually success stories are far. And people believe in an upcycle that will go everywhere and will sell. And actually, real estate being highly cyclical, in the upcycle, anyone can set up a project and sell. But then invariably the cycle turns down. You've seen a lot of euphoria in the last two odd years now in both volumes and prices. Prices more in select markets, volume across the country. So I believe markets where pricing has been stayed reasonable and price hikes have not been, I think the market will stay firm and continue to absorb. One of the things we are hearing from a lot of developers is this time the demand is more on users rather than investors. So that makes the market more sustainable. Of course, there'll be parts of the market in real estate India, particularly in NCR and all, which will have a lot more investor demand. But particularly southern India is more user driven. Generally the construct of the market, and generally you don't see very large spikes in Bangalore, Hyderabad, all these markets. They tend to be less speculative markets. So we like markets which are less speculative. Prices are reasonable, and secondly, clearly there is a shift in markets where people are less confident of buying under construction property and buying delivered property. And the market has consolidated in favor of large brands, trusted brands. But I'll tell you again, there'll be a cycle of this consolidation. So again, new players are jumping in. Real estate is always that cyclical. Everybody jumps in the upcycle. So it'll play out in a few years the same way. But I would say there are players who have been there in the last cycle and survived and done reasonably okay. You have to look at them because they have a DNA of prospering across cycle and not just being, flash in the pan.
And you playing this via real estate developers mainly, or are ancillaries also a big part here?
So you participate both ways. There are you invest through real estate developers. There is another asset class that's been created in the last 5-7 years called REIT. But REIT has a very different dimension because there's no development element there generally. So that is another way. But you also participate through mortgage financiers, through the whole ecosystem of building materials. So you participate across the board.
Got it. You should have known I won't end the show without talking about IT services, right? Because you guys have you have some brilliant thoughts there. I would love to understand. You have a weightage there, 10-11% out there. Is this market weight? Is it overweight, equal weight? Part one. And why is it that you have this 11% exposure to IT?
No, one, we are more or less sort of more or less neutral to the market, but it's when you look at the portfolio construct, it is significantly overweight small and mid versus large. So the mid cap index tends to be very skewed towards large caps, while our portfolio has a very large skew towards small and mid caps. One of our, something that we believe for 7 years in India is that the small and mid caps will do well in IT, and they've done well. And there are a number of reasons. On your show, I've talked about earlier why mid cap and small cap will do well. I'm particularly invested in a very interesting space now in IT services, which we generally don't talk much about in India. It's called the enterprise software space. So in India has largely been IT services to Western world, to Americas and Europe. That's typically the IT services model. And whatever we say, AI is an emerging disruption. And the pace at which things are changing, you can be sure what happens in a year, but it's very hard to predict what happens even on a 3-year basis. So let's be very clear, the space is fast evolving. So I'm an optimist, but I would be cautious optimistic that things may be a lot more difficult in the middle for IT services, large companies. Why I like enterprise software? Because earlier it was always used to be the Western world. Now we have created a number of enterprise software companies in India, which are catering to the Indian market, but also doing exceedingly well in emerging market, particularly Middle East. And Middle East is doing very well. So for example, you have a number of banking software companies in India, and now there are a number of them in public markets in India. And they are focused on the capex which the private and the PSU banks are doing, the Middle East banks are doing, emerging markets banks are doing. And they are doing very well, growing well. Margins are very fantastic. They are not subject to a lot of these disruptions and the cyclicality of the Western economies. And valuations are very reasonable there. And normally, if you look at the best tech companies in the world, think of Microsoft. Microsoft is an enterprise tech company. So ultimately, the highest valuations go to enterprise tech companies. So
you're betting on that. Okay. Wow. Well, we can go on, but unfortunately, television compulsions, the show has to end because the time is up. But lovely understanding this brief bit from you, Ramesh, and look forward to have you more often where we can pick your brains around what the portfolio construction is and why so.
Sure. Thank you. Thanks a lot.
Now, this was a pleasure. Thank you for joining in today. And viewers, thanks for tuning into yet another episode of The Portfolio Manager.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment,
all you have to do
is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on
Markets extend losses. Nifty trades below 21,900. Sensex sheds over 600 points, and broader markets underperform.
It's a sea of red among sectors dragged by IT, pharma and oil and gas, while metals reverse gains to trade in the red.
Shares of TCS slip over 3% in trade after 2 crore shares change hands in 5 large trades. Stock hits lowest level since February 27th.
Japan exits the world's last negative rate regime. Bank of Japan hikes interest rates for the first time since 2007.
PM Modi kicks off his South India campaign to lead rallies in Kerala, Karnataka and Tamil Nadu today as part of efforts to garner support for the upcoming Lok Sabha elections.
Hello and welcome. You're watching Market IQ. I'm Pallavi Nahata and with me is Harsh Seta. Now, before we delve further into the show, let's have a very quick look at where the markets are at. So, Harsh, considering we've had an interesting and extremely volatile past week, it's going to be interesting to see where we're heading here on. At least going by what markets are looking like at the moment does not look particularly promising. The Nifty 50, after a not so weak start, is actually now down by almost 1%. We've lost about 200 points in today's day of trade at this point. The Sensex too is actually down by almost 600 points and almost 1%. But let's have a look at some of the sectoral indices. Predictably, almost all of them in the red. Nifty IT is actually the biggest loser. Currently, it's down by over 2%. But Nifty FMCG, Nifty Media, Nifty Energy, Pharma, Nifty PSE, all down by over 1%. Are there any sectoral indices currently in the green? Not so much. The Nifty Bank down by about over 0.25% actually. Key indices also not looking up at this point. The Nifty Mid Cap 150 and the Nifty Small Cap 250 both down by almost as much as the key market indices. The Nifty Mid Cap 150 also down by about 1% and the Nifty Small Cap 250 down by a little less than 1% currently. But let's have a look at some of the key constituents of the Nifty 50, most of them trending in the red. But Tata Consumer actually leading the losses. The stock is down by almost 3.5%. BPCL, TCS, Nestle, all down by a little over 3%. What's leading? What's in the green? Well, the Bajaj stocks seem to be having a good day of trade. The Bajaj Finance up by almost 1.5%, and Bajaj Auto, the second best performing stock in the Nifty 50, up by almost 1%. But an interesting day of trade so far, Harsh. We're still waiting to see where we close today's day of trade at.
Absolutely, Pallavi. And, we'll quickly try and talk about some of the stocks which are buzzing in trade. Let me first start off with TCS, Pallavi. You're seeing a bit of pressure on TCS today on the back of the fact that Tata Sons has sold around 2 crore shares in TCS. Currently sitting at the day's low as we speak. In fact, it's just about slipped a little bit more. We're now just above the 4,000 rupee per share mark. So a bit of a slip on TCS is what we're seeing. Now, in terms of what this means, of course, Tata Sons selling it to repay some debt. So some amount of debt overhang kind of to start to go away and also avoid a potential listing. That's the other one. So let me quickly pull up something like Tata Chemicals, which rallied on the back of the fact that there was expected to be a listing. So Tata Chem is in focus, down 1.7% in trade today. Also, let's pull up Tata Investments, and if we can pull up like probably the 10-day chart of Tata Investments, Pallavi, what we're going to see is we are seeing consecutive lower circuits on Tata Investments, and we had warned of this, that this was trading at a far higher valuation than what Tata Investments holds in some of the other Tata Group stocks. And that's exactly what seems to be playing out, 22% lower over the last week, Tata Investments. But I'll switch over to the positives. There's one more stock in the green. AG Infra is up and away in trade on a very, very difficult day of trade. It's up roughly 2%. You have around 1,026 crore order, which it has won. Just in terms of perspective, now AG Infra, roughly 6,000 crore in market cap and roughly 5,000 crore trailing 12 months. So this 1,000 crore order is definitely decently significant, and you can see that reaction on the stock price. AG Infra operates at roughly a 20% margin. So that's the rough piece on AG Infra. Pallavi, why don't you take a couple of stocks which you have on your radar?
of course, Grasim and Asian Paints, given where the broader markets and even the key indices are at, not surprising to see they're actually both in the red at this point. Asian Paints down by about 1%, while Grasim down by about 0.5%. In the latest news we have on Birla Opus, the latest offering from the group, prices for their range are actually at a discount of about 5% or so, right?
Yeah, absolutely. And you can see the knock on the stock for Asian Paints. That seems to continue lower on the back of that announcement. There you go, 1% lower in trade today. But let me pull up, some stocks which are buzzing on the back of another block deal, AB Sun Life. AB Capital as well as Sun Life AMC both divesting through an OFS. They are just trying to bring down the stake to the minimum public shareholding to comply with those norms to 75%. Currently, they hold roughly 86.5% stake in this company. So with an option for a 11.5% sale, they currently have done an OFS for 7%. So you're seeing some pressure on the stock. Floor price for this one being 450 rupees. Also, the other one in focus, something like an Interglobe Aviation is also in focus. You have a Kotak institutional note which has come through. In fact, we are very close to the low point of the day on this one. But you have a Kotak institutional note, target price up to 4,200. Mind you, Kotak over the last 3 months has increased the target price on this one from 3,200 all the way to 4,200. Double or maybe even a triple upgrade from 3,200 to 3,300 and then to 3,700 and now to 4,200. What they're suggesting is supply side constraints from Boeing will continue to keep a lid on airplanes coming in. Interglobe in particular, 60% market share but limited exposure to Boeing, and that should therefore help Interglobe in terms of the way in which it is servicing clients. And of course, the demand is extremely robust when it comes to airlines, and Interglobe therefore should benefit from that. Let me also take it across to one more stock which is absolutely buzzing in trade today. You have something like a JBM Auto. Stock has absolutely surged in trade, 7,500 crore order win. We have Puneet with us. It's up 6% now, and you can see the spike on the back of that order win. We have Puneet to break down the order, try and give us some insights on what this order means.
Yeah, thanks, Harshan. As you rightly said, the stock is up 6% today on the back of an order win from CESL, which is a government entity coming under the Ministry of Power and Renewable Energy. Now, this order comes under the PM E-Bus Seva scheme and of 7,500 crores, executed over the next 12 to 18 months and is of 1,390 electric buses. Now, recently, the company has also launched a new factory of 20,000 buses capacity and has also acquired a stake in a company called VTE Mobility and is now a subsidiary of the particular company. Recently, Nishant Arya, the vice MD of the company, spoke to NDTV Profit, and he said that in the next 3 to 5 years, he expects the EV bus market to grow and take it to by 50 to 60%. He's saying by 2030, almost all of the buses sold in the country would be electric. Finally, the company is geared to get 5,000 crores of revenue in this particular year, and they also have a current order book of 5,000 buses. Out of this, 2,000 of these will be executed in financial year 24, and the rest 3,000 will be executed over the next 2 years. Finally, the company has seen a really good quarterly results in the December quarter, with revenue up 40% as well as EBITDA and PAT up 50%, and that's well reflected in the stock price, where it's up 225% in the last 1 year. Back to you.
Thanks a lot for that, Puneet. Now, before we can move on, Harsh, I think we must come to one of the stocks which is actually having a good day in trade despite where markets are at. That's, of course, HDFC Bank. A couple of notes we'll quickly take our viewers through. Nomura on HDFC Bank maintained a neutral on the stock. It said that the mortgage business head, Arvind Kapil, of course, like we know, has moved on out of the bank. and to Poonawalla FinCorp. Post the merger, he was responsible for managing the home loan portfolio. He's also headed the bank's retail lending franchisee pre-merger. The bank, however, does have a significant depth in senior management, and owing to this managerial change, not much of an impact expected on the stock. The churn at the senior management level in medium term is likely to be a key monitorable. Now, that's according to Nomura. Jefferies has also put out a note on HDFC Bank, maintaining a buy target. The note also once again addressed Arvind Kapil's exit to join Poonawalla FinCorp from June 2024. Other recent exits, the note pointed out, include Rajinder Babbar, Santosh Nair, both joining Bandhan Bank. Slight negative for BAF, but the note also mentioned that Jefferies is going to be watching for attrition risks. We'll wait to see how all of that pans out. Poonawalla FinCorp, though, despite being off to a good start, is now currently down by about 0.5% in today's day of trade.
Well, yes, definitely a positive for Poonawalla FinCorp. Negative for some of its competitors like Bajaj Finance. HDFC, of course, absolutely flat, despite that change in, or rather shift in the head of housing going across to Poonawalla. But let me stick with the financials. AU Small had its analyst day. Strong guidances across the board given. They're expecting ROAs to make a comeback in FY26 in a big way. ROA is going all the way up to 1.8%. They're expecting ROAs of 1.6%. ROA is largely determining profitability to remain at 1.6% in FY25, courtesy all the OPEX that the company is going to be doing. Stock saw a spike in early trade off those highs. I also want to quickly flag off a Piramal Pharma while I am on brokerages. Jefferies with a buy call on Piramal Pharma, good margins, buy call with a target price of 170 rupees a share. Lastly, I want to flag off Popular Vehicles. They've come up with their IPO, listed today. A sanguine kind of a listing, 6% down on the counter, but that is, of course, Popular Vehicles for you, not the best listing on the cards. But we also spoke within the small and mid-cap space with Rishi Sanghvi, who's the MD at Sanghvi Movers, and he spoke about the company's capex expectations and how funding for the same would start to play out. Listen in to a slice of that.
This year we have done a 400 crore capex plan, and we have still maintained a very healthy debt to equity ratio, and we also have significant cash reserves in the company right now. Going forward, subject to board approval, we would be looking at doing similar numbers next year. And I don't see the debt to equity going up the next year as well. So again, it would be subject to board approval, but there is tremendous demand across all sectors. And we see ourselves doing a similar capex to what we have done this year. So we fund our capex with 30% cash internal accruals and 70% of long-term borrowings from the banks. Even having said that, we generate a lot of healthy free cash flows. Therefore, the debt to equity level will not go up next year, even if we do a similar capex.
So, along with Nifty IT, Nifty FMCG is one of the sectors that is fast losing ground today. It's down over 2%, 7.5% down on an year-to-date basis. But will it end the year on the same note? Mahima has some insights and joins us to add more perspective. Mahima, what does historical data tell you?
Right, Pallavi. So Nifty FMCG, as you mentioned, is down YTD 7.5%. Now, this is in the past years. If you see, since 2012, Nifty FMCG has started on a negative or a flat note. Let's say in June, in January to March. However, it has picked up after March and has given positive returns in the calendar year, in the entire calendar year. Now, If we talk about the valuation, if we talk about the entire sector's valuation perspective, well, the Nifty FMCG valuation at present in terms of P stands at around 53 times, but the projected Nifty FMCG P stands at around 38 in 24 estimates, and 25 estimates is around 34 times. Now, if we talk about the EV to EBITDA valuation, well, the estimates suggest that EV to EBITDA will go down to 27.8 by by 2024 estimates, and 2025 estimates is suggest around 24.3 times, which is currently at 31.65 times. Now, if we talk about stock specific, well, stocks like Imami and ITC are undervalued at present if compared to the sector PE. So these look attractive, and the FMCG stocks overall are at present overvalued, but they're expected to correct themselves in the coming year by by the end of FY24 and FY25. Now, the analysts in Bloomberg are highly optimistic also about Varun Beverages, TCPL, Dabur India and ITC, and have recommended potential buys. And however, the analysts are more cautious towards stocks like Colgate and Nestle India, and this could indicate some kind of potential concern in the future because of their overvaluation at present. And if you talk about return potential also, in terms of return potentials, stocks like Imami, ITC, HUL, Dabur and Marriott look good considering the return potential by the end of FY25. And so overall, if we see, FMCG sector has shown muted or negative returns in the first half of the year, but it does pick up in the later second half of the year, and this is because the festivities are factored in, and the harvest seasons comes to an end, and rural spending also increases. So this is the overall picture of how the FMCG moves during the year.
Well, lots of IQ there. Thank you so much, Mahima, for all of that. Let's slip into a short break, take a quick breather. On the other side, we'll have more news and updates for you.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Welcome back. You're watching Market IQ on NDTV Profit. Now, as a part of the government's renewable energy push, FM Nirmala Sitharaman announced the launch of PM Surya Ghar Free Electricity Scheme in the budget for FY25. The scheme provides subsidy for installing rooftop solar panels for residential homes and using solar energy for electricity generation. My colleague Vikas joins us with more on this. Vikas?
The PM Surya Ghar Muft Bijli Yojana, which was started by Pradhan Mantri Narendra Modi on January 22nd, has generated keen interest in the minds of the households, and within 2 months this has already got a registration of 1 crore from 1 crore households. And given the kind of interest it has generated, analysts predict that this is likely to be extended to almost 2 to 3 crore people once the installation for 1 crore residents happens. This is not just beneficial for residents, but residentials, even for discoms, who have been facing a lot of distribution-related losses in the last mile areas or densely populated areas. The savings that these discoms can make over there, they can sell it to the well-networked commercial and industrial customers, where they can even fetch better tariffs. So not just that, once this generation starts to happen, even at 2 kilowatt and 3 kilowatt, the total power that will be generated would be equivalent to around 20,000 to 30,000 megawatt. So this will require some kind of evacuation infrastructure that needs to be set up. And also, apart from smart meters, this will require net metering for grid connectivity. So apart from these issues, this has generated a lot of interest, and it's likely to go a long distance in the course of time.
Well, thanks for that, Vikas. Going to switch focus from that to Paytm. Now, fair share of trouble in the past couple of months. Paytm has now resorted to referrals for existing customers to bring back others onto the app. Pragati joins in with the details on this one. Pragati, talk to us about the situation. What does it look like from a market share perspective?
Right, hi. So Paytm is now resorting to new techniques like enticing customers while bringing referral programs on the board. And this primarily, as per our understanding, is being done because of the falling app downloads as per the data that we've collected. Now, the data that we've collected is from App Tweak. And if we see the data between 31st January and 15th March, because 31st January was a significant date when RBI clamped down on Paytm Payments Bank, and 15th March was the deadline for these curbs. So in this timeline, the app downloads show that Paytm has seen almost 59.3 lakh downloads, and PhonePe, Bheem and Google Pay are leading the share. So in this entire pack of apps, Paytm is one app with the least number of downloads. In fact, the data is there on our screen to show our viewers as well. Now, a lot of referral programs are being shown on Paytm app. For example, one of them being that the tagline called "Bring Friends Back to Paytm UPI" is constantly flashing on the app, and all these incentives include coupons and deals worth almost 4,000 rupees. So an interesting marketing thing from the Paytm's perspective has started, all in order to bring people back to use Paytm app.
Thank you for that, Pragati. Now, moving on, speaking on the sidelines of the Startup Mahakumbh event yesterday, my colleague Rishabh spoke to Nykaa's Falguni Nair on the emerging trends in the D2C space and more. Listen in.
I think earlier consumer brands used to take years to be built and grow. They used to be patient. They used to work on solving consumer problems. They used to work on innovation. They used to work on going through multiple channels over a period of time and keep building on it. I think all that changed when large platforms emerge, and many of the brands who would list on the platforms would get certain size and scale very quickly, and then everybody thought that was a game. And I think a little bit of slowdown in growth, everybody's starting to doubt that this is the right thing to do. I think it's not a time to self-doubt, but to believe in their vision for their brand and do a lot of research, do a lot of innovation to solve real consumer problems. And if you can do that and you build a brand in a more measured manner, I'm a big proponent of slow but sustainable growth. Not necessarily slow but sustainable growth that can be sustained over a long period of time. And I think the brand should be built like that.
Well, very interesting conversation there with Falguni Nair of Nykaa. But, let me quickly take a check on where markets are at. You have the GST on online gaming, some flashes at the bottom of your screen. If we can quickly pull up Delta before I go into this quick market check and see what's happening there. There's been a bit of a push with regard to, there you go, you're seeing a bit of a reaction on the stock as a result of all that's flashing on your screen. But quickly taking it to where markets are at, 0.9% lower on the Nifty 50 itself. You're largely flat, so there's no real whipsaw movement through the day, but you're off the day's lows, 200 points nonetheless lower. In terms of where the contributories are at, you're seeing good contributions coming in from something like a Bajaj Finance on the positive side, 1% plus higher. But on the negatives, all the heavyweights have piled up on the negative end of the spectrum. You're seeing TCS, Reliance, Infi, ITC, L&T, all of whom are contributing significant losses. almost 100 points contributed by those top 4 alone, TCS, RIL, Infi and L&T. And that's where we're at. In terms of where the broader markets are at, well, there is pressure on broader markets as well. The Nifty mid cap down 1%, the Nifty small cap also down roughly around 0.4%. So some pain both on the benchmark as well as on the broader end of the spectrum. What we can see in terms of the advanced decline as well is reflecting that particular pain. Now, in terms of Nifty IT and FMCG, they are the top laggards in trade today, led by TCS on the IT side of things. But with that, completely out of time on this edition of Market IQ. From Pallavi, myself and everyone who puts the show together, thanks so much for watching. Stay tuned to NDTV Profit, more on the other side.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment,
all you have to do
is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager. Listen to the
Welcome to this exclusive interview, first only on NDTV Profit with Arvind Panagria since he has become the chairperson of the 16th Finance Commission. Now, of course, Mr. Panagraha was the first VC of the Niti Aayog, a Columbia professor of economy, and now will be handling this very, very important task as head of the Finance Commission. His report of the commission will be due in the next 2 years. Mr. Panagraha, thank you so much for speaking with us here on NDTV Profit. Absolute pleasure to speak with you in this avatar, I must say. And the first question hence is, how is it being back in Delhi after a fairly longish stint in Colombia?
Yes, indeed. Really glad to be back. Working again on India from New Delhi. So I'm very pleased to be here.
Yeah. So
and good to be with you on NDTV. Now you have moved.
Absolutely, absolutely. So new innings, and both of us having this conversation in this avatar, for the first time. So I know there are limitations to what you can say about your work as chairman of the Finance Commission. I understand that, but you have been a keen watcher of the Indian economy throughout the last several years. So, which is why, let me begin with that, where we are right now. Now, our last quarter GDP numbers at 8.4% was shock and awe, honestly. It was more than what anyone expected. In fact, there was some commentary saying that the numbers don't really match up. One of them coming in from a former economic advisor. Let's start with your views on where the Indian economy is going and the latest GDP data.
Yeah, look, if you follow what I have been saying, I'm not surprised. I've always been saying that, we'll be growing 7 to 8%. And I was actually also saying that everybody else is being too pessimistic about the Indian economy. So it doesn't surprise me. As regards the skeptics who say, oh, there is some problem with the numbers and all, I think it's all a bunch of nonsense. Maybe some corrections will happen. We'll find out as we go, because these numbers do get revised routinely by MOSPI. But if to me, manufacturing has done well. Now, remember all these skeptics. Previously they said, oh, electricity consumption numbers don't match. Well, electricity consumption is quite high. Growth in electricity consumption has been quite high during this period. If you look at the numbers, manufacturing has also done, decent, 8% or so, 8.5. And it is across the board. It's not like this growth is actually coming out of one single sector. It's largely in most sectors growth has been good. Only agriculture actually is the one where growth for the year as a whole. I'm talking not just the third quarter now, but for the year as a whole, the 23-24 fiscal year. But other than agriculture, it is across the board. You got mining, quarrying going 8.1%, manufacturing 8.5%, then electricity, gas, water supply, etc. 7.5%, construction 10.7%. So it is across the board. So I find it quite credible, but we'll see, if how far do they get revised as we go eventually, and what is the final number that comes.
So, even as you talk of skeptics, I think the biggest question then which is being raised is about the rate of private consumption. So for the year, we're expected to close at north of 7.2% for the last financial year. But your private consumption is still at about 4.4%, and that is the concern. An economy which has traditionally been driven by private consumption, you're seeing that perhaps come off. Rural consumption is not where it should be ideally. Is this something you're worried about at all?
Look, let's first look at the aggregates. I mean, at the end of the day, some numbers may not rise as fast as the others. You can always pick on the ones that did not rise as fast as the GDP. In this case, it happens to be private consumption. But what about the investment? To me, the most important figure, if you're going to look at this, consumption, investment, and government spending and net exports of the four, most important to me is the investment. And gross fixed investment to GDP ratio is now 34.1%. And it has climbed up steadily. Actually, if you go pre-COVID and onwards, during COVID it fell. It fallen somewhere between 28-29%. It's now back up to 34.1%. So if investment is robust, naturally in the end, all these percentages have to add up to 100. So when investment proportion rises to 34.1%, something out of those four components will fall in the share. It's pure arithmetics. And so in this case, it's private consumption. So fine, that's what has seen the declining share. But that does not undermine the fact that overall aggregate demand has been robust, and that has actually helped pull the growth rate to 7.6%. Now, will private consumption stay tepid? I don't think so. In an economy that's rising at 7.6% or anywhere between 7 and 8%, we will see the turnaround in private consumption as well.
So you're saying the turnaround in private consumption will come about. I'm asking you about all of the questions or the question marks right now in the Indian economy, Mr. Panagria, because the overall narrative, mood and momentum is very, very positive. So if I ask you, is the Indian economy doing well, you'll say absolutely, which everyone says it is, which is why I'm going to come to you on the questions that people have. And one of them is on unemployment. Now, the latest government data, the periodic labor force survey, says that employment has come off from 3.6% the year before, 2022, to 3.1% in 2023. Do you think that that's a sufficient answer to those who say that India still has an unemployment issue? We're going into poll season and unemployment is becoming at least a big political issue. I want to understand your sense of how big a concern it is in the Indian context.
Yeah, so Tamanna, my view on unemployment has always been that unemployment is not India's problem. It is underemployment, which is meaning low productivity. Generally, if you look at all the numbers, unemployment at the aggregate level, 3 to 4% roughly is where it stays. Maybe a little bit above 4 or so at the most. Currently, it's at 3.1%. But that is conventionally where the unemployment numbers have stayed in India. Now, the problem, as I have always maintained, is the low productivity. So everybody, at low level of income, everybody has to do something to earn their living, and they are doing that. That's what PLFS data are telling you. But we still have a long way to go in terms of eliminating underemployment and therefore raising the productivity. Now, when you look at, for example, output per worker in agriculture or output per worker in our micro and small enterprises, it tends to be quite small, quite low. And a lot of our output actually is concentrated in the corporate sector. So there you get, the corporate sector output per worker to be incredibly high because all the capital as well as skilled labor are concentrated in the corporate sector. And this is where I think, some rebalancing has to happen such that the productivity where most workers are, remember that 45% of the workforce is in agriculture, another 45% roughly is in micro and small enterprises that are less than 20 workers. And that is where your output per worker is low. And that's where we need to work. And that is a more kind of long-term project and an ongoing project. And that is where, all the kinds of reforms that I have often advocated need to be continued. I think we have made good progress on those reforms, but that process has to continue. I can understand right now, we are into election mode and not very much can happen. But, I think that is the agenda that the government will have to take up once it comes back to office.
Okay, so you are among the many who are convinced that we will have policy continuity. You are among the many, sir, who are convinced that we will have policy continuity. Can you hear me, Mr. Panagria? All right. So I think he's lost my audio. We're going to take a very short break and try and reconnect with Arvind Panagria. The juiciest bits of the interview coming up right after this. Stay tuned.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there.
Welcome back. We're in conversation in the first interview Arvind Panagria is giving after he's taken position as the chairperson of the 16th Finance Commission back in Delhi, but still with that very sharp view of the Indian economy. Before the break, sir, you were talking about what the tasks are in terms of reforms for the government when they come back. So are you among the many who have now penciled in policy continuity post the 4th of June? Or is that something that now you can't really say?
No, you see, look, you know, I'm speaking in my capacity as the economist. So
all right.
What I would say is that I think there is unfinished agenda of reforms which the new government will need to take up again. The obvious one that is there is the implementation of the 4 labor codes that had been passed in 2019, but for reasons that the states have not written, still not all states have written their rules and regulations, and these 4 codes need to be implemented in all states simultaneously. They have not been yet implemented. So that's something, you know, a lot of progress has happened. Most of the states, I think, you know, leaving aside probably 2 or 3, have done the rules and regulations. So that's one big reform really waiting to be implemented, and that's something which I hope the government, once it comes in, is able to implement right away. Then we have the privatization program, which is also part of the policy of the government, certainly the present government, you know, privatization of public sector enterprises as well as privatization of banks. Now, on the former, the PSEs, the government already has a policy in place, where it makes a distinction between strategic sectors and non-strategic sectors. And a large number of enterprises in non-strategic sectors can easily be, under the policy, privatized. And so that's another area of action that is part of the policy, part of the program currently. And then we get into tougher areas which really are largely in the domain of the states. One very important one is the land. Land in the Indian cities, and particularly I'm talking urban land. Urban land in India has tended to be extremely expensive, and that obviously undermines particularly manufacturing, because manufacturing is what requires a lot more space. So a lot of kind of land-related reforms have to happen. And then agriculture, which again, the central government had tried the farm laws, and now certainly the central government cannot do it.
Yeah.
State governments will have to take lead in those. So these are some of the major areas that the government will have to take up once it comes back.
You spoke about states having to take forward the questions of land reforms and even labor codes to actually implement it. And now that your focus is a lot on states and state finances, this is something that you will be seeing even more closely. I want to understand the picture in terms of health of state economies. We always talk about GDP in the context of the central government, or fiscal deficit, frankly, in the context of central government. Everyone's very excited that we've been tight with our fiscal deficit targets. But as far as state finances are concerned, doesn't that continue to be a question of worry?
Sorry, a question of?
A question
worry.
Of concern, yes.
Well, I think, right, of concern, yes. Look, as we are coming, as still the process of coming out of COVID ongoing, we know that during COVID particularly, the deficits had gone up, both in the states and at the center. Particularly for that year, 2021, we all know that there was a major spike in deficits, and it had largely to do with the revenues, not enough revenues coming in. We were broadly, I think, pretty prudent in terms of expenditures, but because not enough revenues came in, there was a big spike, and that, of course, translated into accumulation of a larger amount of debt. So this is an issue which also falls to some degree in the domain of the Finance Commission. We will be looking at this. At this point, this is all I can say really. A year from now, perhaps I'll be in a better position to say. But right now, for us, it's a subject of study, and then see, if we can assist in any way, both the state governments and the central government.
No, fair enough. Fair enough. Since we're talking about what the next government is expected to do, we are in election season. I have to ask your view about the whole electoral bonds business. The Supreme Court has, of course, now ensured that it's no longer a function. Corporate India is wondering what comes out when on Thursday we will know those unique numbers. There's a debate on right now whether this will bring back black money, whether it was fair that voters don't know who's donating to whom. I was keen to know your take.
Well, this is going back to the days when these bonds were introduced, and Mr. Arun Jaitley was the finance minister. And I generally found his argument reasonably persuasive, that look, on what previously existed, and we are back to that state now after the bonds have been withdrawn, meaning, further issuance of the bonds has been withdrawn. Bonds, therefore, to some degree was an improvement as far as I can see. Mr. Jaitley's arguments seem to make sense to me, that, look, absent the bonds, we go back to the cash. And the bonds were an attempt to solve that problem, that at least, this would persuade, this would encourage the corporations to report what they are donating. So to that extent, even though that is only half transparent, the bonds would reduce the role of black money this will all be, any money that comes through the bonds is money that is accounted for. It appears on the accounts of the corporations who are making the donations, whereas, absent these bonds, when donations are made on cash, they are not on their accounts. They're not on anybody's accounts. So in this sense, I think it was an improvement, and we will therefore end up back to where we were before these bonds were introduced. Now, can this lead to a situation in which we get transparency on both sides, so that who donated to whom and how much? That will of course be ideal, but I think that still looks to me like for the time being it's a bit of a distant possibility.
And we'll wait and see what comes out of that data. So I must ask you on your take on interest rate cycles around the world, and let's start with what's happening in India. You have better than expected GDP growth quarterly. Inflation really not yet where the RBI would have comfort, and a lot of it's all up there. Will the RBI start cutting rates before the Fed, after the Fed, June, July? When will you see that happening? I just wanted you to weigh in on whether India should now follow her own path. Should we sync this with what the Federal Reserve is likely to do? And that also is a lack of clarity. And how concerning are our inflation figures?
So first, inflation, I'm quite okay. We are currently 5.1% if I go by the monthly figures in January and February. I've never been an inflation hawk in the sense of, taking it down to 2% or 2.5%, 3%. If we get there without pain and with rising incomes and rising employment, that's all good. But certainly 5% is very much within my tolerance, my personal tolerance limit on inflation. I in fact think that that kind of inflation generally is helpful, because in a growing economy, an economy that's growing in real terms 7 to 8%, you need to give some space to the prices to adjust, meaning the relative prices to adjust. If inflation is extremely low, given the fact that very few prices have the tendency, except the agricultural prices, but other than that, most other prices don't actually fall. And so therefore, the adjustment in the relative prices usually takes place through rising prices. So some room for the relative prices, which are ultimately the signals to the investors that where should the investment go. There actually is a signal that the relative prices pass on to the entrepreneurs. It works well if you got some rise in prices of 4 to 5%. So currently we are 5%. I'm okay with that. On the interest rate question, really, I would really leave it to our central bank. Reserve Bank of India has really navigated this extremely well. I'm generally happy with how they have done it. And so I'd rather not second guess them.
Okay. Would you be okay second guessing what Mr. Powell has to do or what he should do? We're all waiting for the March policy outcome, the March FOMC meeting outcome. It's not going to happen in March, but when is the question? Do you think that concern or how careful the Fed is being is keeping the world on tenterhooks?
Well, what the US does or what the Fed does impact the entire world economy. So certainly all of us are waiting for what the Fed will do. But on the other hand, there is not a big mystery on Fed's actions, because Fed has the policy of generally pre-announcing, and Mr. Powell has already said that he sees the interest rates coming down in the near future. Now if we are talking about which month is it, that I have no idea. On that, this is all like the astrological predictions. So
you have no number penciled in. You have no month penciled in of later in the year, summer, or when we can expect that.
It will be within this year. Whether it will be in the first half of the year, second half, that I won't try to guess.
Yeah. Astonishing moves today from the Bank of Japan. A month earlier than expected. Then they've exited their negative interest rate regime completely. Just want to get your take on how impactful that is from an Indian perspective.
We are not hugely impacted by what happens in Japan actually right now. Our trade with Japan is very, very small. Investments are also relatively small. So I don't think, one or the other way we get impacted that badly. But in the overall scheme of things, Japan is a major economy. Currently, it has slipped from third largest to fourth largest, but that still means that it is one of the 5 largest economies currently. So insofar as any kind of recovery or signs of recovery are shown by Japan is a useful information, but not a major piece of information from the Indian economy's viewpoint.
Last take from you, sir, before we let you go, and of course thank you for this exclusive interview, is what are the big changes you see post-July or post-June when you have elections, and then in July the first budget that the new government will present after us? Because we're lagging on indicators like FDI inflows, a lot of FPI investments also sitting on the sidelines. Do you see these aspects turning tide in the second half of the year from the Indian perspective?
Yes, I think, Tamanna, that should turn around. We didn't talk about FDI, but FDI has been tepid in the first 6 months of the current fiscal year. And part of it, of course, is explained by the fact that FDI flows have themselves slowed down because of the rise that happened in the interest rates around then. We are talking about the first 6 months of the current fiscal year. But this needs to turn around. And it's very probable that even though, the general mood is that the Prime Minister is coming back, investors may still want to see it happen. And so perhaps we will see that turnaround. Election is not very far away now. 4th of June we will all know what the outcome is, and that I think should clear up any doubts or uncertainties that are in the investors' minds. We would also know actually, Prime Minister, one hears. I remember that as the chair of the Finance Commission, I am not a part of the government. This is a constitutional body which is independent and neutral. So I do not know, but from what I see in the press, there's going to be big actions happening in the first 100 days of the Prime Minister, and that would certainly for the investors clear a lot of the uncertainty that they may feel exists.
Okay, so rock and roll post June and July if market expectations are on track. Thank you so much, Arvind Panagria, for speaking with us. You were listening to the chair of the 16th Finance Commission, first and exclusively on NDTV Profit. Pleasure, as always, to speak with you.
My pleasure, too.
All right, we'll take a very short break, but we'll be right back. Stay tuned to NDTV Profit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Hello and welcome. This is Last Trades. I am Agam Vakil, and in this show we take you through all that is happening in bulk deals, block deals, and of course volume buzzers in the current markets. But before that, we take a look at how the markets are panning out. At the moment, we're looking at weakness for the Nifty. The Nifty is down around 1%, and well, the weakness has been contributed by a whole host of counters out there. In fact, so a lot of traction coming in. And to take a look at what in fact is weighing on the index, you do have the likes of Nestle now, which is in fact looking at a correction of around 3% at the moment. We further have BPCL, which is down 3%, but a bulk of these losses on the Nifty at least are on account of heavyweights like TCS, Reliance Industries, as well as something like and there you have it, and Infosys as well. So that's where the major chunk of your weakness is coming in, and which is also weighing down on the Nifty. And Nifty, in fact, is now testing the mark of around 21,800 as well. It's just a tad, just a notch above that mark. And the broader markets, the picture is not very different, because we have seen that weakness come through as far as the broader markets go as well. And, in the small cap index, mid cap index is down 1%. The small cap index is also down by just a little less than 1%. And even though they're off days low as well, there's red all the same. And, even if you consider what's happening within these broader markets, well, if you just take a look at what is it that's driving these broader market indices downwards, something like a United Breweries, which is down around 3.6%. So that's something which is weighing on the indices. And United Breweries has a relatively larger weight as far as your broader markets go. Besides that, we have Patanjali Foods. Patanjali Foods is also down around 3.6%. That is also something which is weighing on the markets. Then we have L&T Technology Services. Remember that the company recently raised funds, and after that, despite of that, we are looking at a decline of around 3.5% right now at the moment. And then, of course, REC and PFC are two of those counters which have now started to move downwards in general, taken a turn for the worse after having a spectacular last 12 months. So if you pull up something like an REC, even in terms of what's happened in the last few months, well, you'll see that there has in fact been some weakness after making life highs back in the first, second week of February. We are now starting to see a turn downwards. Same for something like a PFC as well. Of course, PFC is the parent company of our REC. The PFC the picture isn't very different either. And of course, for PFC, the weakness is just a little bit more as compared to what we've seen in REC. In the broader markets, we're also seeing weakness in something like a DB Realty, which is locked in a lower circuit of 5%. And along with that, we have Orchid Pharma, which is also down by just as much. Now, want to very quickly address what's happening in TCS because, I mean, at the end of the day, we are talking about large trades, right? And we understand that, and what sources have told NDTV Profit, that it is essentially the Tata Group which has gone ahead and paid that 0.65% stake in the company. This particular stake pairing is where the funds will be used in order to retire some of the debt from TCS and from the group companies in general. And of course, we are awaiting confirmation from sellers as well as buyers in this particular deal, or a handful of deals. 5 blocks to be precise is what took place very earlier on in the morning. And since then, of course, the stock has been veering towards a decline of around 3.5% to 4%, closer to 4% at the moment as we speak. And of course, the other issue with all Tata Group stocks at the moment is how Tata Sons is planning to avoid an IPO since it has been categorized as a core investment entity. Of course, that will require it to list as per RBI's norms, should it not make some other structural changes in the overall structure as far as the group's concerned. So whether or not this in fact could be one of those things, well, that's a wait and watch on that one. We will get a lot more updates with respect to this particular blocks through the course of the next few hours and of course a couple of days as well. But from there on, let's talk about all the stocks that we want to address in this show. Of course, we are going to talk about a whole host of companies which are buzzing on the back of volumes. And right at the top, we have Triveni Turbines. The stock has hit an intraday high of around 9.4%. And this is on good volumes too. Let's get in Anushi to tell us more about what's been transpiring. Anushi.
Right, Agam. So if you were to look at 9.4% of gain in this market, is quite a handsome gain if you were to look at. Again, if you were to look at the volumes also, the stock is trading based on its higher volumes over here, about 5.4 times its 30-day average. Now, while there are no fundamentals driving this kind of a stock performance that we are seeing throughout the day, let's just go and look at the key highlights that the business has recorded over the last quarter. So over the last quarter, if you look at revenue, about 33% of an uptake. The same translated in EBITDA as well, about 33% of an upside over year, while the margins remained flat at about 19% range. And the net profit saw about a 30% growth. So quite a good overall performance for the quarter. If you have to look at the order book status, also a strong performance on this side as well, about 27% of an increase in the order bookings for the company at about 1,443 crore in the 9-month period of this fiscal. Whereas it is mainly the exports that is driving this kind of performance. If we have to look at exports for about 60%, while the export contribution also saw a big shift, about 42% last year compared to 53% currently. So again, which all this culminated with a total outstanding order book rising to about 1,575 crore, again clocking in about a 28% growth over year. Now onto the growth strategy that the company plans going forward. One is it is setting up a US subsidiary for more organic growth opportunities over there, and this US market's main focus also continues to remain on the renewable energy and oil side for the oil sectors over here, so that remains on a watch out. Another interesting fact about the company is a couple of years ago they had stated this ambition of growing at a 35% CAGR rate, which they have in the previous conference call affirmed that they have already exceeded that and plan to maintain this growth range going forward as well. Onto the stock performance of the company also, if you look at since the last 1 month and 6 months, we saw about a 7 to 13% of a gain. Meanwhile, in the 1 year period, we are looking at a handsome returns of about 66% for Triveni Turbine. So this all has been so far going on the company if you have to look at so far.
Absolutely. Anushi, thank you so much for joining us and taking us through that particular profile for the company, of course, buzzing on volumes. But from there on, we move on to, well, JBM Auto and yet another big order for the company, which is why we have seen the stock buzz as well. But I'm going to stop right there and get in my colleague Puneet to tell us a little more about this one. Puneet.
Yeah, Agam, thanks for that. And right, as you rightly said, the stock is up 6% today on above the normal volumes. It has got a big order from the CESL, which is a public sector undertaking under the Ministry of Power and Renewable Energy. Now, it also comes under the PM E-Bus Seva scheme. The order value is roughly 7,500 crores for roughly 1,390 e-buses. This has to be executed over the next 12 to 18 months, and they will have to maintain, operate, as well as maintain these 1,390 electric buses. Now, Nishant Arya, the Vice Chairman and MD of the company, had spoken to us previously, and he said that in the next 3 to 5 years, the market will be 50 to 60% electric and 100% of electric buses by 2030. They also said that the company is geared up to get 5,000 crores of revenue for this financial year ending March 2024. And it has also inaugurated a new manufacturing facility of 20,000 buses and has a current order book of 5,000 buses executed over the next 2 years. Finally, on the stock performance, on a year-to-date basis, the stock is up 22%. And in the past year, it has given roughly 225% of returns for the investors. Back to you.
Thank you so much, Puneet, for getting us the latest on the updates with respect to JBM Auto, another one of those multi-baggers through the course of the last 12 months, and yet another reason that we can ascribe to the advances that the company has made, that big order that's come through for this particular company. And it's made a little bit of a habit of, well, gaining large orders. And since the government is also veering towards electric mobility and electric vehicles, essentially, in pushing that agenda forward, is where companies like JBM Auto also stand to gain from there. From there on, we move on to a company which has been under tremendous pressure since the last at least 1.5 to 2 years. And I'm talking about Polyplex Corporation. This was a company where it in fact went from 800 rupees per share all the way to, well, as much as 2,800 rupees per share back in about 2 years ago, and has since continued to decline. There you can see that peak on that 12-month chart as well. It has continued to decline, and it just so happens that now, after, well, 3 years, we are looking at the stock just making a little bit of a recovery and turning the corner, and making a 3-week low and then coming off that 3-week low. So we do have strength in today's day of trade as far as Polyplex Corp is concerned. Now, for those who are not that privy, Polyplex is a manufacturer of plastic film substrates, and this once again includes BOPET, BOPP, as well as CPP. And this is, of course, used for several packaging materials, as well as it goes into various other products as well. Now, in today's day, where we've seen a volumes profile of about 4.6 times its 30-day average. Moreover, its volumes on an intraday basis is highest since the last 6 months, which also begs the question of whether or not that there is a turnaround of sorts in the offing. Now, there is a reason why Polyplex Corp has seen such a sharp correction over the course of the last 12 months. And, well, it's evident in the kind of earnings and the numbers that we're seeing here as well. So if you just consider the first 9 months of FY24, you've seen a 23% decline in the revenues. In fact, its overall sales volumes have also declined by as much as 8% according to its latest investor presentation. And consequently, margins have taken a huge hit, obviously because the operating leverage doesn't play in its favor. So operating margins now standing at around 5.5%, well below the double-digit mark, as against 14.6% on a year-on-year basis for the same comparable 9 months. And the consequence of that would be a huge dent on profitability, which stands at just around 55 crores at the end of the first 9 months of FY24, against 595 crores. That's a 91% decline on a year-on-year basis. Now, that actually brings us to the question of whether or not there is a turnaround. Well, it's a wait and watch on that one. But we certainly are seeing volumes and big volumes too coming on the back of which we are seeing that gain of around nearly 6% up move on Polyplex Corp. Well, the fourth quarter will certainly determine whether or not this up move has some substance to it or no. But for now, we certainly are looking at very, very large volumes in Polyplex Corp, and something that you could perhaps keep on your radar as well as on your mind going in. And from there on, we move on to the final stock that we want to address in this edition of Large Trades, and that's Somani Ceramics. Let's get it, Mahima, to tell us about what's buzzing behind this one. Mahima.
Right, Agam. So the stock has been buzzing in volumes today around 8 times its 20-day average, and it did touch an intraday high of almost 12.6%. Now, if we talk about this overall stock performance, well, the stock has not done well in the past 6 months. 1 month it's been down around 5%, 6 months it's been down around 8%, and 1 year overall it has given returns of around 28%. If we talk about the support and resistance levels, well, support levels are at around 561, which is a 1-week low, and the resistance levels are around 709, which is a 1-month high. Now, talking about its overall 9 months performance so far, the sales has grown only by 3%, volumes grew only by 4%, and margins have significantly improved by 2.3%, and profits have grown by around 54%. Now, they've also recently done a share buyback which was oversubscribed of around 125 crores. And if we talk about the key business highlights, well, their capacity utilizations for ceramics stand at around 81%. Their bathware grew by around 8%, and they've also started a Somani Max plant that has started commercial production in January recently, and they've also launched a new product called Cover Stone. And lastly, about the management guidance that they've given in the Q3 analyst calls. One, they've said that Q4 will grow anywhere between 5 to 7%. EBITDA is expected to improve next year, and margins they've guided for 10% in Q4. And lastly, they've said that their capex plan for the next 12 months stands around 15 to 20 crores. So this is what we have for Somani Ceramics so far. The stock has been under pressure in the past 6 months. However, the stock has recovered a lot today.
Right. Mahima, thank you so much for getting us that update. From there on, we slip into a short break. But before that, I want to very quickly address what's happening with the Sensex specifically. It's lost out on the mark of 72,000 as we speak. It is, in fact, trying to fight out that weakness, but it does seem like it's currently trading at day's lows, and that is also down as much as 1.1%. So just keep an eye on some of these key indices, because they certainly seem to be under a tad bit of pressure at the moment. Well, on that note, we do slip into a short break, but on the other side, we get you a lot more. Stay tuned to NDTV Profit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish.
Welcome back to the last trades. Well, we are taking a look at the markets at the moment, and they are not looking pretty. For the Nifty at least, now that one is also starting to test its near-term support of around 21,800. And it did momentarily go below that mark. It seems like it has recovered, but there's no telling that should we in fact see a closing below 21,800, well, the next stop then would be a hard one to call for. That'll also change a lot of reading from a technical analysis point of view. And well, we're going to keep an eye on that one. But for now, of course, the selling hasn't abated. In fact, it has, accelerated to a certain extent. So it's something that we're going to keep an eye on. And along with that, the broader markets are also seeing a little bit of a sell-off. But let's move on and talk about how Modi government's stability over growth agenda will aid realty, as well as says Axis Bank's Neelkant Mishra. Meanwhile, Kotak AMC's Nilesh Shah says that India will emerge at a top economy by the end of the Amrit Kaal. Listen in.
सरकार जो कोशिश कर रही है पिछले कुछ वर्षों से कि मैक्रो इकोनॉमिक स्टेबिलिटी पे फोकस करें, कि आपको हमने बता दिया कि भाई देखिए ग्रोथ मोटा मोटी इतनी ही होगी, आपका इन्फ्लेशन जो है वो मोटा मोटी इतना ही होगा, इंटरेस्ट रेट इस तरफ से स्टेबल होगा, एक्सचेंज रेट इस तरह से स्टेबल होगा। तो अगर कोई पूंजीपति अगर निवेश करने को तैयार हो रहा है तो उसको अगर ये क्लियर हो जाए कि भाई अगले 4-5 साल तक ऐसे चलने वाला है, तो उसके इन्वेस्ट करने के चांसेस बढ़ जाते हैं। और जब 4 लोग इन्वेस्ट करते हैं तो 5 और लोग भी आ जाते हैं कि भाई इसके कारण ही इकोनॉमिक ग्रोथ हो जाएगी जब इतने लोग इन्वेस्ट करेंगे। तो मेरे हिसाब से अभी तक का, और आप देखें जो बजट में भी जब सरकार ने वित्तीय घाटा खुद से 5.1% कर दिया, जबकि पूरी मार्केट तैयार थी कि 5.4% हो, तो ये जो स्टेबिलिटी ओवर ग्रोथ का जो पर्पज़ है, ये मेरे ख्याल से काफ़ी टाइमली भी है, क्योंकि अभी हमारी रियल एस्टेट मार्केट जो है वो अभी 10 साल के डाउनटर्न के बाद फाइनली उठनी शुरू हुई है। ये बहुत पावरफुल इकोनॉमिक फोर्स है। तो इससे जब घर बनने शुरू होते हैं तो फिर स्टील की डिमांड, सीमेंट की डिमांड, टाइल की डिमांड, लेबर की डिमांड सब बढ़नी शुरू होती है। तो मेरे हिसाब से इकोनॉमिक पर्सपेक्टिव से ग्रोथ की विजिबिलिटी अभी काफ़ी अच्छी है।
बिल्कुल नीलेश भाई, शेयर मार्केट बड़ा मिस्चीवियस है, उसको अगर कोई ठीक से पढ़े तो वो बता देता है कि उसको पहले क्या पता है। तो जिस प्रकार का इंडेक्स चल रहा है वो करीब करीब ये माने बैठा है कि अब की बार 400 पार। इज़ दैट राइट?
सो मार्केट कंटिन्यूटी ऑफ गवर्नमेंट और गवर्नेंस दोनों को काउंट कर रहा है। ये सिर्फ $5 ट्रिलियन की खेल नहीं है, ये अमृत काल में विकसित देश होने की खेल है। एंड हमने हमेशा देखा है कि आज़ादी के समय हम और जापान पर कैपिटा जीडीपी में इक्वल थे या पीछे थे वो हमसे। 1960 में साउथ कोरिया और हम एक दूसरे के आसपास थे, 80 में चाइना और हम एक दूसरे के आसपास थे। ये सब लोग हमें पीछे छोड़ के बहुत आगे चले गए। हमने 2 कदम उठाए, उन्होंने तो 2 किलोमीटर चल दिए। सो अब की बार मार्केट ये डिस्काउंट कर रहा है कि ये अमृत काल में भारत विकसित देश हो जाएगा, और जो लोग हमें पीछे छोड़ के हमेशा चले जा रहे थे हम उनके साथ हो जाएंगे। और ये विश्वास इसलिए पैदा होता है कि 2014 में भारत जो 10वीं बड़ी अर्थव्यवस्था विश्व की आज 5वीं हो गया है, और अगले 5 साल में तीसरी के ऊपर पहुंच जाएगा, और अमृत काल के अंत तक हम दूसरे के साथ उसे नैरो कर देंगे। तो ये सिर्फ 5 ट्रिलियन का खेल नहीं है, ये विकसित देश होने का खेल है। और मार्केट को विश्वास है कि सरकार और गवर्नेंस दोनों इसी दिशा में काम करते रहेंगे।
Right. And well, Samarth by Hyundai in partnership with NDTV is a movement for equal rights for people with disabilities and strongly believes that people's disabilities do not define what they can or cannot do. Today we meet an IAS officer who, despite clearing the tough UPSC exam in her very first attempt, was refused a posting because she was, well, scoliosis and spine-related disorder which disrupted her arm movement, and this is an inspiring story of Ira Singhal.
Something called a hyperscoliosis. All of us have a straight backbone. Well, not all of us, but yeah. You're supposed to have a straight backbone, but in my case, it's in an S form. My peers specifically were not comfortable with a girl who looked like me, and decided to be their equal. Despite clearing the exam, there was no service willing to accept me, simply because even though I could fill the ability criteria for most of the jobs, I didn't fill the disability criteria. So I decided to fight that lawsuit. Maybe this is how I'm supposed to make a difference. I've been very lucky that I've kind of been in roles where I've been a part of a lot of policy changes. You're the only person who has lived in your shoes. Don't let the world define who you are. I am Summer.
And on that note, it's a wrap on this edition of Large Trades, but don't go anywhere. On the other side, we get you India markets close. Stay tuned in.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
Well, thanks for tuning into India Market Close right here on NDTV Profit. I'm Neeraj Shah. And on the day of the birthday of our director, Meghna, the markets are not doing a great job because they are down about 1%. As you can see, 21828 for the Nifty. The Sensex is down as well. And bring up the mid-cap and the small-cap end because we know banks aren't doing as badly. So it's IT that is pulling the markets lower. Mid-cap's down about 1%. Small-cap should come up on your screen. About 1%. So largely that kind of a day, and likely that the market breadth, obviously currently in favor of the declines, but likely has been like that for a better part of the day, as you can see. In fact, a bit of a yawning gap now, and 1:3 in favor of the declines. Let's get the heat map up on the screen and show you what the large caps are doing. Bajaj Finance, a couple of percentage points higher. Well, to be honest, from a valuation perspective, PEG ratio perspective, a company that will grow possibly at 20% at 63,6,400, Bajaj Finance may not be presenting the worst picture when it comes to valuations, but up today. A little bit of gains for Bajaj Auto. So the two Bajaj twins are doing well. There's some strength for Hindalco, minor as it may be, but effectively an overwhelming piece of red, and leading the charge down is TCS. We'll give special focus on TCS in the first segment itself of this show because that stock at 4% lower is seriously packing a punch on the downside. BPCL under 4% lower courtesy higher crude prices, and there is weakness in FMCG. So Tamanna, while Nifty IT from a weightage perspective, and actually just before Tamanna takes over the mid caps, if you can just pull up the weightage performance, Nifty IT on the weightage TCS, Infi, etc. won't be higher, but FMCG right out there in terms of the losers. No, I meant the Nifty 50 weightage is right here.
Contributors to the
fall.
Nifty fall is what we're trying to look at. And yeah, I suppose you're right, Neeraj. TCS will definitely be on top of the charts there at about 40 points. But the Bajaj
FMCG.
Finance up there was interesting to me, considering that Jeffrey's note this morning also talked about the impact of a Poonawalla FinCorp, etc. Both Bajaj Finance and Bajaj Auto there is interesting to me. Banking not doing too badly relatively.
Banking not doing too badly. FMCG, IT clearly out there. Is the same picture at the broader end of the spectrum? Yeah,
broader end of the spectrum also hurting. Let's pull up what the broader indices are doing, the small cap and the mid cap today. So all about 1.5% down. It's the IT stocks that are hurting, and you saw the Nifty IT earlier about 2.5% down. But that overall broader market sell-off continues. It's IT stocks hurting the most, along with FMCG stocks. And some of those key components we'll talk about. JBM Auto is one of the companies that I want to pull up for you, and we'll talk about why this has been an interesting play even on an otherwise weak day. Order wins over here, and at some point of the day this stock was 26% up. So they've been awarded by Convergence Energy Services Limited under the PM E-Bus Seva scheme. It's a 7,500 crore order. So that's big for the company, and that stock has been up. Piramal Pharma is having a good day because of a Jeffrey's note that has assigned a buy rating, and that to of a target price of 170. So at 120, it's looking quite attractive. We talked about the FMCG pack being down. Tata Consumer is one of those reasons. A negative note there from CLSA, which has come in, and they've initiated coverage with an underperform. Poonawalla FinCorp actually flipping. It was doing pretty well in the beginning of the day because of management changes, etc., but now looking quite weak. So overall, you have a day of selling pressure. There could be a variety of reasons, and perhaps, look at all of the events happening. You have the Fed meet, which begins later tonight, and it's not really considered that you will see a very positive commentary coming out of it, and that might be some of the concern.
If if that comes out, that's a big positive surprise, which Tamanna, you're right, the market isn't bracing itself for. So, yep, that's the long and short of it. Let's get in our guest to try and understand what to do in a scenario like this. Vaishali Parekh, Vice President Technical Research at Prabhudas Lilladher, joins us to talk about the technical end of the market, and Dharmesh Kant, Head of Equity Research at Chola Securities, on the fundamentals. Both of you, thanks so much for taking the time out. Vaishali, just wondering, is there more pain? Are the charts and the derivative positions showing that?
Well, I would say today for the first time, Nifty has broken the support of 21,900, 21,850. Now, let's see where we close. But if we sustain below 21,800 levels, I think it's calling for trouble. And even Bank Nifty, as compared to Nifty, is holding on well. So it's a wait and watch scenario for now. Let's see how we start our day tomorrow. But on the whole view, with Nifty below 21,800 is a corrective sign.
21,843 currently on the spot. And remember, we spoke about how the last 4 days the Nifty tested 21,900 and bounced back. If we are closing the way we are, then we're clearly not seeing that bounce. And from the looks of it, doesn't look like a bounce is imminent anytime soon. Dharmesh, would you stay off from any kind of buying in the near term, looking at the texture of the market?
Yeah, good afternoon, Neeraj. Definitely. I mean, if you remember our last conversation, I was very clear that I am expecting 5 to 7% kind of index correction. And that correction I was expecting on Nifty. So it's still, the journey just started. I mean, nothing goes in a straight line, and I understand that. And there will be breather sessions in between. But 20,500 is, and to 20,000 is the zone where, valuation comfort is likely to come in. And large caps have not corrected the way bit and small cap has. So that bridge has to be narrowed. It will be getting filled in sooner than later. So as of now, we are just watching from the sidelines. A couple of stocks here and there, the trades are on. But beyond that, nothing much is there in this market. So stay put for some time, and then the fresh money can be deployed.
Fresh money can be deployed. The question is that would you pick up a TCS right now at these levels, or wait for it to sort of stabilize? I'll come to Vaishali on that. Vaishali, your take on TCS on the charts, and your picks for this afternoon, or your strategies for this afternoon.
Well, so TCS has been with a gap down, and we had a block deal coming in today and all. But well, right now, chartically, if I were to say, if it breaks 3,900 levels, it could be in a corrective mode. So 3,900 should be the trigger point. Till then, it's a wait and watch. We can see a bounce if market is stabilizing at these levels, but failing which, I think it would be calling for a corrective move. Now, as far as stocks are concerned, and what looks quite comfortable in a market like this, well, I would start with Bajaj Finance today, because after a long time, after a good corrective move, and it is coming out of its consolidation, and the indicators are also showing signs of reversal. So I would say this could be a good buy with a stop loss of 6,500 and a target of 6,800. The other stock, which technically looks well placed, and as far as the risk reward ratio is concerned, looks pretty favorable, is Clean in the cash category, because this too has corrected quite a bit, and it has retested the previous bottom, of 1280, and from there on we are seeing some bounce coming in. So well, with a stop loss, it's a calculated risk, 1250 as a stop loss, look for a target of 1400.
So Clean Science and Bajaj Finance on Vaishali's radar, and that's quite interesting, because Bajaj Finance definitely having a good day. What's not having a good day is our stock of the day, TCS. So the shares have slipped now, last at over 4% in trade. Let's just pull that up. The key reason is that Tata Sons is selling a stake. Now, Tata Sons is selling that stake. What we learn is because they want to pare their debt, they want to avoid having to list. And if they don't do that, they will perforce have to list by September or October 2025. Vishwanath joining us with more exclusive details.
So
So Tata Sons is likely to have sold about 2.3 odd crore worth of shares in TCS. Now this was of course reported last evening through sources that Tata Sons will be looking to offload some part of its stake. Remember that Tata Sons owns about 72.4 odd percent in TCS, and what they were looking to sell represented just about 0.65%. That was worth around 9,300 crore. Why is Tata Sons doing this? Well, what sources are telling us is that the proceeds from this sale will be used to retire some of the debt on Tata Sons' balance sheet, which will aid in the process of avoiding a mandatory listing. Of course, alongside the share sale, Tata Sons will also have to undergo some amount of corporate restructuring, move the financial services businesses into a separate holding company, just so that they can avoid that mandatory listing, which is, according to RBI norms, supposed to happen before before September 2025. Now, if that is a process that is being followed, then Tata Sons will escape that mandatory listing and will likely have some amount of restructuring within the financial services businesses.
Okay, so that might be the reason that Tata Sons is selling stake, but nothing per se negative fundamentally for TCS. The fact is that the pain points you're seeing is across the IT pack. And Dharmesh, just a quick take on both TCS and IT overall.
Yeah, I mean, you nailed it. Because if there's a fund selling in TCS, I mean, the parent group is selling. But what about the other stocks, why they are falling? So
yeah,
we discussed this Tamanna online many times. But the fact is that, these companies have to align with products which are AI enabled. And yesterday I went through a few articles in the US journals where they were talking about the same. For example, Salesforce and Apple, they were mentioning that they have to align with products given by Oracle or Google's Gemini or Microsoft, so which are AI enabled. And that is where the problem rises. And I think that rub-off selling effect has come into our markets as well, because much of these companies are still to do the same. So unless that happens, that clarity emerges, we will see selling pressure in these stocks, though in a trading range. And the future growth outlook and profitability, revenue, margins, and all are dependent on the functionality of how soon they're able to launch products which are in line or in alignment with the AI-enabled products which are there in the market now.
Okay, 4%, and it's brought Nifty IT to its knees as well. Before we kind of talk about some of the others, Vaishali, is there more downside here, or are stocks like TCS maybe at key support levels?
So TCS has been one such trade today. So I would say that let's see, if today's low is broken, then of course we would be seeing some more corrective move. But talking about Nifty IT on the whole, I think, well, it is showing some signs of exhaustion. And it's a wait and watch scenario because this too has opened with a gap down. And well, if 35,600 levels break, this is what I'm talking about, the IT index. If 35,600 levels break, then we are seeing a further downslide.
What else? Today, not too many gainers. I mean, Paytm is a separate case in point, but there is maybe Torrent Power, which has done well. RK Forgings has bounced back today, so about 3.5% higher for that one. So that's doing okay for itself. But otherwise, not too many stocks really flying on the A group. I mean, in some sense, there are more pronounced losers than gainers in the session, and that's to be monitored. Amber Enterprises, for example, is down another 4% today, and Siemens is down another 4% as well. So a few stocks floating around with some bit of downside. Time for taking a quick break on that note. We come back from a break, try and talk about the BOJ decision and the upcoming FOMC decision as well with Manish Singh of Crossbridge Capital, and of course continue our conversation with Dharmesh and Vaishali.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve.
All right, markets having a tough afternoon. The Nifty now under the, testing the 21,800 levels, but a bit of a recovery, about 200 points down even as we speak. 72,000 turning out to be tough for the Sensex over there. IT stocks, the culprit. FMCG stocks, the culprit. I want to talk a bit about Tata Consumer, and Dharmesh with us. We're also speaking with Vaishali Parekh. Let me come to Dharmesh Kant first on FMCG. PAC and Tata Consumer specifically, there is a note out there which is, maybe causing a bit of that overhang today. But as a stock, what do you make of Tata Consumer at this point, Dharmesh?
See, as far as business is concerned, it cannot be painted with other QSR companies for Tata Consumer. It's a different segment altogether. If you are comparing this with, say, a Jubilant Food or a Sapphire or Devyani International and the likes. But having said that, the only problem with even Tata Consumer is, as has been the problem with most of the companies in this market as of now, is the valuation concern. So there is hardly any scope of error out there. You cannot miss on margins from here on, and the valuation multiples are too high. So they have been, whatever management has, guided for the same store sales growth or the new stores opening, everything is in place. There is nothing wrong out there. But in such a market environment, when everything is getting under the brush, so I think Tata Consumer is also being painted with the same brush. And on downside, say a 5 to 7% more correction from here, it would become attractive at least to have a stake in a portfolio buy in a staggered approach.
Okay, well, there is clearly pressure on the FMCG space today. So aside of IT, FMCG is the one which is bringing the markets lower and putting the pressure as well. Okay, like we said, we'll talk a bit about the BOJ decision, implications if any, and the upcoming Fed meet. Manish Singh, CFA, Chief Investment Officer, Crossbridge Capital, on the phone line from London. Manish, great having you. Thanks so much for joining in. Good morning to you.
Hi, Neeraj. Good morning.
How do you assess what the BOJ has done? Widely anticipated, so in some sense not a surprise, but the impact thereof?
So if you see, they have raised rates. Yes, the rates are back in positive territory after 17 years or something, but they are still buying the bonds. So they say that they have got rid of YCC and they would like that yield to go higher, but they're still buying bonds. And so in my opinion, while this is a step, but this is just a baby step to really letting the yield go higher. They would like the yield to go higher because that means you're out of the disinflation or deflation trap that they have been for such a long time. What they have done is they're not buying ETF, i.e. equities, right? And there's something else they stopped buying, I can't recall. But the fact that they're still buying bonds, they're still guiding that yield is going to be in that 0.1% range, just tells me that while this is a step, because they have come off the negative rate, but this is not a major change. And for that to happen, you will have to see inflation in the economy and robust GDP growth for them to really act. And if that doesn't happen and Japan is still in a deflation trap, then they will just stay here and they could stay another 10 years or 5 years at this 0.1% instead of negative is there for 17 years or last 8 years at least.
Yeah, and in fact, they do make that clear as well, Manish. Hi, Tamanna here, and great to speak with you. Yeah, so they do make it clear that they're not perhaps switching to an aggressive rate hike regime or any such thing. Just from the Indian perspective or the emerging markets perspective, I'm trying to understand what this really means in terms of an impact. Do you see any at all?
So I would say on the face of it, not really. However, the world is definitely interconnected. So if you see an increase in yield, then what will happen is that you will see repatriation of capital back into Japan, because the export of capital from Japan is one of the big things. And I was told this by a Japanese economist that every time the central bank governor of France addresses the Japanese investors in Tokyo, he thanks them for buying OATs, the central government bonds. So what happens is that there's excess of capital, a huge amount of capital in Japan, and because they couldn't find yield, or they had negative yield to start with, those money flowed out, went into US Treasury, European bonds, maybe some in India as well. So if the yield goes higher, then clearly you will have yen getting stronger, capital coming back into Japan. But for capital to really come back into Japan, it will be driven by GDP growth and inflation expectation, i.e. nominal growth expectation. Now, if that nominal growth comes only for 1 quarter, 2 quarters, you're not going to see major allocators change allocation and move back money from US, Europe, or India back into Japan and then to move it back again in 2 quarters. So one has to really look a few quarters down the line and see what happens. But if the nominal growth does come back in Japan because of structural changes, then it will mean that capital will go back, or the Japanese capital will go back into Japan.
You know, Manish, the other big factor and what everyone's looking for is the two-day FOMC meet starts Tuesday. What would be the key indicators that are on your watch list? Are you looking at commentary as to when? Because you're seeing a bit of that concern in global markets. I mean, we're talking to you during the Indian markets closing session today, and it's definitely not looking like a good afternoon. How key would be the commentary that comes out on Thursday?
So there are two things about the US when we are looking at. For equity market, one has to always think in terms of liquidity. Where is this money coming from that's going into US equities or US dollar assets? And there are a few explanations where this is coming from. Because when you have energy prices, especially natural gas, which has come down from 5.3 BTMU to 1.4, a lot of capital that is tied up in inventory gets available. So that is one. Second is that M2 expanded a lot in COVID time, and it is still high compared to pre-COVID levels. So a lot of liquidity has helped. And third, obviously, you had the 1.5 trillion or 2 trillion of spending that Biden administration did. So that liquidity is driving growth, making life difficult for Fed to cut rates. And in my opinion, Fed should not cut rates until they really see inflation has stabilized. By the way, I'm not afraid of inflation. I think that we will go into disinflation down the line. But in the short term, Fed doesn't have to act, and the equity market doesn't have to get a rate cut to go higher, because it is being driven by GDP and earnings growth. And you have seen earnings growth. I mean, the earnings growth even for tech stocks, and I'm sure this happens in India as well, these are not based on multiple expansion. These are based on real growth. So if that real growth happens and multiple expands maybe once or twice, you will still have higher equity despite no rate cut. And that's what is happening for the last 6 months. People are waiting for rate cut. Equity market is going higher. The equity market does not rely only on rate cuts. It relies on GDP growth. So in the Fed communique, I would look for things. Is there a problem in the commercial real estate market in the US? And how does that impact the banking sector? Because last thing you want is that the commercial real estate goes bad in a big way, and then Fed has to cut rates back to low levels to help the banking system. That will be tragic.
Yeah.
Because low rates just does not help anything, makes the situation worse for next time around. So I will be looking for if there are any signs of that in the market. And if it's not there, if you're reassured, then you should be buying the asset, because earnings are coming through. US GDP is still growing at 2.5%. There's plenty of liquidity, and the wealth effect just carries on, and that will feed into other asset classes.
Right, absolutely. Just one take from you, Manish, on India and Indian markets going forward. We're going into election period. And this whole narrative that a lot of, foreign inflows are sitting on the sidelines waiting for this election event to be done. Just wanted your take.
So from what I see in terms of the poll and poll numbers, it seems that this government is going to come back. So the capital that looks for political stability already has an answer, that there is political stability. And there has been a lot of change, structural change, which is going on, and a lot of it has been delivered. So of course, some people may be unhappy at the pace of change, but the first thing a capital looks for is political stability. And on that basis, I think the story remains sound. Of course, there are other changes that should be done in the economy, and we can have the discussion at length some other time. But I think on the face of it, I don't see what will change from now and after election. It would probably be status quo in terms of the political stability and the policies that have been announced.
Absolutely. Thank you so much, Manish Singh from Crossbridge Capital joining us from London on that outlook. We spoke about Bank of Japan, we spoke about Fed, and of course Indian elections. In fact, that's part of the conversation I had with Arvind Panagria. He is the chairperson of the 16th Finance Commission now, and in his first interview after taking on that position, he spoke amongst other things of what he as an economist expects from the government when it comes to power. Whichever government comes to power, it is expected it will be a third iteration of Modi 3.0. What are the reforms expected from that government post the 4th of June? Listen in.
There is unfinished agenda of reforms which the new government will need to take up again. The obvious one that is there is the implementation of the 4 labor codes that had been passed in 2019, but for reasons that the states have not written, still not all states have written their rules and regulations, and these 4 codes need to be implemented in all states simultaneously. They have not been yet implemented. So that's something, a lot of progress has happened. Most of the states, I think, leaving aside probably 2 or 3, have done the rules and regulations. So that's one big reform really waiting to be implemented. And that's something which I hope the government, once it comes in, is able to implement right away. Then we have the privatization program, which is also part of the policy of the government, certainly the present government, privatization of public sector enterprises as well as privatization of banks. On the former, the PSEs, the government already has a policy in place, where it makes a distinction between strategic sectors and non-strategic sectors. And a large number of enterprises in non-strategic sectors can easily be, under the policy, privatized. And so that's another area of action that is part of the policy, part of the program currently. And then we get into tougher areas which really are largely in the domain of the states. One very important one is the land. Land in the Indian cities, and particularly I'm talking urban land. Urban land in India has tended to be extremely expensive, and that obviously undermines particularly manufacturing, because manufacturing is what requires a lot more space. So a lot of kind of land-related reforms have to happen. And then agriculture, which again, the central government had tried the farm laws, and now certainly the central government cannot do it. Yeah. State governments will have to take lead in those. So these are some of the major areas that the government will have to take up once it comes back.
All right. Well, that's Arvind Panagria. Just before we take that break, Tamanna, very quickly, what was the key thing that stood out in this?
Well, what was interesting is that because he's speaking in his personal capacity, he can't speak on what he's going to do in the Finance Commission. He's just taken over. I asked him about electoral bonds. And I found that interesting because he's backing it. He's saying the bond system was better. Now you're going to be back to cash. So that a 5.1 inflation in India is like, we shouldn't really worry. Though, of course, he wouldn't second guess what Shaktikanta Das is going to do. But everyone's waiting for Powell to act, including Arvind Panagria.
Yeah, well, so that makes it 2 in 2, right? Because Nitin Gadkari spoke about this as well, that without bonds being there, I mean, what happened? So how he was kind of backing bonds too, if I'm not wrong. Yes. Electoral bonds. And now we have Arvind Panagria.
And Kiran Mazumdar-Shaw, as someone who's at the receiving end of flack for giving electoral bonds, she's saying that, let it be out in the open.
Yeah.
And we'll see on Thursday what data comes out, because that's what a lot of people are watching as well.
Should be interesting. Nevertheless, so viewers, if you missed that show, it'll play out later on the channel. It'll of course play out on our social media handles. You would want to hear what Arvind Panagaria has to say. Let's take a quick break. We're still in conversation with Vaishali and Dharmesh, and we'll continue that. But we have to slip into a break right now. Other side, we'll get in BTST ideas, latest from the derivative markets, because my colleague Agam will join in and break down what's happening in the derivative space today. Stay tuned.
Co-presented by Patanjali Honey, world's best Patanjali Honey, 100% proven on more than 100 parameters of purity.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask profit.
Let's be real, guys. There are many financial experts out there.
Right, weakness persists in the market this afternoon, and are we seeing that reflecting across the board? Agam is standing by. Agam, it's definitely been sort of a bearish trend in the derivative space as well.
It certainly has, and at least as far as the benchmark, the key benchmark, the Nifty 50 is concerned, well, a lot of traders have taken this as an opportunity to test that support of 21,800. At the moment, while we may have momentarily broken below that level, we still are maintaining that mark and you know, we have seen just about a barely 2% increase in open interest. This continues to be the trend over the last 10-12 odd sessions, something that I've been highlighting every now and then. So we haven't really seen too much traction as far as your increase in OI goes, or decrease for that matter. It's stuck here at around 250 to 260,000 odd as far as your units go. But moving on to the Bank Nifty, that's where again there's been about 0.3% decline. Again, the Bank Nifty is in focus because the Fin Nifty weekly options expiry comes through, and that has also been very, very quiet today. And again, as far as the Bank Nifty futures go, we've seen very little change in open interest there either. Moving on to very quickly how things are shaping up as far as the Nifty options are concerned. Again, a lot of consolidation around and below the mark of 22,000, and as one might expect, a little more call writing here, as you can see, around the 21,900 and the 22,000 calls. Moving on to how things are stacking up as far as your overall open interest distribution is concerned. Well, naturally, we will have the 22,000 call as the one with the maximum open interest, even as the Nifty loses out on that level and closes below that mark. Moving on, the Fin Nifty expiry, that's where we were keeping an eye on things, and it most likely seems like the Fin Nifty will also expire around the mark of 20,600. This is exactly where it is right now, and it does seem like all the traders who had gone ahead and sold those calls and puts around that particular strike are in the money at the moment. And finally, coming down to stocks, we have pressure for TCS, Indus Tower, along with something like an Asian Paints, REC, L&T Technologies, all of them looking at shorts. And in terms of stocks which are seeing unwinding in futures, well, Aurobindo Pharma and Tata Power looking at long as unwinding. Tata Steel, Bajaj Fin and Balrampur Chini are looking at a little bit of short covering, but not too much to speak for otherwise. I reckon at the moment, all eyes will remain on the Nifty and whether or not it can in fact defend 21,800, because that's the mark that at least a lot of your technical analysts were keeping an eye on in terms of a key support in the near term.
Thanks a lot for that, Agam. So clearly some things to watch out for and some pressures to watch out for as well. We've spoken about how IT has been the corrective move. What we didn't get a chance to ask Vaishali about was the pressure on FMCG stocks and the kind of cuts that we've seen on some of those in the session today. Now, Vaishali, the index is down 2%. Tata Consumer, ITC and some of the other heavyweights, all of them down in trade. Maybe you gave us an idea, maybe you didn't, but if you were asked to get or recommend a trade on any one of the large FMCG names, which one would you choose and what would the trade be?
So in the FMCG, I still like ITC because, that has been a safe
See, you're
bet.
saying?
Sorry?
You're saying you like ITC. You'd go long on it.
Yes, it could be a good positional trade because, we have seen a long consolidation at 400 levels. And from there on, we are seeing that, yes, the stock has attempted to bounce. But this is the only stock which looks good because, and that too may correct, but because overall I'm seeing that the FMCG counter is under threat because, it's currently at a 200-day moving average. And let's see, if we close below that, it calls for a further selling pressure. So I would not really recommend a buy, but well, if I have to, I would choose ITC.
Another one in the space which is seeing a hit today is Patanjali Foods. That's because Patanjali Ayurved case is going on in the courts, and Baba Ramdev and Acharya Balkrishnan have been summoned for a misleading ads case. So it's nothing to do in terms of balance sheet with Patanjali Food, but sentimentally you've seen a pain point on that stock as well. Overall that weakness definitely persists, and I want to come to Dharmesh on, you'd agree with the play on ITC, or would you touch any of the consumption space right now?
No, Tamna, I would stay away from most of the consumption space, and the reason being because to my mind, the input prices are going to go up going forward. It's Q4 and the Q1 of next year. And two of the states have already taken MSP price hike of the wheat, and that wheat becomes a very key ingredient for companies like ITC and other, biscuit makers and other food makers. So it's a painful scenario for most of them, and with crude prices going up, even their personal care segment will have that pinch of a higher input prices. So I don't think it's the right time to get into these consumptions. We have seen volume growth was only 1.5 to 2% for most of these companies, which are likely to be the case. Then maybe just before elections, there are some, freebies out there, and that's the sentimental play which people take. But beyond that, I don't think any of the QSR or FMCG play merits a long-term buy rating in the current environment.
Another focus area is the pharma space, and especially Piramal Pharma. Jefferies has reiterated a buy call on Piramal Pharma today. And yeah, so the Nifty Pharma, of course, is down like everything else. Piramal Pharma is having a decent day. Anushi is joining us with more details. What is Jefferies like, Anushi?
Right, Tamanna. So if you look at quite a substantial target that Jefferies has given, about 47% of an upside here with a price target of about 170. A couple of handful of reasons that they have cited out over here. First is the revenue projection that they say that about 12.5% for the next year, which they expect it to exceed going forward. Another is the margins remains on a focus area, which they expect to improve to about 16% compared to about 13.9% it currently has. Also, another is the net debt to EBITDA, which the company is aiming for, is estimated to be about 1.6 times by FY26 compared to about 3.5 times currently. So almost about half of reduction over year. Again, now even if you are to look at the valuations for the companies on the EV EBITDA basis, it is comparatively much cheaper than its peer group. So that also brings the company in a focal area. Now going forward onto the strategy for the business remains on the company's improving CDMO mix, especially with the company driving for more innovation-driven products, which is supposed to be more margin accretive as seen by the guidance also given forward and the revenue growth projections as well. But on the downside, though, key debate continues to remain on the FY24 revenue and the EBITDA guidance that the company has stated because of the overall biologicals firm macro uncertainty that continues to remain as an overhang. Now, if you have to look at the analyst recommendation over here, no hold or sell calls, but there are like 7 buy calls over here, so that again puts the company in a favorable light. Just to give a wrap on this, if you have to look at the stock price movement also in the 1 month, the company has remained under pressure to about 10.2% downside currently. Meanwhile, if you look at the 6 months and the 1 year returns, it's about 21% of an upside in the 6-month period and about 84% gains in 1 year period. So this is all that has been happening in Piramal Pharma, and which is in focus ahead of the Jefferies node as stated.
Well, certainly active. Dharmesh, for the longest, Anushi, thanks for this, of course. Dharmesh, for the longest time, Piramal has flattered to deceive. And in fact, if CDMO, CRO spends are lower, it might find it difficult to achieve the double-digit growth numbers, as the Jefferies note points out as well. Do you track this one, and do you like it?
Yeah, I mean, post the demerger when it happened, I have not tracked Piramal per se. But in the pharma space, there are a couple of good opportunities out there, and the pharma is the only space. If you look in the recent market correction of the last fortnight, they have still been the outlier, and they have performed better on the relative terms. So I think Dr. Reddy's is one company which one should be looking forward to, along with say Cipla. So apart from that, I mean, Sun Pharma is now priced to perfection on the higher end of the valuation multiple, and there is no further story playing out there as far as blockbuster drugs or something like that is concerned. So there are challenges everywhere in the pharma space as well. But to my mind, DRL, that is Dr. Reddy's, and Supply is still a good buy from a portfolio perspective. Piramal, we have not started tracking since that demerger has happened.
Okay, fair call. Dharmesh, before we let you go, if not now, then in lower levels, give us that one offbeat idea that people should watch out for. You're not recommending a buy at the current levels, so you may buy it at whatever time in the future, but what is that space, what is that stock, what is that theme?
I mean, the space and themes remains the same. There is no, two thoughts on that count, and the space remains the railway infra space, power sector, construction, metals, and to a small extent, the BFSI. So these are the 4 spaces which we are tracking very closely and waiting for opportunities. Unfortunately, the railway infra space, in spite of high volatility, we are not getting a good entry price to get into. So for example, Ircon International, if it is 170, 165 is a good buying opportunity. RBNL, anything below 200 is a good buying opportunity, which these companies are not coming there. So I'm expecting if this correction continues, these prices will come through. And in defense, the only sector, company which we are looking forward to is HAL. So railway infra, defense, metals, power sector, and BFSI are the spaces which I think would be again the flag bearers of the next uprun when it commences. But before that, 5 to 7% correction on Nifty from here on.
Dharmesh, thanks for your views. Always really appreciate your time today as well. Thanks for your time. And, Dharmesh spoke about HAL, and the HAL order flows have been very strong. In fact, and he spoke about PSUs, and we, in the morning, spoke to another expert, Vikas Khimani, founder of Carnelian Asset Management, on the PSU space and what's his outlook on OMCs, which have taken a bit of a drubbing today. Here's a small slice of that conversation.
It's just like how you see that, after every such a sharp run, last year was a stellar year for you, PSU. After such a sharp run, it is very natural for it to consolidate. And in case of some PSUs, I think probably a bit of an overstretch also happened. Again, it is not PSU, you can't brush it with a broad basket, but there are PSUs where still there is a lot of value. Of course, some part of the deep undervaluation went away. Today they are in a fair value zone. But I guess as the transition and transformation continues to happen, I think we will see more valuation re-rating happening. So I would say large part of the run is done, and now we will mostly track the earnings growth as Indian economy keeps growing. And also you have to look at sector specific. You really can't. Each PSU within a different sector will have a different lever for growth and delivery of returns. We've been very, very bullish and positive on PSU banks. We haven't sold any. We continue to remain invested because we think that will do well. Power sector, we've been quite bullish. We have continued to hold. So we haven't really sold anything because I think these kind of consolidation, correction, temporary things will come in every market cycle. And we would like to just continue to hold and play out the full story.
In some sense, is the market getting unduly worried about what's happening to oil marketing companies? Moat around the business looks okay, but yes, there has been some intervention and some uptick in crude prices, but the derating has been very significant.
To be honest, we haven't really bought any of the oil marketing. That's why I'm saying that you have to look at different sectors. We do where we think there's a good management control on the future, on the fate of the company, and there's sectoral tailwind. Unless we are convinced about these two, we won't buy. And specifically in the PSU segment, in any sector, any ownership matter, but especially in PSU segment, especially oil marketing company, that it's not been the CMD of oil marketing company doesn't control the outcome. There are lots of variables, so we have never kind of taken bet on that.
Right, interesting take there from Vikas Khimani, especially on OMCs. Vaishali, I'm wondering if you have a take on any of those OMC plays?
Well, so ever since the news came of the petrol prices going down and all, there has been a corrective move and it has substantially corrected. So let's start with BPCL. If BPCL breaks with 550 levels, I think overall the view could get damaged and we could see further selling pressure coming in. And overall, now that you're seeing the market closing at 21,800 levels, it surely calls for a word of caution. So reasons could be any, but chartically, I think all stocks, most of the stocks are showing exhaustion and weakness.
Okay. So, well, certainly OMC is under a bit of pressure. HAL is under a bit of pressure too, and that's gotten a bunch of order flows. What are the supports for Hindustan Aeronautics, Vaishali?
I'll just have a look.
Vaishali, can you hear me?
Yes, just a minute. I'll
Sure. Yeah.
Well, currently it is at a support level, but I would say, 2850 to 2900 should act as a crucial support. If these levels break, if below 2800, it would call for a trade reversal. It could be a reversal in the trend.
All right, interesting story there, which you're seeing on your screens, and we'll get more details on that from Smriti, who's broken that story. Prestige Estates will be developing 6 hotels with Marriott International. Now, Prestige under pressure there, as is the real estate pack as well. But, even take a look at iBull's reality. iBull's is having a particularly hard day. And we'll come back to the Prestige story and more details with Smriti in just a sec. But just look at iBull's reality. 10.5% down now. Extremely weak. Do you track this on the charts at all, Vaishali?
Oh, yes. Actually, till yesterday, it was showing a positive momentum. And today we are seeing with a candle like this, I think it is clearly showing resistance at 120 levels. So only above 120, the trend continues to be positive. But for now, it needs to also break 100 levels to see a further downslide.
Okay. Well, watch out. Real estate certainly under a bit of pressure, but Prestige, not that it's seeing a spike, but this is an interesting piece of development, and we'll wait for this to come about. But the other aspect of this is what happens to the hotel, what's happening within the hotel space, and the kind of expansion that companies are doing, Indian Hotels, Marriott, etc. So quite an interesting pocket to keep looking out for. It's been a busy last 24 hours, Tamanna, in that there is the BOJ meet that's happened. We've seen crude price spike, as a result of which some of these things are happening. And I was speaking to a portfolio manager today, wherein there is a large presence of hotel stocks in his portfolio as well, believing that we are still in the midst of that 5-6 year cycle that typically comes about in the hotel industry, because it's so cyclical. So the belief is that we are not at the end of it. So therefore ARRs, even if they don't go up further, might still stay at these levels for the next 12 to 18 months.
Do you recall when we had Vijay Kedia speaking with us earlier this week, and he said he's betting on tourism in a big way as one sector. I just want to pull up Lemon Tree as well. Lemon Tree had news this morning. They're debuting in Tripura, and relatively they've not had a bad day. I mean, everything is relative right now because this market is seeing that kind of a pain point, and one reckons it's going to continue till you have some clarity, at least from the Fed. All right, Smriti is joining us. She's got this exclusive story. Marriott International is likely to ink a pact with Prestige Estates for 6 hotels. Give us the details, Smriti.
Well, yes, that's the news coming in from the sources that Marriott is going to ink a pact with Prestige Estates. Now, this is for 6 hotels. To give you the location of these hotels, 3 of them are in Bangalore itself, 2 are in Goa, and 1 is in a place in Karnataka. It's called Sankleshpur Plantations, where the hotel is going to be made. Now, the cumulative inventory of these 6 hotels is around 801 keys. That means it will have 800 rooms cumulatively in the 6 hotels itself. Now, just to give you an idea of the capex that Prestige has been doing, it has a total capex for hospitality sector of about 1700 crores by the end of December, of which 883 crore capex is yet to be put into upcoming projects. So while it is not yet known what will be the capex into these 6 projects, but this might be this might increase their capex from 883 to even more. Now, within these 6 hotels, they are also going to, the Marriott is also going to debut with its one more brand that's called Autograph Collection. This will be in Goa, and this is going to be the first one in India itself. The other one is a Moxie Hotel. This, we have seen one open in Bengaluru, and they're going to open another one in Bengaluru as well under this pact.
Okay. Smriti, I also saw a news flash which said that there is an exclusive first in India or Asia autograph collection hotel coming in, by any chance?
Yes, that's, yeah, like I mentioned, this is going to be, this is a Marriott brand, and they're going to be debuting with this brand in India. This one is going to be in Goa.
Okay. Smriti, thanks so much for putting this into perspective and breaking this story. So, Prestige Estates on a given day, this could likely have caused a reaction. The markets being what they are not quite there, but interesting. The pace at which hotel brands are expanding, Tamanna. Marriott recently, there were 2 properties signed with Oberoi Realty, one for Thane and one for Bengaluru, one and Borivali. So MMR region, 2 properties signed. And now apparently they are on the throes of inking a pact for 6 more properties with Prestige, in addition to what they might be doing on their own individually as well. So expansions in the hotel space are happening at a real fast clip.
And 3 of those 6 in Bengaluru.
And 2 in Goa.
And 2 in Goa. I mean, one would think that there are enough hotels in Goa, but yeah.
But clearly not.
Clearly not. So look at the kind of peak that you're having there. So tourism definitely an interesting space to watch out for. Well, just a few minutes to go for markets close, and we've been covering so many stories, but the fact is that the big overarching theme right now is pre-polls, and we have this special show that editor-in-chief of the NDTV network, Sanjay Pugalia, did. He spoke on the battleground for Maharashtra. Remember, that's going to be a key state in the general elections, and he also spoke with Neelkant Mishra, Nilesh Shah, among others. Listen in.
सरकार जो कोशिश कर रही है पिछले कुछ वर्षों से कि
मैक्रो इकोनॉमिक स्टेबिलिटी पे फोकस करें कि आपको हमने बता दिया कि भाई देखिए ग्रोथ मोटा मोटी इतनी ही होगी, आपका इन्फ्लेशन जो है वो मोटा मोटी इतना ही होगा, इंटरेस्ट रेट इस तरफ से स्टेबल होगा, एक्सचेंज रेट इस तरह से स्टेबल होगा। तो अगर कोई पूंजीपति अगर निवेश करने को तैयार हो रहा है तो उसको अगर ये क्लियर हो जाए कि भाई अगले 4-5 साल तक ऐसे चलने वाला है, तो उसके इन्वेस्ट करने के चांसेस बढ़ जाते हैं। और जब 4 लोग इन्वेस्ट करते हैं तो 5 और लोग भी आ जाते हैं कि भाई इसके कारण ही इकोनॉमिक ग्रोथ हो जाएगी जब इतने लोग इन्वेस्ट करेंगे। तो मेरे हिसाब से अभी तक का, और आप देखें जो बजट में भी जब सरकार ने वित्तीय घाटा खुद से 5.1% कर दिया, जबकि पूरी मार्केट तैयार थी कि 5.4% हो, तो ये जो स्टेबिलिटी ओवर ग्रोथ का जो पर्पज़ है ये मेरे ख्याल से काफ़ी टाइमली भी है, क्योंकि अभी हमारी रियल एस्टेट मार्केट जो है वो अभी 10 साल के डाउनटर्न के बाद फाइनली उठनी शुरू हुई है। ये बहुत पावरफुल इकोनॉमिक फोर्स है। तो इससे जब घर बनने शुरू होते हैं तो फिर स्टील की डिमांड, सीमेंट की डिमांड, टाइल की डिमांड, लेबर की डिमांड सब बढ़नी शुरू होती है। तो मेरे हिसाब से इकोनॉमिक पर्सपेक्टिव से ग्रोथ की विजिबिलिटी अभी काफ़ी अच्छी है।
बिल्कुल नीलेश भाई, शेयर मार्केट बड़ा मिस्चीवियस है, उसको अगर कोई ठीक से पढ़े तो वो बता देता है कि उसको पहले क्या पता है। तो जिस प्रकार का इंडेक्स चल रहा है वो करीब करीब ये माने बैठा है कि अब की बार 400 पार। इज़ दैट राइट?
सो मार्केट कंटिन्यूटी ऑफ गवर्नमेंट और गवर्नेंस दोनों को काउंट कर रहा है। ये सिर्फ $5 ट्रिलियन की खेल नहीं है, ये अमृत काल में विकसित देश होने की खेल है। एंड हमने हमेशा देखा है कि आज़ादी के समय हम और जापान पर कैपिटा जीडीपी में इक्वल थे या पीछे थे वो हमसे। 1960 में साउथ कोरिया और हम एक दूसरे के आसपास थे। 80 में चाइना और हम एक दूसरे के आसपास थे। ये सब लोग हमें पीछे छोड़ के बहुत आगे चले गए। हमने 2 कदम उठाए, उन्होंने तो 2 किलोमीटर चल दिए। सो अब की बार मार्केट ये डिस्काउंट कर रहा है कि ये अमृत काल में भारत विकसित देश हो जाएगा और जो लोग हमें पीछे छोड़ के हमेशा चले जा रहे थे हम उनके साथ हो जाएंगे। और ये विश्वास इसलिए पैदा होता है कि 2014 में भारत जो 10वीं बड़ी अर्थव्यवस्था विश्व की आज 5वीं हो गया है और अगले 5 साल में तीसरी के ऊपर पहुंच जाएगा और अमृत काल के अंत तक हम दूसरे के साथ उसे नैरो कर देंगे। तो ये सिर्फ 5 ट्रिलियन का खेल नहीं है, ये विकसित देश होने का खेल है और मार्केट को विश्वास है कि सरकार और गवर्नेंस दोनों इसी दिशा में काम करते रहेंगे।
All right, some great voices there. Neeraj, how nice to hear Neelkant Mishra in his flawless Hindi.
Always
talking about Punjipatis. But interesting take there on what the market is looking for in terms of the election, and it's not just continuity, it's about that path to Viksit Bharat or developed India and how we're going to get there.
Yeah.
That's of course long term. In the short term, it's a bit of an ouch afternoon. Vaishali, what are your BTST ideas? How would you wrap this day?
Well, it's not going to be a BTST, but I'd rather go for an STBT.
Fair enough.
I think I'll go for a sell short strategy in Shriram Finance. So I'll just give the level soon. Just a moment. So, well, one is also Cipla that I would look at for a short sell strategy. So Cipla is right now currently at 1432. I would keep a stop loss of 1445 and look for a target of 1400 level. So Cipla is one of the sell short counters that I would look at. And the other one that I would look at is now even Havells. So Havells is also showing signs of weakness. So well, the stop loss would be around 1480 and the target would be around 1430.
Okay, so short sells for the moment from Vaishali on Cipla and Havells. Vaishali, thanks a lot for taking the time out and being with us on the show today. Really appreciate your time. 1.5 minutes left for the markets to shut shop and bring up the index intraday for you. Let's get the Nifty intraday here. 1.1%, so almost closing in or around the lowest point of the day. But if you can get the intraday chart of the Nifty, you'll see here, we're almost at the lowest point of the day for the Nifty. So no taking away the fact that it's an afternoon of pain and we are closing well below the supports that we've tested for the last 4 days, which is 21,900. in or around the point of largest open interest, which is 21,800. This is spot, of course, but I'm just laying it out. And frankly, the market breadth has looked adverse. The Nifty 50 heat map will show you that it has been a terrible day. Let's just wait and watch what happens, unfolds over the rest of the week. But just Nifty IT and Nifty FMCG out there, coupled with select names like BPCL, Cipla, etc., all of them under pressure. So despite the fact, Tamanna, that banks did reasonably okay, because otherwise you see banks underperforming and taking the index lower, we are closing at the lowest point of the day, courtesy IT.
Courtesy IT, courtesy all the Tata Group stocks. I mean, of course, you're seeing TCS there at a 4.5%, but if you pull up everything from the Tata Group, Tata Consumer, Tata Motors, there was negative news on JLR. JLR in UK is having to recall some of its vehicles, and across the segment of all Tata Group stocks, you will see that negativity coming in. Of course, the broader markets are hurting. Let's not even talk about Tata Investments. That's on some other loop of being punished by the market for that
as it
one
should.
Spark report. It's paying the price since the last several days. But even on the broader end, and just let's pull up what the mid cap, small cap, and all of those indices are doing. 1.5% down. Those cuts are continuing. I also just want to pull up the Nifty FMCG, and Nifty PSE. Two sets of stocks and counters which are hurting a bit. We've been focusing on IT and FMCG because of the big players there, Neeraj, and Tata Consumer, etc. Colgate-Palmolive was dragging out the Nifty FMCG. But the fact is that PSE stocks are continuing to hurt, and that pain point is going to continue. Let's pull up the components for the Nifty PSE just to get a clearer picture of what your biggest losers were. And yeah, it's all the OMCs, and that's crude prices playing out. You're already nudging in the last, I think, 3 or 4 sessions between $85 to $87 a barrel on Brent, and that's BPCL, HPCL, Indian Oil, all of them with the understanding that the Indian consumer is going to be protected right now at the cost of these companies before elections.
Yeah, and that's essentially the reason. You nailed it, Tamanna, completely. Just before we wrap up, if the BSE 500, very quickly, before we wrap up, just to show the top losers and the top gainers at both ends. So Tamanna was talking about Indiabulls Real Estate, but look at Amber, SIS, Intellect Design, CRISIL, and of course Tata Investment. On the gaining side, interesting. A hospital stock up there. Torrent Power continues to gain, 2 days on a trot now. Arguably the stock of the last 2 days.
What gives with 197? Paytm. It's nothing is improved, but at least the worst is over.
Yeah.
Perhaps that's what the take is as far as Paytm is concerned.
And this is on the UBS note when they say that Sapphire Foods is probably the best way to play the QSR theme. So up 4% for this one as well.
Swan Energy, not too bad for the last few sessions either.
Yeah.
So all in all, I would say a dismal close to the markets today. Nothing really on the anvil which will change dramatically, at least tomorrow. You'll still need a couple of days to see what the Fed outcome is. Market still digesting what BOJ means. So let's hope for a bit of reprieve tomorrow. But for now, from Neeraj, me and the entire team that put together India Market Close, thank you so much for joining us.
Co-presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Thanks for tuning into Talking Point. I am Neeraj Shah, and our guest today is Vikas Khemani, founder, Carnelian Asset Management and Advisors. Vikas, great having you as always. Thanks for taking the time out. Hope all is well.
Yes, hi Neeraj, good to see you. Always great to chat with you.
Thank you so much. The feeling is entirely mutual, Vikas, and would love to get your insights, Vikas, into some developments that have happened recently before we move to some of the fantastic newsletters that you guys have written. But BOJ has made a tweak, much anticipated, but the tweak has finally happened. We're on the cusp of another Fed policy as well. Central banking action, how crucial would this be in the near term, particularly the BOJ move which has already happened?
I think, there's no denial that, I mean, I haven't really sort of, tracked what's happening. But more importantly, I think if you see, the Fed has already indicated that there will be a cut over this course of this year. Couple of them, and interest rates are peaked out, and it's only a matter of time how it sort of comes down. And I think, we will have to see in that context. But see, as far as the Japanese rates are concerned, they have been in a very, very low trajectory from a very, very long period of time. So I won't read as much as the Japanese economy is recovering after a very long time. We've seen a lot of positivity around that. So, but I would say that globally speaking, my whole view is that US rates are coming down. It could be delayed. It could take time depending on a lot of data dependency and all. And that will determine a lot more global macro factors, because I think that's where a lot of rise had happened in the last couple of years. I wouldn't think that very, very big impact would come from Japanese interest rate movement. This is only a small tweak, so I don't think that will have a major impact per se. That's my view. Not that I'm a very big expert on the global macros.
You're being modest, Vikas, but here's my second question. Therefore, do you think a delayed Fed cut cycle would have a material impact on how flows or multiples behave? Or do you think that now, by virtue of the fact that the last 2 or 3 months, the data and the commentary has not been very dovish, that some of it is baked in?
If let's say, Fed kind of delays the interest rates cut, it could have some impact on that, because the emerging market flows are directly linked to the cut in this interest rate cycle. The good part is that the interest rates are peaked out. Other interesting part is that Indian currency is not expected to depreciate. To that extent, there is a kind of natural hedge available on that. So flows should start trickling in. I do believe that 24 calendar year could be a good year of flows. Having said that, any delay in the rate cut can have an impact on the flows.
Okay. Because now you've been constructive on the Indian growth story and the implications of it for markets for a while now. It's played out really well. The last few days, we've seen some bit of moderation in the risk appetite, particularly towards the mid caps and small caps, but even the larger areas. Now, my question to you is, while India growth is, let's assume the GDP growth stays as most people are predicting, as the RBI prediction of 7% as well, could equity markets deviate a little bit in this year of some bit of global policy uncertainty? We have our elections as well, and the fact that valuations are also nothing to scoff at.
Absolutely. I mean, it's very natural that when you have a year like 23, which was a stellar year across the board, especially mid and small caps, it's a very natural thing for it to consolidate and because you can't have these kind of year returns very, very often, right? But having said that, these are the kind of years of consolidation only are the years when you kind of construct your portfolio, because that is where you get good quality companies at a reasonable valuation. I have no doubt on that in my mind, right? So while I think from 24, you can keep your expectations low, but at the same time, this is also a great year to build your portfolio, is how I would see. There could be sideways movement, there could be some more correction. While when I'm saying this, I don't expect a deep correction in the market. I feel deep correction will come only if there's a unexpected, 3, 4, 5 sigma event, which you can't model for. But otherwise, the normal correction happens only because of two reasons: liquidity and leverage. And both right now are very well placed as far as the Indian markets are concerned. The leverage factor in the market itself is also very, very low. The margin funding book of collective market is very, small given the size of the market cap and all. So I think it is leverage which generally accelerates the market falls. So I don't see a major deep cut in the market. At best, I think probably and save and except for some big unexpected event, I think it will kind of trickle. It will kind of remain sideways. Consolidation, time correction might happen, and that's a good thing to happen in any bull run.
You might think that I invoke IT in almost every conversation that we do. Not that your view changes, because it shouldn't change quarter to quarter. But I'm inclined to ask this to you because of the deal that has happened in TCS and Tata Sons valuing TCS at a slightly lower level than the buyback price. One. Two, there are brokerage notes out which speak about the commentary that select IT companies have given at various investor forums, including the Citi note on Emphasis, when the company is saying that there is absolutely no change in the demand environment since the start of the quarter as well. Because for somebody who's wanting to put fresh money to work, is it a tad too early to bet on IT? I mean, for money that is already there, which is fine, but for somebody who's wanting to put fresh capital to work, are there better options than information technology currently?
Again, really, it really depends on your time horizon. Of course, there are better options than IT as well. So I'm not saying that there are no better options. I mean, probably pharma could be a very interesting one as compared to IT. Just if you look at the growth perspective and the change in the entire environment is happening, so you can always look for alternatives. I'm not saying that, but when you construct a portfolio, it's a balance of pretty much a lot of factors, and IT definitely offers a good hedge, and for as far as we are concerned, we've been very constructive on especially the mid and small cap ITs where the growth prospects are very high. We are very constructive on IT companies which are focused on ER&D space. We're very focused on companies which are more focused on the product space. So that is where I think the real growth lies. So IT, you can't look at with a broad brush. You have to, even while the sector is growing at a moderate growth, within that, there are many companies that are growing at 20% plus. And it is our job to identify those companies and kind of bet on that. And if one is able to find that, whether fresh capital or existing capital makes no difference, you can definitely put it, because IT continues to remain an interesting play even over the next 8-10 years. And IT will pivot. It's not that current IT form will keep on. I mean, IT today is very different what it was in Y2K time. So I think every time there's a transition in technology happens, there's a pivot which happens. Most IT companies do that. And today they are pivoting towards AI and related technology, apart from cloud digitization and cloud migration. So this sector will keep evolving. But I have no doubt in my mind that sector will be relevant. It will grow from here. It will continue to kind of deliver good value creation.
So sorry, I just heard you mention ERD. People also talk about enterprise businesses, which is a small subset, but doing well. And then there is the larger IT services chunk. So is IT services still in the fray, or are ER&D and enterprise solutions parts of tech a better aspect?
It's still in fray. I mean, IT services are not going anywhere. Within that, I think ER&D will be faster growing sort of part, right? So that's ultimately as an investor, what we are chasing. We are chasing basically growth and growth at a reasonable valuation, right? So wherever you find this, and especially in any sector, growth is what determines the outcome, right? So if you are able to get a reasonable valuation at a good growth, then I think sector by and large governance is not an issue. Most companies are good. So if you find a good business with a good traction in the growth, you go for it. And those are the kind of companies, especially ER&D as a space, is growing faster than the conventional IT services. And that's the reason most of the plays we have have a larger portion of that, which is driving both profitability and the growth. And conventional model also continues to do well. It's not that it's under big stress and it's not doing well. That also continues to do well. So ideally, where you get both combination or a accelerated in form of ER&D, you go for that.
Got it. Before we take that break, since you mentioned healthcare as being a sector that could have, a good run too, or I mean, not verbatim, but you said something like that, maybe better than IT are the prospects of healthcare. It's a wide bucket now, because what within this do you like the most? Because when you joined us in the opening week, you were of the view that CDMO, CRO seems to be set for multi-year growth. Is that the first amongst equals?
I'm more specifically meant for pharmaceuticals and all. I mean, of course, healthcare has a wider this thing, including hospitals and diagnostics and all. The pharma piece has reasonably good legs. It's come out of a long time of hiatus, and I think we are seeing demand environment in the US changing significantly. We are seeing CDMO and CRO getting a, in my opinion, decadal, shift from China plus one. Of course, right now, because of the biotech funding drying up, it's been a bit slow. But if I take a 5-10 year view, I think, just like how IT services grow, you will see CDMO and CRO places, companies will grow over the next 10, 15 years. And I won't be surprised if there are, many CDMO, CRO companies, which could be 2, 3 lakh crore market cap in times to come. And this will happen in front of our eyes. So, again, depends on your time horizon, portfolio allocation. It's a combination of all. But we remain very positive on pharma as a segment and CDMO, CRO as a subsegment of that.
Okay, because stay on. Viewers, we need to slip into a quick break. But remember, a few days, rather not remember, but a few days ago, 3-4 days ago, Team Carnelian, which is Vikas's firm, wrote a note saying Bharat Amritkal, the India story re-begins. We'll try and talk about that a little bit on the other side of this break. Stay tuned.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target, what's good for long term, when to buy, when to sell. How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
There are different types of stocks: large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Because the PSU move taken a bit of a breather. I wouldn't say it got derailed, but has certainly taken a bit of a breather. It was the toast of town until recently. How are you thinking about it?
Absolutely, just like how you see that, after every such a sharp run, last year was a stellar year for you, PSU. After such a sharp run, it is very natural for it to consolidate. And in case of some PSUs, I think probably a bit of an overstretch also happened. So, again, it is not PSU, you can't brush it to the broad basket, but there are PSUs where still there is a lot of value. Of course, some part of the deep undervaluation went away. Today, they are in a fair value zone. But I guess as the transition and transformation continues to happen, I think we will see more valuation re-rating happening. So I would say large part of the run is done, and now we will mostly track the earnings growth as Indian economy keeps growing. And also you have to look at sector specific. You really can't, because each PSU within a different sector will have a different lever for growth and delivery of returns. We've been very, very bullish and positive on PSU banks. We haven't sold any. We continue to remain invested because we think that will do well. Power sector, we've been quite bullish. We have continued to hold. So we haven't really sold anything because I think these kind of consolidation, correction, temporary things will come in every market cycle. And we would like to just continue to hold and play out the full story.
In some sense, is the market getting unduly worried about what's happening to oil marketing companies? Moat around the business looks okay, but yes, there has been some intervention and some uptick in crude prices, but the derating has been very significant.
To be honest, we haven't really bought any of the oil marketing. That's why I'm saying that you have to look at different sectors. We do where we think there's a good management control on the future, on the fate of the company, and there's sectoral tailwind. Unless we are convinced about these two, we won't buy. And specifically in the PSU segment, in any sector, any ownership matter, but especially in PSU segment, especially oil marketing company, that it's not been the CMD of oil marketing company doesn't control the outcome. There are lots of variables, so we have never kind of taken bet on that.
Got it. Because we are going to be talking at length about this on a separate show, but the headline of the article or a note that you've written recently is intriguing. The India story re-begins, Bharat Amrit Kal. What are you trying to say from an investing perspective here?
So Neeraj, I think, very often we get a question that, what is happening with the valuation, what is happening to the markets. So when you zoom in, you're worried about here and now short term. In this note, we're trying to say when you zoom out, your perspective can be very different on the Indian story. You can look at very, very different aspects. And if you are zooming out and seeing, let's say, next 10, 15, 20, 30, 25 years, your perspective about how to look at equity investing changes completely. And this is what we're trying to, kind of say here in this note. As you know that India is embarking on the journey to become developed country by 2047, which means that we will have almost 29 to 30 trillion dollar of GDP, which is between 7 to 8x from here. So what are the possibilities as it happens? Why we think it can happen? And in India, many changes have happened. And to give you an idea, today's corporate profitability at a country level is $150 billion. In 2001, it was $8 billion. And despite all kind of uncertainties in last 22 years, Indian corporate profitability has become 20x, right? Now, this corporate profitability will go from 150 billion to $1 trillion by 2035. It means our market cap will be between 18 to 20 trillion dollar. It means our Nifty will be anywhere in and around 1 lakh. Now, if this is the kind of journey you have next 10 to 12 years, then you don't really worry about what will happen next quarter. Not to say that, our job is to keep an eye open, but you don't really then try to say, oh, let me book a profit and come back and buy 5% cheaper. So if you look at this perspective of over next 10, 12 years, massive amount of wealth will get created, and you just focus yourself on participating in that without getting bogged down by the short-term intermittent noise which is there always in the market. And this is the perspective we are trying to build. Also, we are trying to say that what has changed in India? Why do you think it's possible this time around? India has always been a promising country, but that is where we are saying there are big mind shifts change have happened in India, and those mind shifts change are which are driving. Number one, which I always say that India as a country has moved from incremental mindset to exponential mindset. Today, we are executing everything at a rapid pace, as of yesterday kind of mindset. This is a very big change, very big departure from the past. Likewise, India doesn't operate from a constrained environment anymore. We're saying we have resources for everything and we don't act like a poor country anymore. Our mindset has changed from, big time on that. Like that, there are many 6, 7 tectonic shifts which have happened, which we think, will make sure India will reach to that, size and scale over next 20, 25 years. At least our conviction on that is very high as we analyze and that is very well articulated in the note in a very detailed manner, that what are the big departures from the past and what are these tectonic shifts and what will drive the future of the country. So we think that we are in a massive wealth creation cycle over next 10, 12 years, of course over 25 years, but the acceleration will be far more higher in next 10, 12 years. So that is one should look to capture rather than worrying about what will happen over next 3 months. So this is our whole perspective. What we are calling is in Bharat Amrit Kal period, what will happen.
And because just before we wrap up though, so 60 seconds left, but there are investing implications for this in a meaningful way. You launching a portfolio on this as well.
Yes, absolutely. And so one is that opportunity we are showing, and then how do we capture it? Around that, we have a fund called Bharat Amrit Kal Fund, which we are launching, and you will see that coming out soon. And so how do you capture this massive wealth creation opportunity ahead of us? And that is what we'll be talking about.
Okay, well, Vikas, let's get you on a show to talk about this, because our viewers can certainly benefit, even if they can't invest in your fund. If they can't, they'll certainly benefit from the conversation that happens around it. So looking forward to that, but thanks so much for joining in on Talking Point today, Vikas.
It will be my pleasure. Thank you very much.
Yep, the pleasure is ours. And viewers, that's all that the time we have for this edition of Talking Point. Thanks so much for tuning in.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable show.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment.
all you have to do
Is ask profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager. listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. Some make a career in a company, some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit.
Benchmarks close at over 1 month lows. All sectoral indices end in the red. Nifty IT, the top lagging sector, falls for third straight day in a row. The 16th Finance Commission chairperson Arvind Panagria backs electoral bonds, says late Finance Minister Arun Jaitley's argument was persuasive, adds that they are better than cash. Marriott International likely to sign a deal with Prestige Estates for 6 hotels with a cumulative inventory of 801 rooms, sources tell NDTV Profit. Paytm makes a desperate attempt to bring users back with the message "Bring friends back to Paytm UPI." Offers deals worth 4,000 rupees. The Supreme Court issues a contempt notice to Patanjali founder Baba Ramdev in the misleading ads case. Summons him and Acharya Balkrishna for the next hearing. Hello and welcome. You're watching The Reporter on NDTV Profit and I'm your host Pallavi Nahata. As always, the show aims to bring to you market headlines along with national and international news. But before we move on with the show, it's time to see how the markets have performed today. My colleague Neeraj Shah is joining us for a quick market wrap. Neeraj, over to you.
Not a good day for the markets, you have to say, but 1% lower for the Nifty, and Nifty IT was the principal culprit because banks didn't do as badly, but Nifty IT and Nifty FMCG were the principal culprits. 3% down for Nifty IT. Every single time this calendar year that IT's tried to bounce back, it's gotten sold into. That's the truth. Everything else is a story. Nifty FMCG 2% lower. The broader markets were also, about 1% lower, and which is why we had adverse market breadth today, nearly 1:3 in favor of the decline. So that's the true story. Now, bring up the heat map for the Nifty first, and you will see a lot of pain in IT. So TCS, there is Wipro, there is HCL Tech, there is Infosys. So IT corrected and FMCG corrected because there is a Britannia, there is a Tata Consumer, Nestle, and that put pressure on FMCG. To an extent, even Pharma, with Cipla and Dr. Reddy's being the principal losers in the session today. And oil marketing companies, naturally, because of crude moving up, have done poorly. I mean, hardly gainers like Bajaj Auto and Bajaj Finance, so not much to talk about there. Maybe the broader end of the spectrum had some gainers. So if you look at the BSE 500 list of gainers and losers, there were stocks like 197 Communication or Triveni Turbines, which did well. Torrent Power, 2 days on a trot, has been doing well. Sapphire Foods on this UBS note has done well. Select gains to KAI Industries, but the losses were magnified to PSUs. So of course, on this end, there is Indiabulls Real Estate, Amber, Gujarat Ambuja Exports, etc. But if you look at the stocks like BP, HP, IOC, and all marketing companies, they had a terrible outing today. and didn't look that great, especially with crude prices the way they are. Suffice to say that there might not be too much of near-term respite for some of these names as well. All three of them corrected quite viciously in the session today. Select chemicals did okay, the likes of Clean Science and a few others, and maybe, just maybe, some of those chemical stocks which have not done well for a really long time might be coming back into the fray. So that's a pocket to watch out for.
Late Arun Jaitley's argument on electoral bonds was persuasive. That's according to Arvind Panagaria, chairman of the 16th Finance Commission. Now, in an exclusive chat with us at NDTV Profit, while speaking about policy reforms post-Lok Sabha elections, he said that states must implement labour codes simultaneously. Listen in.
There is unfinished agenda of reforms which the new government will need to take up again. The obvious one that is there is the implementation of the 4 labor codes that had been passed in 2019, but for reasons that the states have not written, still not all states have written their rules and regulations, and these 4 codes need to be implemented in all states simultaneously. They have not been yet implemented. So that's something, a lot of progress has happened. Most of the states, I think, leaving aside probably 2 or 3, have done the rules and regulations. So that's one big reform really waiting to be implemented. And that's something which I hope the government, once it comes in, is able to implement right away. Then we have the privatization program, which is also part of the policy of the government, certainly the present government, privatization of public sector enterprises as well as privatization of banks. Now, on the former, the PSEs, the government already has a policy in place, where it makes a distinction between strategic sectors and non-strategic sectors. And a large number of enterprises in non-strategic sectors can easily be, under the policy, privatized. And so that's another area of action that is part of the policy, part of the program currently. And then we get into tougher areas which really are largely in the domain of the states. One very important one is the land. Land in the Indian cities, and particularly I'm talking urban land. Urban land in India has tended to be extremely expensive, and that obviously undermines particularly manufacturing, because manufacturing is what requires a lot more space. So a lot of kind of land-related reforms have to happen. Then agriculture, which again, the central government had tried the farm laws, and now certainly the central government cannot do it. Yeah. State governments will have to take lead in those. So these are some of the major areas that the government will have to take up once it comes back.
You spoke about states having to take forward the questions of land reforms and even labor codes to actually implement it. And now that your focus is a lot on states and state finances, this is something that you will be seeing even more closely. I want to understand the picture in terms of health of state economies. We always talk about GDP in the context of the central government, or fiscal deficit, frankly, in the context of central government. Everyone's very excited that we've been tight with our fiscal deficit targets. But as far as state finances are concerned, doesn't that continue to be a question of worry?
Sorry, a question of?
A question of concern, yes.
Well, I think, right, of concern, yes. Look, as we are coming, as still the process of coming out of COVID ongoing, we know that during COVID particularly, the deficits had gone up, both in the states and at the center, particularly for that year 2021. We all know that there was a major spike in deficits, and it had largely to do with the revenues, not enough revenues coming in. We were broadly, I think, pretty prudent in terms of expenditures, but because not enough revenues came in, there was a big spike, and that, of course, translated into accumulation of a larger amount of debt. So this is an issue which also falls to some degree in the domain of the Finance Commission. we will be looking at this. At this point, this is all I can say really. A year from now, perhaps I'll be in a better position to say, but right now for us, it's a subject of study, and then see, if we can assist in any way, both the state governments and the central government. Well, this is going back to the days when these bonds were introduced, and Mr. Arun Jaitley was the finance minister. And I generally found his argument reasonably persuasive, that look, on what previously existed, and we are back to that state now after the bonds have been withdrawn, meaning, further issuance of the bonds has been withdrawn. Bonds, therefore, to some degree was an improvement as far as I can see. Mr. Jaitley's arguments seem to make sense to me, that, look, absent the bonds, we go back to the cash. And the bonds were an attempt to solve that problem, that at least, this would persuade, this would encourage the corporations to report what they are donating. So to that extent, even though that is only half transparent, the bonds would reduce the role of black money. This will all be, any money that comes through the bonds is money that is accounted for. It appears on the accounts of the corporations who are making the donations, whereas, absent these bonds, when donations are made on cash, they are not on their accounts. They're not on anybody's accounts. So in this sense, I think it was an improvement, and we will therefore end up back to where we were before these bonds were introduced. Now, can this lead to a situation in which we get transparency on both sides, so that who donated to whom and how much? That will of course be ideal, but I think that still looks to me like for the time being, it's a bit of a distant possibility.
But moving on to stock-specific news, Paytm has now resorted to referrals for existing customers to bring others back. Pragati joins us with the details. Pragati, Paytm has seen its share of trouble in the past few months. What do these incentives look like?
Paytm is now resorting to new techniques like enticing customers while bringing referral programs on the board, and this primarily, as per our understanding, is being done because of the falling app downloads as per the data that we've collected. Now, the data that we've collected is from App Tweak, and if we see the data between 31st January and 15th March, because 31st January was a significant date when RBI clamped down on Paytm Payments Bank, and 15th March was the deadline for these curbs. So in this timeline, the app downloads show that Paytm has seen almost 59.3 lakh downloads, and PhonePe, Bheem and Google Pay are leading the share. So in this entire pack of apps, Paytm is one app with the least number of downloads. In fact, the data is there on our screen to show our viewers as well. Now, a lot of referral programs are being shown on Paytm app. For example, one of them being that the tagline called "Bring Friends Back to Paytm UPI" is constantly flashing on the app, and all these incentives include coupons and deals worth almost 4,000 rupees. So an interesting marketing thing from the Paytm's perspective has started, all in order to bring people back to use Paytm app.
Thank you so much for that, Pragati. Well, it remains to be seen how well the referral program by Paytm works for it. But moving on, India's foreign direct inflows have declined to $32 billion between April and December 2023. My colleague Saloni Kothari joins us to share more details about this report. Saloni, what more can you tell us about this report?
Right, Pallavi. So yes, FDI inflows have been declining, and this is surprising at the time when India has had a positive narrative in the global eyes, and also when India's share in the global trade has been rising. So it is very interesting to see how these FDI flows have been declining, at least from the last 1 year. The net FDI, which is the difference between inflows and outflows, has more than halved to $13 billion. This is in the last 4 quarters, including the 2022 numbers as well. Now, why is this happening? When we spoke to economists to understand that, most of the earnings has been coming from the reinvestment earnings, which means that many of the capital is getting reinvested instead of the economy trying to attract new investments from many of the global players. And also this is at the time when many of the private equity players, as we've seen the market boom, many of them have been exiting because of the investments that they made, and obviously strategically they might be maturing and they might be looking to withdraw it. So that way, if we see, many of the large block deals have happened, which has led to many global players leaving it through the FDI route, which has also led to the outflows number as well. If you talk about some of the key PE exits, we can see Coforge, Kotak Mahindra Bank, Sona, BLW, Mankind Pharma. Now, these are the companies in 2023. We saw large block deals in these companies, and through which many of the global private equity players had exited. Now, based on this, when we spoke to an economist to understand the outlook, Pranjal Bhandaria of HSBC, she told us that she expects, the FDI flows to double at least from the FY24 levels, and this can go back to the peak of $55 billion per year in a couple of years. And also, Kotak expects an opportunity of about $1.4 trillion over the next decade. So we'll have to watch out how the FDI flows actually, take place in the next few quarters.
And from what we've gathered from Saloni, the outlook is one that's looking up. But moving on, we understand from sources that Marriott International is likely to sign a deal with Prestige Estates for 6 hotels. Smriti Chaudhary, who's tracking the story, joins us with more. Smriti, what are you picking up?
Marriott International is likely to ink a pact with Prestige Estates to build and develop 6 hotels in India. Out of these 6 hotels, 3 will be in Bengaluru, 2 in Goa and 1 in Sankleshpur in Karnataka. Now, the cumulative inventory of these 6 hotels is 801 keys. So that means 801 rooms will be there in these 6 hotels itself. Now, out of these 6 hotels, 1 is the Autograph Collection. That will be the first one in South Asia itself, that they'll make a debut with this hotel in Goa, and this will be the first one in South Asia. There's also going to be a second Moxie hotel in Bengaluru itself. The first one opened in mid-January 2024 of itself as well. And just to give you a perspective on the capex side of it, Prestige Hospitality capex stood at 1,700 crores at the end of December 2023, out of which 883 crore capex was to be utilized for the upcoming projects. So it means that there's going to be even more capex above this 883 for these 6 hotels.
Thanks a lot for those details, Priti. With that, it's time to slip into a short break, but stay tuned. We have a lot more lined up on the other side.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? when to buy, when to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry.
Welcome back. You're watching The Reporter on NDTV Profit. Baba Ramdev and Acharya Balkrishna have been summoned by the Supreme Court to present themselves for the next hearing. My colleague Varun Gakar is joining us now to share more details about the report and what it means for Patanjali Ayurved's future. Varun, over to you.
Yeah, hi, thanks. So yeah, correctly said, the Supreme Court did come down heavily on Patanjali Ayurved and issued a contempt notice to its founder Baba Ramdev on Tuesday after the firm and its managing director Acharya Balakrishna failed to furnish a reply to the top court's contempt notice. The court has also ordered the presence of Ramdev and Balakrishna in the next hearing, and they both are expected to be physically present inside the court whenever the hearing comes up after 2 weeks. It must be noted that a contempt notice was issued against Acharya Balakrishna during the last hearing itself, and the whole not furnishing of this contempt notice has led to a notice being issued towards Ramdev as well. Now, this whole fiasco began when the top court issued a stern warning to Patanjali for downplaying the effects of modern medicine. Certain Patanjali's commercials tout how its medicines can cure a number of illnesses such as obesity, blood pressure related ailments and asthma, but while simultaneously disparaging modern medicine and allopathy. Now, the court had said that it would issue a hefty penalty for all those misleading advertisements that promised to cure these particular diseases. At the time, Patanjali had told the court that it would make sure going forward that no such casual statements are made to the media against the medicinal efficacy of a certain class of medicines. However, a day after the court's stern remarks, Patanjali came out with a media statement saying that it is not making any false propaganda and that it is even open to a death sentence if it is found making any misleading claims. So yeah, it remains to be seen what happens in the next hearing, which is going to come up after 2 weeks.
Moving on, as a part for the government's renewable energy push, FM Nirmala Sitharaman announced the launch of PM Surya Ghar free electricity scheme in the budget for the later fiscal. This scheme provides subsidy for installing rooftop solar panels for residents and using solar energy. My colleague Vikas joins us with more on this. Vikas?
The PM Surya Ghar Muft Bijli Yojana, which was started by Pradhan Mantri Narendra Modi on January 22nd, has generated keen interest in the minds of the households, and within 2 months, this has already got a registration of 1 crore from 1 crore households. And given the kind of interest it has generated, analysts predict that this is likely to be extended to almost 2 to 3 crore people once the installation for 1 crore residents happens. This is not just beneficial for residents, but residentials, even for discoms, who have been facing a lot of distribution-related losses in the last mile areas or densely populated areas. The savings that these discoms can make over there, they can sell it to the well-networked commercial and industrial customers, where they can even fetch better tariffs. So not just that, once this generation starts to happen, even at 2 kilowatt and 3 kilowatt, the total power that will be generated would be equivalent to around 20,000 to 30,000 megawatt. So this will require some kind of evacuation infrastructure that needs to be set up. And also, apart from smart meters, this will require net metering for grid connectivity. So apart from these issues, this has generated a lot of interest and it's likely to go a long distance in the course of time.
Thank you so much for that, Vikas. With that, it's now time to have a quick look at some global headlines. Japan's benchmark index ended above 40,000. This after the central bank raised interest rates for the first time in 17 years. The Bank of Japan exited negative interest rates after 8 years. Also, China's real estate agent Evergrande and its founder Hui Ka-yan have been ensnared in a $78 billion fraud scandal. Reports suggest that the firm falsely inflated revenue in the 2 years leading up to its failure. That's according to China's Securities Regulatory Commission. According to a filing by the developer on Monday, the main onshore unit, the Hengda Real Estate Group, boosted its 2019 income by about 214 billion yuan or $29.7 billion by recognizing sales in advance and another 350 billion yuan in the 2020 annual results. According to preliminary findings, the CSRC has fined Hu 47 million yuan for the falsified results and other alleged violations and banned him for life from capital markets activities. Moving on, Samarth by Hyundai in partnership with NDTV is a movement for equal rights for people with disabilities and strongly believes that people's disabilities do not define what they can or can't do. Today, we met an IAS officer who, despite clearing the tough UPSC exam, in her very first attempt was refused posting because she has scoliosis, a spine-related disorder which disrupts her arm movement. This is the inspiring story of Ira Singhal.
Something called a hyperscoliosis. All of us have a straight backbone. Well, not all of us, but yeah. You're supposed to have a straight backbone, but in my case, it's in an S form. My peers specifically were not comfortable with a girl who looked like me and decided to be their equal. Despite clearing the exam, there was no service willing to accept me, simply because even though I could fill the ability criteria for most of the jobs, I didn't fill the disability criteria. So I decided to fight that lawsuit. Maybe this is how I'm supposed to make a difference. I've been very lucky that I've kind of been in roles where I've been a part of a lot of policy changes. You're the only person who has lived in your shoes. Don't let the world define who you are. I am Summer.
That's all the time we have for you on this edition of The Reporter, but stay tuned to NDTV Profit for more news and updates.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid-cap stocks and small-cap stocks.
How to decide which is the one for you? First, decide your risk.
Don't listen to anyone and everyone.
When it comes to your hard-earned money.
Join us as we put the spotlight on 6 stocks.
On your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager. Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Welcome to this exclusive interview, first only on NDTV Profit, with Arvind Panagria, since he has become the chairperson of the 16th Finance Commission. Now, of course, Mr. Panagria was the first VC of the Niti Aayog, a Columbia professor of economy, and now